shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When others are warming up, I'm raring to go. The stories that matter, the stories that shape your life.
Hello and welcome to watching Prime 5 with me, Raisha Sehgal. What's happening? How to
The show that sets the prime time agenda.
We'll be deep diving into this topic to tell you what's at stake.
Join me, Raisha Sehgal, on Prime 5, only on NDTV 24/7.
Will the rising sun win with a hand in hand? Will the two leaves and lotus bloom? Who will whistle to success in Tamil Nadu? To understand the Tamil Nadu twist, join me in the midst of our politics and people. Vanakkam Tamil Nadu, here we come.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
New year. New power panel. India market open. Now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. You're watching live from the NDTV Profit headquarters in Mumbai. This is India Market Open with Tamanna, Alex and Neeraj.
Good morning, you're watching India Market Open. It's a new week, there's a new deadline, and let's see if things change. Good morning, folks.
Good morning. Welcome back.
It's been interesting. I was just looking at since I went on this break, what happened to the markets. 400 points shaved off the Nifty. Some days when things look like they were going to get better, many days which they won't. But frankly, nothing's really changed. We're still hoping for the war to get over. Lots of bold statements on...
bold statements, is that what we're calling it? Because, you know, I was thinking about this yesterday as soon as I saw it. In 2026, there are very few things that you can say you've never seen before.
Yeah.
And yesterday, that was one of them.
A sitting head of state, a president using expletives on post. Wow, that's a new one.
Yeah, it was a new one. But frankly, in 2 weeks, if you had asked me that it'll only be 400 points shaved on the Nifty, will it be a good outcome? I would say yes.
All things considered.
All things considered.
Hey, look
Let's
at 4
see if it
weeks
worsens.
though. It's a little worse picture, right? If you
No,
look at
no,
4 weeks.
today, no, the context was that,
since
I was back. Yeah, that and I think the whole creativity of memes around the war has just been very... just how dramatic things have been. And what really struck me is the details of this 48-hour rescue of this US pilot. I mean, I can see spin-offs and shows already being written.
Top Gun 3.
As we speak. Mission
3
Impossible.
or 4,
Mission Impossible 500 or whatever it is.
Both have Tom Cruise.
Yeah. The casting's in place as well. The fact that there was a drone manning and, you know, watching this pilot for 2 days and taking off anyone who came 3 kilometers near him. I mean, some of those details are astonishing.
Astonishing, yeah. One just wishes, though, that this wouldn't have had to be in the first place. But this morning is looking slightly ominous with oil prices rising, etc. So, brace for impact.
Yeah, brace for impact, definitely. But I don't know. I mean, this a press conference which is going to take place today. I think 10:30 p.m. IST. That will be important to see as well. Trump is going to be doing that with the military chiefs in force. I mean, one could hazard a guess, maybe the 3 rescued pilots also make an appearance at this conference. The fact that US had to blow up so many of its own planes to rescue him so that they don't fall into Iranian hands is also quite dramatic. So here's what's been happening. US President Trump has announced the successful rescue of a missing crew member from a downed F-15 fighter jet on Sunday. He described the operation as a daring search and rescue mission made possible after the deployment of the US military, etc. So some very dramatic details here. Other developments that have been taking place. A fresh deadline has been set on the Iran deal, signaling urgency. Actually, I don't know, you're talking about ominous. I think it'll be a bit of a relief that the deadline has been shifted from April 6th to April 7th. Remember, the 48-hour deadline actually ended April 6th. Now, Trump says the new deadline is April 7th, 1 p.m. Many deadlines have been set before as well. But just the fact that it's
Is it
now,
still a goalpost anymore?
No, it's now that it's a shifting line in the sand, that means that that idea that once that deadline ends, something dramatic will happen, that fear might be receding. That's, I mean, really the only point there. So these negotiations will continue. Trump has also claimed in various reports and news media interviews on the phone that Iran deal may be reached soon, hinting at a breakthrough ahead of a key press conference scheduled for 1 p.m. EST. That's about 10:30 p.m. tonight, India time. Iran, meanwhile, has claimed a strike on Israel-linked vessels near UAE waters. There's no independent confirmation yet, amplifying the maritime risk in the Strait of Hormuz. Meanwhile, Iran's foreign minister has spoken with India's S. Jaishankar, his counterpart, focusing on maritime security as well. In terms of global cues, I mean, if you look at US markets ended on Thursday, remember it was a Good Friday weekend, it was pretty mixed. Expectedly, I mean, any kind of market holidays right now make it very, very difficult for investors to figure out what's happening in the middle of fast-paced movements across the world. So futures is possibly a better indicator of how markets are looking at all of the developments, and those are mixed as well. Bond yields rose slightly as uncertainty over the war continues. The 10-year was last at 4.34%. Remember, initial jobless claims also came in for the week ending March 28th at 202,000, little over 2 lakh. It's below the Dow Jones forecast for 212,000. The employment rate in March in the United States was at 4.3%, slightly under estimates. and the US March non-farm payroll rose 178,000, more than estimate. Oil prices, meanwhile, continue to zoom as Trump's deadline to open the Strait of Hormuz has been extended. The Brent at 110 right now. On Sunday, OPEC plus countries said they will increase production by 200 odd barrels, so that can give some relief. The question is, where do all of those barrels go if the Strait of Hormuz is shut? Asian markets, most of them are shut. Many countries are taking, an Easter Sunday holiday today, but for those who are open, it's a bit of a mixed bag as well. Dr. Edward Yardeni joining us this morning to break things down. He's President, Yardeni Research. Dr. Yardeni, thank you so much for speaking with us. Always a pleasure to have you on.
Thank you.
Are you putting much weight behind the statement from US President Trump that there may be an Iran deal soon, or is this a story we've heard just too many times by now?
Well, it's a story we've heard too many times, so it's hard to say exactly where it's going to go. The president has been indicating for several days, a few weeks actually, that there's negotiations going on, and the Iranians have said that there are no negotiations going on. And then I think, this line in the sand where he's threatening to obliterate their electrical power system at 8 p.m. New York time on Tuesday, he's backed off on some of these things as well and changed his mind. But look, I think this is getting close to an end of one way or the other. And I think the stock market's anticipating that. I think the stock market in the U.S. might have bottomed Monday a week ago on the perception that Trump wants us to end one way or the other. It's either going to be the Iranians cave in, or he's going to declare victory and walk away and leave it to others to open up the strait.
Dr. Yardeni, good morning. And so therefore, from that perspective, other countries coming together, and that's the geopolitics of it, right? It becomes the responsibility of other countries, and the UK has led this so-called coalition, but we don't know where things will go from this point, whether a toll will be demanded and whether the future would have to account for a higher crude oil price. And so is that in your own calculations? Are you accounting for 80, 90 plus for the foreseeable future?
Well, I think that's a reasonable forecast for now, but I wouldn't underestimate the possibility that a lot of nations around the world are going to get very, very upset if there isn't free navigation through the Strait of Hormuz. It would be a terrible precedent, because there's other choke points in the world that could also create a problem for free navigation. So I think there's going to be a lot of pressure brought on Iran to back off on taking over the Strait of Hormuz. Maybe they'll get some sort of fallback position where they at least have to be informed of who's coming through there. But other than that, I can't see that the world is going to let Iran strangle or have a stranglehold on the world's energy supply.
Dr. Yardeni, if indeed not just Hormuz, but as Iran is threatening multiple other straits on which they could have some control over or disrupt oil supplies, and if oil were to spike higher, 120 beyond, etc., and stuff like that, is it a further risk for equity markets worldwide, or are they, you reckon, pricing in some of these scenarios already? India, for example.
Well, there are certainly some scenarios that would be disastrous for the world economy, and the markets right now just aren't factoring in those as very likely to happen. Instead, I think the perception is that worst case scenarios are so bad that they're not likely to occur. But then again, the Middle East has been a very violent and volatile place since at least the times of when the Bible was written. And so it's, I think we do have to consider the possibility that things will just escalate in a very dangerous way. That's not the most likely scenario, but it's certainly something we need to consider.
Well, Dr. Yardeni, in the US, you have the latest statement by Jerome Powell the outgoing Fed chair, talking about zero net job creation in the private sector. And I'm wondering what you think about the state of the economy at this point, with yields also having spiked to where they are right now.
Right.
Are we looking at the possibility towards the end of a year for major slowdown, if not a recession in the US?
Well, all of the data we have pre-war, so that would be basically January and February, suggests that the economy's actually done relatively well. There was some weakness overall in the growth rate of GDP in the fourth and the first quarters of last year and this year. However, we had some really, really bad weather in December, January, and February. So I actually expect to see some pickup in economic activity in March. And as for the job market, the weekly initial unemployment claims, which is a very good indicator of what's going on there, shows no layoffs. And meanwhile, the duration of unemployment seems to be coming down. So I think the surprise is going to be the resilience of the U.S. economy. It's been a surprise for a while here, right? I mean, since the pandemic, there have been a number of stress tests of the U.S. economy, and it's passed all the tests. And I think it'll pass this one as well.
All right. Let's all hope that that's the case for the rest of the world as well. Thanks so much, Dr. Yardeni, for taking the time.
You're very welcome.
All right, let's talk about what happened in trade last week. Actually, zoom out and take a look at the overall picture, right? Take a look at this table that I put together. You have cuts of about 1.7% for the benchmark Nifty 50. Nifty Bank underperforming, dropping as much as 3.5%. Mid-cap index losing 2%. Very interestingly, the small cap index only losing about 0.5% or so, and the IT index was a standout, gaining as much as 4.25% in that time frame, and the Nifty Pharma losing about 2.3% or thereabouts. So the thing is, it's another week ended in the red for the Indian equity markets, for a sixth straight week, in fact. And you have, over the last 1 month, the Nifty 50 losing over 10%, close to 11%, in fact, and the Nifty Bank losing about 16%. The broader markets, the mid-cap index losing about 9% over a month, and the small-cap index about 7%. But remember, even in the run-up to the last month, you've had an underperformance by the broader market. So the frontline stocks being sold into over the course of this geopolitical crisis that we witnessed. Now, over the last week, you've had the Nifty Bank underperform slightly, and IT's gains were mainly on Thursday, on the last day of the trading week. Remember, it was just 3 days of trade, and frontline IT companies stood out as winners. On the other end of the spectrum, you had, among the F&O losers, EMS players that stood out as the biggest losers. PGEL as well as Amber Enterprises, Dixon lost 3.6 to 5.3%, and several of these companies are now facing pressure on account of the perceived impact of supply chains getting dramatically disrupted. And it's not just oil that you're talking about, right? It's helium, it's various other factors, and fertilizer companies will also likely be in focus on account of that.
Yeah, and hence this belief that now seems to come in that in some quarters that there is no urgent need to deploy, because the bounce, if any, as well, will not be like the past cycles. And because this cycle is different, hopefully at some point of time in the show, we'll kind of talk about that as well. In fact, Mihir Vora made a very interesting point on that on Editor's Cut, our brand new show on Thursday as well. You might want to check that. So my belief is that there is no urgent need to deploy. Kind of maintained this for the past maybe 30 days. Touchwood, we hope that there is an urgent need to deploy coming very soon, but it looks like it might be difficult for the time being. The good part about at least this morning is that one of the largest weightages on the indices, which is the banking space, has delivered, well, siren numbers, literally solid numbers with double-digit growth across business, deposits, and advances, and that is across the board, by the way, double digit. In some cases, it's much higher double digits as well. I think Tamanna is going to speak about RBL Bank, for example. Splendid numbers, some of those, right? Credit demand, therefore, may stay strong and augurs well for the future. And I wonder, viewers, that if indeed companies have a crunch of working capital, which means the businesses will have to borrow at higher costs, it's not a good thing, but it's great for banking earnings. And therefore, banking seems to be that bucket which is in a good space right now. And that in some sense is a bit of an antidote because that's still northwards of 30% of weightage of our markets. BFSI, I mean, even include NBFCs here, banking by itself might be about 23-24% or thereabouts. So that's not a bad space for the markets to be in, which is actually a good thing. The bad thing is that this continuation of conflict as things stand right now, and yes, there are some relaxations, if you will, but broadly there seems to be a continuity of conflict, and that means that OMCs continue to be a short trade. On last count, guys, I saw crude at probably Brent, or rather WTI scaling back to 110 from that 115, 116 number, but it still seems that OMCs don't have a good day in the sun, and that is not a positive.
Yeah, I think a lot will hinge on the news flow. For example, Reuters picking up an Axios report a few minutes ago saying that US and Iran are pushing for a 45-day ceasefire. Now, if this is actually happening, it's big. But then again, the problem is that there is such a fog of war right now that you need some kind of a solid announcement from a quarter that can be trusted for this to happen. Having said that, I haven't heard about a ceasefire from both sides so far.
In fact, the WSJ just 12 hours ago reported that Iran has rejected the talks of that ceasefire as well, which was the earlier one.
Yeah.
Now, I don't know if there's a new development.
You don't know.
But such a good point you made, Tamanna. Trust. How can you trust what is coming out from either sides right now?
Yeah.
Exactly.
There is no party that can stand as a strong mediator, because you are either on one side of the fence or the other.
No, even the Iranian side, it's not clear from where the voices are coming. You have different kind of voices coming in. So there's a lot of lack of clarity. I think one of the points that you made about crude is important, because in the middle of all of this, if you really want to understand what's happening, then just track crude. Because that's clear, there's black and white. I think those are one of the things that will be a big factor today as well, because after 6 consecutive weeks of declines, 6 weeks of declines, the benchmark indices have now touched critical support levels and staged a minor recovery. However, the outlook remains fragile as FPIs continue their aggressive selling streak. Price action in April will likely dictate whether the market enters a prolonged consolidation phase or suffers a deeper breakdown. Index is currently hovering just above its line in the sand. The bull case is that Nifty climbs above 23,000. It could trigger a relief rally towards 23,500 to 23,900. Reclaiming 24,000 is the prerequisite for returning to the long-term target of 26,000 plus. The bear case is a failure to hold 22,200 would be a major warning sign. Dropping below 21,700 could accelerate the fall towards 21,000. Interestingly, the mid-cap and small-cap segments are showing slightly better structural strength compared to the heavyweights. For the Bank Nifty, the sector has been more volatile, briefly dipping below the 50,000 mark last week. Crucial resistance 52,200. Breaking this could propel the index to 54,000. Crucial support 49,900. If this floor gives way, the next step is likely 48,300 to 48,500 zone. Having said that, all technicals, while those factors are there, depend largely on what happens next in the war. So that's the base scenario in every case. In fact, Sharad joining us this morning to take us through the F&O cues as well. Good morning, Sharad.
Good morning, Tamanna. And you're right, last trading session's highs might be a short-term resistance levels for both Nifty and Nifty Bank. But as the geopolitical tensions are rising and we see the Asian markets also opened mixed, and we see at around 7:30 there was around 140 point cut, and now there's a recovery happening and we are just near that flattish levels, but expect a very range bound movement until something bigger comes in the geopolitical front. Let's see how FIs have moved up, almost 23 straight sessions of selling in cash markets, and look at the big sell-off. That's almost 10,000 crore of sell-off happening in the last trading session as well, but DIs have been absorbing really strong, and even the cash levels, if you look at it, they are also reducing as well. Net, there's a minor FI short covering happening. Nothing much to actually understand from this data. It's around 84, 85 for the last 4-5 trading sessions. Little bit of action coming in the put space around 22,500. That's where the contract action is building up. But the major call contracts are building up at 23,200 and 23,000 levels as well. And of course, the positions which were undertaken over the long weekend were on the lower side. So we can see some new contracts also coming in as well. But let's look at the open interest gainers, what happened in last trading session. Largely, the retail companies are coming out with a strong operational update. We should be looking at Vishal, Mega Mart as well. And AMC stocks brokerages are bullish as well. So you should be looking at Nippon Life and other AMC stocks as well. Apart from that, on the losers front, there might be volatility coming in, but the large caps is something where there might be a little bit of margin of safety. So keep an eye on SBI and Ultratech as well. Of course, long unwinding and short covering happened in these positions. But of course, the Q4 updates and the interest rate sensitive stocks would be in focus in the F&O market with the RBI MPC meet on Wednesday.
Yep, the outcome will be on Wednesday. The meet actually starts today. And while a pause is largely expected, one will have to watch carefully what the RBI says about the war-like situation, about the rupee. Is there going to be any defense of the rupee? So all of those factors become important. But yeah, I agree with Sharat. I think financials will be in focus, and that's one of the first stocks on my watch list. I'm starting with RBL Bank. The company's March updates showed a total deposit growth of 25% year-on-year to 1.4 lakh crore. Gross advances rose 22% to 1.2 lakh crore, and CASA ratio improved to 33.6%. That's the current account saving account ratio. Here's what Citi says on RBL Bank. They've maintained a buy with a target price of 390 rupees per share. They're saying business accelerations have gained shape. Retail advances led by surge in secured retail. Focus granular deposits lift the CASA ratio. RBL Bank will now be governed by a foreign bank norms by RBI, and of course Emirates NBD will be classified as a promoter. That exchange filing has also come, something that we broke here on NDTV Profit a few days ago as well, that classification, that green light has now come from the Reserve Bank of India. So that's going to be one in focus because of decent updates. Bank of Baroda, likewise, March business updates were decent. Global deposits up 12% at 16.5 lakh crore rupees. Global advances up 16.2% at 14.3 lakh crore rupees. Domestic deposits up 13% nearly at 14 lakh crore rupees. Citi has maintained a buy with a target price of 360 rupees per share. They're saying stronger sequential advances growth of more than 6% has beaten estimates. Overseas advances have remained resilient despite geopolitical tensions. Q4 earnings should benefit from higher recoveries from written off accounts. Income tax refunds should support lower effective tax rate as well. Third one on my radar is Sun Pharma. So there's going to be a bit of a hiccup for the stock because of an announcement from the US. US President Trump has signed a 100% tariff on patented drugs, which will be applicable if companies don't reach a deal with the administration. Companies that have signed a most favored nation pricing deal and are actively building facilities in the US to onshore production of patented pharmaceuticals and the ingredients will have 0%. Now, this is something that they have said they will do, and now they've gone ahead and done it. What is the impact? Not so much for other Indian pharma companies. Sun Pharma stands out. Jeffrey explains why. They're saying it's the most exposed company to tariffs. Innovative products account for 20% of revenue. Key innovative products of Sun Pharma are manufactured in South Korea, EU, or within the USA. EU have negotiated 15% tariffs with USA. Max tariffs capped on Sun Pharma's innovative product will be 15%. And of course, Illumia, this one blockbuster product of theirs, is what is very vulnerable to this new tariff regime. So those are the top three, but there's a lot of updates that came over the last 3 days because of the long weekend, I suppose.
Absolutely. And I want to talk about Tata Motors, and it's had a tough time of it over the course of the last several months. And this is reflected in the numbers for Jaguar Land Rover in the last quarter, and that came over the weekend. It's a weak operational performance. The wholesale retail sales have risen. Wholesale and retail sales have actually risen after the cybersecurity incidents, but you still have a degrowth for the quarter as a whole. In fact, you had retail sales in Q4 that were down as much as 14.3% compared with the year ago period, and 16.2% improvement versus Q3. So on a sequential basis, there's an improvement. Wholesale sales on a year-on-year basis are down as much as 14.5%. So it's not a very pretty picture. There are several factors that have been playing out, and the full year volumes are impacted by, first of all, US tariffs. There was an issue in China with regard to that market and the demand there. You had a planned wind down of the legacy Jaguar models. Remember, they are not producing Jaguar models for a while. In fact, they're shifting to EV for Jaguar, and the production stoppage is the most recent event on account of the cyber incident that reflected in the Q4 numbers. And beyond that, now the war disruption. They're currently, or as of yesterday or last week, they were under shutdown on account of that. So bear in mind that the stock has gotten impacted on account of that. So watch out for this one at the start of trade today. GR Infra Projects should be in focus on account of pretty chunky order that it has gotten, and this is a number of orders that it has gotten in the recent past. So this is an EPC contract for the construction of a new railway line. That contract includes earthwork, bridge construction and other infrastructure related to that railway line. The bid project cost is standing at just under 1,900 crore rupees, and the project is set to be completed in 900 days from the appointment date. And finally, Senco Gold, another interesting update coming through. The Q4 revenue growth estimated a 46% growth. And that's quite sizable, but also bear in mind, of course, that gold prices did go up in the fourth quarter. They fell in this quarter, or rather they have fallen in the last month of the quarter. The growth was led by wedding season demand, according to Senco, and they've also seen a same-store sales growth of as much as 34%. They launched 7 new showrooms, taking the total to over 200, and gold prices were up as much as 20% sequentially in Q4. So that explains quite a chunk of that value-led growth. A lot of jewelry companies are witnessing this, remember that. They aim to maintain 20 to 25% value growth in Q1, and they aim to maintain their EBITDA margins at 7.5 to 7.8% as well. So accounting for that increase in gold prices, if you look at it year on year, it's even more sizable. So it is a value-led growth, but it's still sizable.
It is sizable indeed. Yep. Let's see. I think it'll be interesting to see what all of these jewelry companies do. It'll be really interesting to see what of the retail firms do as well, because Avenue Supermarts, the business update was solid. Now remember, just the first point to note for anybody, Avenue Supermarts in the last 6 sessions has gained about 19-20% because their store addition update was very, very strong. So in some sense, the stock has already had a really good rally in the last 6 short sessions, about 19-20%. But the business update as it stands, revenues up 19% at 17,205 crores. Why is this important? Mildly so, but important because, you know, the last 2 or 3 year compounded annual growth rate for Avenue Supermarts is about 17.5%. This is 19%, and therefore you just feel that, okay, is it now turning a corner? Is it making aggressive store expansions? Has it gotten the aggression back of growth? And will this now break out of that 4-year range or the cap that it has been in? Remains to be seen. The total number of stores added stand at about 500, which is also very, very strong. 58 stores in Q4, 85 stores in FY26. All these things are well. The caveat, it has rallied a bit, so keep that in the back of your mind. Bajaj Housing Finance, decent Q4 business update as well. Gross disbursements up 23%, AUM up 23%, loan assets up 24% at 1.2 lakh crores. It's not just affordable housing. I think housing by and large seems to have had a good quarter. Let's see if it continues, but Bajaj Housing Finance definitely ticking the right boxes. Remember, the stock relative to the IPO price and the listing price too has come off quite substantially. I mean, pull up the last 1 year chart for Bajaj Housing and you will see that it's actually had a really sharp corrective move post listing. So, well, maybe just maybe the valuations are also not in favor. Keep that in mind.
Not in favor.
Not in favor. I mean, it's difficult to say that valuations are in favor these days because you don't know what is in favor.
I was trying to do some mental math. Minus plus.
Double negative.
See, I'm not Parag Thakur who says table thumping, so I'm staying away.
You do a table tapping.
Table tapping. In HDFC Bank, guys, the big boy delivered, right?
Yeah.
I mean, strong deposit growth, about 14% YOY growth. Steady advances as well, about 12% YOY, 4% quarter on quarter in line as well. And the CD ratio quarter on quarter coming off 95.3. I mean, broadly, I think pretty good numbers by the banking space by and large. I can't beat, and HDFC Bank can't beat RBL, but for the size that it has,
Yeah.
The size is very different.
But the problem is HDFC Bank doesn't have a performance issue. It has a perception issue currently.
Yeah.
So one can't really say whether the numbers will translate into stock action. Just quickly want to talk about Trent. Because it came in just a few minutes ago. The updates for this quarter are pretty strong actually. The new store additions are good. Standalone revenue has grown 20% and revenue from sale of merchandise has grown 21%, and the store revenue has also been good. Better compared to the last 2 quarters. So watch out for Trent. You know, while everything is gloom and doom outside, the way large local businesses are doing should give some relief to the market. Very short break. We're coming back with top strategies for the morning for you on the other side. Quick look at the implied before we get into that break. Quite placid, so don't expect anything too negative today. So it's showing about 50 points down now. We'll be back in a jiffy.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When others are warming up, I'm raring to go. The stories that matter, the stories that shape your life.
Hello and welcome to watching Prime 5 Weekly Ratio.
Back with India Market Open right here on NDTV Profit. Pull up the implied open. And yes, you know, the Asian markets have been mixed. Keep that in mind. But in our case, the good part is that after an hour and a half ago, it is looking, if not ominous, certainly a lot worse than this. It is now looking a lot better. But let's see if it indeed opens about 50-60 points, or could there be more in store? The question really is that a call to action that we are not opening as low? Kush Bora and Parag Thakkar join in with their sense. Gentlemen, both of you, thanks so much for joining in. New week, is there a new call? That's the key question, right? So, Kush, let's start with you. And I wonder if you believe that after a 3-day gap and all that's happened, are charts indicating some bit of bottoming out, lesser bad reaction to bad news, and therefore a call to buy, or would you bide your time?
So first up, a very good morning. And secondly, I have been maintaining that bottoming out is already in process for the last 4 or 5 sessions at least. But when you mentioned that, today's looking better and, we are off the lows that the GIFT Nifty was indicating, why do you think that is?
Tamanna is back.
We have a full table.
Oh.
Tamanna is.
I have to tell you, no one was as upset that I am on leave as Kush Bora. Every 3 days, he's like, "You're still on holiday. You're still on such a long one." Like, my God, most upset.
मैं चाह रहा था कि जल्दी वापस आ जाए तो रिकवरी भी जल्दी आए देखो.
He's like, ऐसे कैसे हो सकता है?
I didn't know you were allowed such a long leave in the media industry, by the way.
Thanks, Kush, in case nobody noticed.
No, but it's so good to have you back. I hope you had a great, break and smiles on the table and in the market as well. So just to, take on the point that I was having discussing with Neeraj, recovery to already underway hai. I have maintained this. Don't look at the Nifty levels. Don't look at the stock prices. Look at the internals. And speaking of internals, right? Positive divergences galore. In fact, let me also add this. I have a short call today. I was looking for a few short calls, but even within those, you're starting to see positive divergences, which is when you see this kind of, an internal across stocks in the market. Not to say that the bottom's in place and everything, one news flow here and there and things could turn, but at least the data right now is suggesting that yes, there are buying interest at lower levels. So positive divergences. FII longs, by the way, they've gone on the index, they've gone from 13-14% to about 17% now. Rupee strengthening. So a lot of these factors are falling in place. Still too much volatility on the index to suggest a heavy leveraged long position, right? But if you're a brave trader, then of course, with the recent lows as stop loss, you could consider, a long trade. But I would focus more on indices. By the way, on the Nifty, the breakout level, since the war started, Nifty's been in a downward sloping channel, a very steep one at that. The breakout level comes above 23,000. So once you cross that, you could see some further uptick. By the way, on the bank Nifty, that comes much closer, which is 52,000. So above 52,000, I wouldn't say the trend could change, but at least there could be some positive push on the bank Nifty. So remain constructive, but I would prefer stock-specific action more than the index.
Speaking of stock-specific action, therefore, what are the weekly picks?
The weekly, for now, just sticking with one of those, but I still got a mix of 2 longs and 1 short just to hedge with whatever's happening. So Inox India, what an amazing setup, at least on the weekly front. If you see the past 6 weeks, it's closed in the green on a weekly basis. It's closed for, in the positive for the 5 weeks out of the last 6. Positive, considering whatever's happening, you would have taken that as, you would take that as a positive surprise. So yes, there is a lot of institutional interest also in this stock. So I remain constructive. You could get into this from a positional standpoint. 1300, 1360, these are your targets. 1180 is where you keep that stop loss. KSB, by the way, is a stock that we discussed on Thursday. Volatility mein stop loss trigger hua tha, but splendid recovery. So we continue that as a call for target of 872 and up the stop loss to 820. And a short call on an FMCG name, Patanjali, for targets of 465 and 460, stop loss at 474.
Okay, before we get to Alex for all of the top stocks this morning, Parag bhai, very good morning to you. Do you think that the banking updates that we've seen are giving some faith that even as winds of war, it's so gloomy, at least in this quarter, banks are doing a decent job?
So basically, as I have always maintained, right, I have always maintained that banks were doing well. January, February, March, whatever channel checks I was doing, I was getting that sense always. See, HDFC Bank to bring CD ratio down to 95.3% from 98% with a deposit growth of 14% YOY, QOQ 8%. Axis Bank loan book growth of 18% and 6.3% QOQ, 18% YOY. RBL, splendid performance, 16% QOQ deposit growth, 10% loan book growth. So I would say that, see, India was rocking, and if you see Avenue Supermart, 19% revenue growth, VMart Retail, superb business update.
Yeah.
So India was rocking. If we would not have this, unfortunately, this war, I think we would have been staring at a very good levels in Nifty, Bank Nifty, entire market sentiment.
But we do have the war, Parag bhai. So,
yeah, so
what
that's
happens to
why,
banks, therefore, is the question.
So that's why I keep saying that if you are a person who can buy on dips, stagger it, gradually buy. The businesses are not bad. We are not very, I would say, Indian macro position is not that bad. If oil doesn't sustain above 100 for long, we are not that much worried. If Strait of Hormuz is also gradually getting normalized, and for example, Japan, Oman, France, ships have passed through in this weekend. If we can get more ships, of course, the price is a problem. The availability problem, if it goes away, then also it's okay, in my view, at least in near term. But I would say that you cannot ignore this fundamental and the valuations, right? If you see HDFC Bank 11 TPE on FY28, price to book 1.4x only now. Axis Bank, if you see 1.2x now. So these valuations, as a fundamental person, I cannot ignore. I know that there is war is going on. I also know, and that is why I have to stagger it.
That's a fair point. All right. We'll talk about this in more detail, but let's go through the watch list that you should keep on your radar this morning. There are quite a few stocks to watch out for. So let's run through the list very quickly. Adani Ports, it came out with its quarterly updates, and there are a few brokerages that are weighed in. Maybe a slight bit of a miss, but the future looks positive because coal volumes are expected to pick up, and with the Tata Power plant coming on stream as well, there's likely to be a positive impetus there. Wipro, Parag Bhai was actually just mentioning this, and we'll ask him about it in just a short while. They've gotten a major order, as well as they picked up a 100% stake in a company called Mindsprint. Maruti Suzuki, quarterly updates also, but they've also said that they have expanded or will expand their network, which has always been the strongest in the country, to 8,000 touch points. HDFC Bank, we had this story over the weekend. They've appointed an external committee to study this 81 issue, to study whether the board took the relevant steps, and they're also doing an internal study, is what my colleague Piyush has picked up, and we'll get you some details of that in just a bit as well. TTK Prestige, as well as a couple more, Stuffcraft, Butterfly Gandhimathi, these are companies that manufacture induction cookers, and they've been flying off the shelves. The government is also looking at plans to improve the sale of induction cookers. IT stocks will be in focus on account of the regulator mulling and exchange buybacks, and that's something to watch out for. RVNL and a host of other stocks. Vikran Engineering, SRM Contractors, I already pointed out, GR Infra Projects, order wins have come through for quite a few of them. Escorts, Kubota, as well as Moil, NMDC, they've announced price increases of the commodities and items that they sell. Prestige Estates, or rather, Prestige Projects has launched a township project in Hyderabad. J. Kumar Infra has gotten a pretty sizable order. Trent has come through with its quarterly update, a 20% uptick in revenue. We pointed this out for you. A couple of stocks in the red. Sun Pharmaceuticals, Trump has signed a 100% tariff on a couple of those drugs, not generics though, bear that in mind. Bharat Coking Coal, coal mining and dispatch work hit is something of a negative. So I do want to ask about Wipro to Parag Bhai. Parag Bhai, you were mentioning a $1 billion order spread over the course of 8 years, and beyond Wipro as well, the IT pack actually standing out as one of the gainers last week. What do you have to say about this one?
I think it was a overbeaten sector, and as we were always saying that in the last fall, after the war has started, IT has outperformed significantly. So it has served its purpose from my perspective. And plus, going into the results, I think that a lot of the worries around this AI-related deflation and reduction in the deal wins will get away. I think TCS should report very good deal wins. So I would say that, so going into the result, we are entering into results with a slightly positive bias on IT, fortunately. And one of the space which I would like to highlight is, apart from banks which are declaring results, business updates which are very strong. If you see the another channel check tells me that affordable housing finance companies are doing extremely well. So for example, I met a company called Aadhar Housing, which is my portfolio company, in a conference, and they were very confident about 20% growth, 20% disbursement growth. And if you see, the valuations have now become very attractive. On FY28, it is trading at 2 times book value with 4.4% ROA. So I would say that, and some of these stocks have beaten down in spite of them doing very well on the ground. The stocks have been beaten down just because they are mid caps and small caps, and going into 31st March, you typically see that kind of selling.
Okay. So watch out for affordable housing. That is one thing to keep in mind. Also, keep in mind, I mean, Bajaj Housing Finance is not strictly affordable housing, but very good set of numbers. So the sentiment out there could be
23% growth.
Yeah. The other one, guys, Aurobindo, multiple triggers to it, right?
Yeah, multiple triggers, including this buyback announcement. I think that's important. It's a compute size, 800 crores at 1,475 per share. About 54.2 lakh shares will be bought, and that's about less than 1%, 0.93% to be specific, of the total equity. So it's going to be a tender offer open to all shareholders, including promoters. And, it's nearly 3.9% of the standalone net worth. I mean, I think it might be a bit of a sentimental booster more than anything else. How are you looking at Aurobindo on the chart?
So, just the addition, just before, the other thing could be this amoxicillin prices, right? Because I think that benefit that comes into Aurobindo because of the tariffs actually being constructive for Aurobindo and constructive for its Pen-G facility as well. So that's the other added mix for Aurobindo.
Constructive in the sense that they are not getting hit. They are spared.
And because, amoxicillin prices are up about maybe 16-17% on last reported count in the last 3 months. And that's a big benefit to Aurobindo because of its US facility as well. So buyback, this both put together,
relatively they are spared because
Absolutely.
are there in
no
time.
tariff on generics in
any case.
So all three things have combined. Now let's see in the buyback. I want to see whether the promoter is going to tender or not. If the promoter is not tendering, then it makes a lot of sense because then it's a strong signal to the market that promoter feel that stock price is undervalued.
So on the whole, I think the pharma pack has done very well, should continue to do well. Aurobindo in particular, again, the Thursday dip was bought into. What a massive dip, but then that's been bought into the 20-day support average, 20-day moving average support, that's also kicked in. I think the recent highs around the 1350, 1360, that could well be taken out today with the kind of buying that you saw late on Thursday. So remain very constructive. A couple of other names that I like, in this space, Strides Pharma, something that we've discussed as a weekly pick, in the recent past. That's doing very well. Also add Lupin to the mix. Some profit booking, yes, but on the whole, the structure is positive. So Oro constructive, slightly better placed. Is Strides Pharma technical.
Got it. Okay, let's talk about the pharmaceutical space, and we were speaking a little bit about it, but then there is, of course, a tariff blow. It's not on generics. There is a limited impact. Let's get Varsha in to explain what that impact is. Varsha?
Yeah, so 100% tariff has been imposed on branded and patented drugs, and biosimilars and generic are being exempted when it comes to the tariff. Now, lower tariff have been imposed for EU, Japan, Korea, and Switzerland. And talking about the policy objective, why Trump has set 100% tariff on patented drugs, one is of course to push domestic manufacturing in US, and the API reserves and local production push ongoing has also been done. Talking about impact on global pharma, big pharma will face of course pricing pressure, and supply chain may shift to US, and the CDMO companies may see some kind of uncertainty due to ongoing push. Talking about impact on Indian generic players, because we export a lot of generics, so no tariff currently, hence no pressure on Indian generic players, and biosimilars are also fully exempt. Now there will be an impact on Sun Pharma, little impact on Sun Pharma, because considering Sun Pharma has 20% exposure to higher branded products, Illumia, which is one of the specialty product, may face 15% of tariff because the manufacturing is done in Korea, while EBITDA impact is expected at 1 to 2% at downside. Talking about who can benefit, lastly, a lot of companies have set up a manufacturing base in US. You have Aurobindo Pharma, Alchem Lab, Jubilant, Zydus, and Piramal Pharma will have a positive uptick considering their manufacturing base in US. So no tariffs on generics, 100% tariffs on branded and patented drugs.
Okay, thank you for that, Varsha. Now we're talking about the run-up to the result season, and business updates have started trickling in. BFSI has been in focus. A whole lot of companies in this space have talked about their Q4 updates. Piyush Mishra joining in to sum it all up. Piyush, if you were to look at the overall trend, is it better than expected for most?
Tamanna, yes, for sure. Banks have, after a very long stretch of period, started to report good growth in their credit growth. Although deposit growth remains a pain point, deposit growth continues to be slower than credit growth, further stretching banks' CD ratio, which is a very key monitorable that the RBI looks out for. Most banks have, in fact, reported a double-digit growth in both their credit and deposit in Q4 FY26. If we were to say HDFC Bank, the largest private sector lender, reported a robust growth of 12% year on year, and their deposits were up 14%. Bank of Baroda too reported a 16% growth in their loans, and deposits were up 12%. Axis Bank and Kotak Bank posted strong set of numbers for Q4 with double-digit growth in their credit in the current reporting quarter. IDFC First Bank, CSB Bank both posted around 15 to 20% growth in their advances, while IndusInd Bank was the only outlier. We have seen the bank has seen a management change over the last 1 year, and since then the bank has been struggling to post a growth in their loans and deposit, with their MD saying that next year would be the year of revival. We have a note by Fitch Ratings which said that because of the measures that RBI has taken over the last recent past, there is limited flexibility available with the RBI to provide durable liquidity in the banking system, because of which they say that banks' margins may come under pressure. Specifically, Fitch says that banks' margins could fall by around 20 to 30 basis points in the next financial year. Back to you, Tamanna.
Okay, Piyush Shukla there, thank you so much for all of those updates. Now, we had some conversation briefly about banks, but what about housing finance companies as well, Parag Bhai?
Yes, so housing finance, as I said, this affordable housing where the ticket size is around 13.5 lakh and the yield or advance is around 13.5 to 14%. That segment has done extremely well in March quarter. Because government's PMAY 2, Pradhan Mantri Awas Yojana 2, under that now many subsidies have been actually given back to the borrowers. And so word of mouth spreads, and so new borrowers also apply for the loan.
So no topics. Then let's talk about basis Q4 updates, favorites in banks and in housing finance companies.
So up till now, whatever business updates have come, HDFC Bank, Axis Bank, RBL, Bank of Baroda, Bank of India.
All are good.
All I have reported excellent. Even Kotak CASA growth was very good. I don't hold Kotak in my portfolio, but I hold others in the portfolio. But I would say that, so I think all in all, these banks.
In affordable housing?
In affordable housing, other housing. That's a large portfolio holding for me also.
You like Bajaj Finance?
Bajaj Finance, yes, it is there in my portfolio. That is also 21-22% YOY loan book growth. And I think asset quality also will improve. So Bajaj Finance is also looking very good at this price, 823.
Yeah, I just want to bring in one small point. So maybe I made a mistake. In case of Bajaj Housing Finance did okay, but Bajaj Finance, guys, I mean, the new loans booked are down 7% quarter on quarter, right? And people are looking at that metric and trying to figure if indeed Bajaj Finance.
No, I think, see, I'll tell you, they have always taken a call now. From last 2-3 quarters, Mr. Sanjeev Bajaj has said that they'll take care of the risk part of it. So they'll be less, I would say risk averse, slightly risk averse, but they're growing at 21-22% with asset quality problem reducing is a positive sign, and it's a very good price.
They have been conservative and they have been very open about it, and it's okay. They're willing to take that kind of pain.
Technology powered organization.
Oh yes, yes. If you want an example of how a financial institution or organization can use AI, they're on top of that.
Just a very quick question on deposits, because this is something of a bugbear for the banks as a whole, right? You have elevated CD ratios. Even for HDFC Bank, it's well above. It's now about 100.
It was 110. Right? It has brought down 95.
Right. But it's still a question mark. Do you think that if the monetary policy changes and if we see interest rates going up, you will likely have more people gravitating towards deposits again? Is that a positive? Or is it too early to say?
I'll tell you, March quarter seasonally has been strong for deposits. So we should not read too much into this that, okay, now, for example, CD ratio of HDFC Bank has come down dramatically. CD ratio of RBL Bank has come down by 6%. Yeah. Axis Bank has inched a bit because they have been very aggressive on the loan side. 18% growth I am seeing after a long time for a large cap bank. BOB 16% growth. So I would say that, on your question, first of all, my clear view is RBI is not going to increase interest rates because it's a supply side shock problem. If you have demand overheating, you can suppress it by increasing interest rates. Simple economics, right? It's a supply shock. The oil has gone up due to whatever geopolitical tension. To protect people from that, you cannot increase interest rates. It's a further burden. Your EMI also goes up, your petrol bill also goes up, everything goes up.
The only caveat out there is if the RBI has to take an interest rate call in order to help the currency. Right?
That is
And I think over the weekend, by the way, the government has taken, RBI has taken a lot of measures to try and shore up the currency on the NDF side and
they are
otherwise.
taking other steps.
Yeah,
other steps
so I'm saying the last resort, right, if you will.
I think
if the RBI has to do that. And frankly, I don't think it's possible to predict it right now, that what the RBI will do, because these are unprecedented times and there might be unprecedented measures needed to be taken.
I think a larger conversation on monetary policy is warranted.
Yeah, I think the most important thing is how long this is going to continue. That is the key question, and that nobody has
2 weeks,
answered.
3 weeks, 4 weeks,
Nobody
5 weeks.
has
Trump
answered.
does not know.
Unfortunately, nobody can answer that.
Apparently, there's a deadline now in
You have
by
to be
tomorrow.
astrologer or, as Lakshmi said, liar or something.
Okay, one outlook that has come in from BofA India, I thought is important to highlight. It's a note from Amish Shah. They're saying earnings risks have risen as stagflation fears grow. They've cut their FY27 Nifty earnings to 8.5%, significantly below consensus. They've cut Nifty December 2026 target also quite significantly, frankly, from 29,000 to 26,200. They're saying valuations are now reasonable, offering near-term upside, but markets are not yet in a true value zone. They prefer quality defensives and conflict beneficiaries, remain selective as India likely underperforms emerging markets. In event of prolonged conflict, worst case suggests a sharp slowdown in demand and investments. They see GDP growth falling towards 3%. And a Nifty earnings growth dropping to 0% in FY27, reflecting margin compression or weak volumes in worst case. This is in the worst case. So I want to underline that and double tick that as well. For medium-term downgrade rate sensitive sectors, that's mid-sized private banks, NBFCs, real estate and passenger vehicles, to underweight versus overweight. Continues to stay cautious on mass consumptions, that's staples, retailers and capex, steel, cement, cap goods, roads, railways. Prefer energy security, that's regulated power utilities, gensets, cables, transformers and rate hike beneficiaries, which is like large private PSU banks, well-off consumption as well. Among global players who remain overweight on upstream energy, aluminum and pharma. And it goes on about what else BofA wants, but I would say that the downgrade for the December Nifty target is clear that even if best case scenario, everything wraps up in the next couple of days, which is extremely likely, a big portion of the damage for the calendar year is done to earnings and what happens to the economy.
Yeah, and that number, by the way, is almost in line with what everybody else has done. Jefferies' target is 26,300. Yeah, so Amish's target or BofA's target of 26,200 is in line with Jefferies saying 26,300. Kotak is circa 26,000 as well. So almost all of the sell side is now converging on 26,000 as being the target, part one. But again, the common theme that seems to come out from what this note or some of the other notes are, that people are now wanting to steer clear of things which might get punished if indeed rates get hiked.
Yeah.
So because there's a reset bringing almost every sector at good valuations, why do you want to tinker around with the possibility of going into a sector where the possibility of a rate hike might damage that number? So therefore don't go there. Go for banks because the fundamental performance is good and a rate hike will anyways benefit them. Yeah. Go in for some of the exporters, go in for data center themes. I think that seems to be, Tamanna and Alex, the consensus across the notes that have come out in the last 5 days.
Nifty target, Kush?
So,
December Nifty target.
See, I still remain constructive. I've been talking about 30,000 for a while. Maybe around, maybe again, you'll have to lower this.
December of 2026.
Yeah, of course. Okay, let me.
Sorry,
let me caveat that, right?
I mean, frankly, 26,000 looking very good right now.
That is what I was coming to. कि साल की शुरुआत में 30,000 reasonable लग रहा था, 29,500, 30,000 reasonable लग रहा था. यहाँ से 30,000 is a bit of a stretch. So maybe that comes to about 27,500, 28,000 because a recovery from these levels is also 15-16%. बाकी के 8-9 महीने में अगर index 15-16% दे रहा है, so it's a good recovery. My concern is what will happen to the sentiment around the idea of equity investing as a whole with the retail guys. Maybe that's a discussion for a different day.
It is perhaps a discussion for a different day. But speaking of sectors, let's talk about retail and FMCG. They've come out with their latest business updates as well, and a few standouts there. We've already spoken about one or two. Sharad joining in to give you the whole pack though. Sharad, a few of the tailwinds that have played through for the pack as a whole. What stands out to you?
Well, thanks a lot for that, Alex. Dabur, if you look at the numbers, they were largely in line. Brokerages also have given thumbs up to it. Now, they expect a mid-single-digit revenue growth overall, but the home personal care segment, that is doing well. And interestingly, the operating profit, that's expected to grow faster than revenue as well. AW agribusiness update is also strong. It's largely in line with what the street was estimating. The growth has been supported by stable demand, and edible oil segment has done well. They're expecting a double-digit volume growth, especially in the edible oil space as well. Of course, we had discussed Avenue Supermarts and Senco Gold's good set of operational update from these retail names, but I would like to add one more stock to it. Trend, that operational update came out. It's a very strong update coming in. Its average in the last 2 quarters of 17% growth was there. Now it's at 20% growth in the revenue segment, and the revenue of sale from merchandise that went up by 21%, and strong store addition is also there. West Side stores 21 and 109 stores for Zulio as well. So of course Trent has also come out with a really strong retail update.
Well, thanks a lot for that. And you know, there are a couple of other stocks that we need to talk about, but very quickly, since retail is in focus, Parag bhai, Trent, Avenue Supermarts, etc.
V-Mart.
Yeah.
All three.
Would you buy right now, or would you buy only 5-10% of the quantity?
No. So D-Mart we already bought. D-Mart we already bought.
So if you had to buy 100 rupees worth of D-Mart, would you buy anything today?
Because it has recently rallied, it has outperformed Nifty by a huge margin. I would not buy now.
Okay, that's the question.
Yeah, but on any dip, yes, D-Mart, Trent, everything looks good.
So 5-10% dip
Even
you would
in
buy.
FMCG, Marico, we have good weight, and Marico business update was also very good.
No, so 5-10% dip, Avenue Supermarts, Trent, etc. you would buy. You would buy. Okay.
Yeah.
Okay, now a couple of pockets to watch out for, which might be casualties today. So Astral Supreme, because PVC prices have been cut by 10 rupees again. This reflects the cycle, if you will, not quite staying as it is, and demand woes maybe. So you will likely see some bit of pressure on both Astral and Supreme and some of the other pipe companies today. And well, if you think of large companies now facing the brunt of the conflict, Deepak Nitrite comes up in the thick of things as well. Apparently, they have shut the phenol acetone facility, which is about 60% of the consol EBIT, which is materially resetting the near-term earnings profile because they've signaled some force majeure like stress in chemicals value chain. This is not good news. And well, I would suspect that you would probably see some or the, I mean, this is probably the first of the large signals being given by a chemical company. You'd probably see a lot of other chemical companies going through this. Fertilizers and chemicals are under extreme volatility. It's a bucket that you want to be very, very careful when you're going out there. Parag Thakkar, phenol acetone facility, if this news is true and is shut, 60% of consol EBIT shut for the time being. How bad can it get?
I think, see, I'll tell you the stock price I saw, and I'm not tracking this sector very closely as I'm tracking banking or cement or something like that. So, pardon me for my lack of knowledge on this sector. But I would say that the stock price which I'm seeing is also has also fallen so much. So, it might fall a little bit more. But I would say that, yeah, for this sector, this energy security is very, very important. Availability of gas and all is very, very important. So, as the Strait of Hormuz opens up, I think this shutdowns will ease out and the things will get back to normal. But I would say that this is not a sector of my circle of competence, as I would say.
Okay, you know, we should try and take Kush's view after 9:08 once the prices have settled, because it will be wrong to get in right now. The stock was up in the previous session on Thursday. So let's wait for it to come off and then we'll try and take Kush's view. The markets have opened. I know we have a guest waiting, but just want to mark what the markets are doing on open at 9 a.m. We'll have a start. Let's see if it is in the start in the green. We won't have a 1% uptick on the Sensex. That is a given. The question only is, will it be flattish or will it be marginally lower? Let's wait and watch. So that's the key thing to watch out for. Watch out for HDFC Bank. Watch out for Avenue Supermarts. Watch out for Trent. Some of Bajaj Housing Finance. Those are some of the names that came out with their Q4 updates and were decent. Let's see if indeed there is some change. RBL, a standout.
In fact, RBL was a standout,
RBL was a standout. I would say even Sobha, very good updates. RBL is now 8% up. Sobha's pre-sales are about were good, so that stock about 1% up. These are the pre-open sessions, so let's wait for them to settle. Meanwhile, we're speaking to FADA. That's the Federation of Automotive Dealers. They remain constructively cautious and structurally optimistic, but operationally watchful for the near term in the next 3 months. I'm just going to go to CS Vigneshwar and ask him what that means. Mr. Vigneshwar, very good morning to you. I am seeing the numbers. I can't put more adjectives in the numbers because the numbers are what they are. But are you optimistic or not?
We're quite optimistic for the year. That's what our survey with our dealer fraternity has shown us. It's been a great 2026 financial year closing and record growths everywhere. We crossed magic figures of 10 lakh vehicles in tractors, in commercial vehicles. Even our two-wheelers has crossed about 2.14 lakhs, crores rather. And our passenger vehicles came very, very close to the 50 lakh mark. So I think it's been fantastic growth everywhere. We are also very positive for the year 2027 financial year. The only impediment seems to be the crisis in the Gulf. So hopefully that gets resolved quickly and we can go about our business as usual.
But what specific segments, Mr. Vigneshwar? So prior to the conflict, you were looking at an uptick in CV and everyone was bullish starting 2026 on the upcycle in CV finally and across the board, right? Are there indicators that that continues, or is there a little bit of a question mark about whether you will see dramatic up moves in that segment?
We have seen fantastic growth in the commercial vehicle segment, which grew up at about 11.74% to end at about 10.6 lakh vehicles for last year. So I think the commercial vehicle segment has finally picked up because it was 2-3 years of muted growth. We feel that this is going to continue to grow because in terms of structural the structural issues in the economy, I think most of it has been sorted out. GST has helped and so many other things have come in. So I think it's going to be a good growth in the year 2027 financial year, not only for commercial vehicles, but for any vertical in the automobile industry.
Okay. All right. Mr. Vigneshwar, thanks so much for taking the time. Pleasure speaking with you and look forward to our next chat as well.
Thank you.
All right, let's talk about the automotive space in numbers on the charts, right? And does this stand out? Because it did take a bit of a battering over the course of the last couple of weeks and 4 weeks in particular.
So a couple of names that stand out, obviously, Mahindra & Mahindra, TVS, Bajaj Auto, these stand out. But I wouldn't really go all out on the auto names. Look at something like a Hyundai. I don't think there is going to be a very sharp uptake, right? So have to be a little cautious and selective. So the names that have done well and have taken a beating, like Mahindra & Mahindra, TVS, you remain constructive on these. Again, auto anchors are something that I'm very positive on. Even now, technically, structurally, a lot of these names, are showing a lot of strength. So if you really want to stay within this space, auto anchors are still the preferred ones.
Okay. All right. Speaking of auto, we've also gotten a brokerage call in. That is the big brokerage call of the day. Goldman Sachs upgrading TVS Motor to a buy. If I remember correctly, the volume picture was actually pretty decent. In the month gone by as well, 25% growth, if I'm not mistaken. Sharad joining in to tell you about what they're saying in their note though. Sharad?
Well, thanks a lot for that, Alex. Goldman Sachs is bullish on the counter. They have upgraded it to buy from neutral rating, and the target price has been hiked from 3,830 rupees to 4,100 rupees per share. Now, they've stated that the pricing power and a relative cushion against the raw material inflation augurs well for the company, and overall there is a superior volume visibility as compared to the peers, driven by upcoming premium product launches which will be there. It's better place to pass through the raw material inflation, and we have seen over the last 2 to 3 odd weeks the price hikes have been announced. A relatively limited volume impact from the metal and crude inflation comes into TVS Motors, and overall they are seeing a 35 basis points margin tailwind coming in from the PLI scheme, and that is why Goldman Sachs is bullish on TVS Motor.
Okay, thank you for that, Sharad. That stock doing okay this pre-open session. Just 2 minutes to go in that pre-open session. Milan Vaishnav joins in. He's founder and technical analyst at Gemstone Equity Research. Milan, very good morning to you, and thank you so much for speaking with us on the show today. Let's start with the Nifty outlook.
Very good morning. Nifty, I would begin by taking a bit of a conservative view here. And as a worst case scenario, if we see some spikes coming in post Tuesdays after the ultimatum over the Straits, I still see that the zone of 22,000, 22,500 should continue to stay defended. As of now, I feel that we have laid some sort of ground for a technical rebound to occur. Immediately, the trend may not reverse, but we are certainly sitting on the cusp of technical rebound, which could take Nifty towards, say, around 23,200, 23,300 odd levels. But even then, in a worst case scenario, we are not violating 22,500 zone in the foreseeable near term is what I think of Nifty. One thing I have observed with Indian markets that we have been relatively underperforming, but if we now examine some relative performance of Nifty against MSCI World ex Japan or MSCI Asia ex Japan, we see that the relative strength has started to mildly improve, and that kind of resilience or that kind of relative outperformance is expected from Indian equities, even if you don't stay insulated in between overall global volatility.
Okay. Picks this morning, Milan?
Two picks, one from the metal space. I am looking to enter into Steel Authority above 155. We can keep a target of 166 and keep a protective stop at 149. The second one would be PFC. One can enter above 402, keep a protective stop at 392 and expect 418 on it.
Okay, taking a look at the benchmarks, not looking particularly bad at the end of the pre-open session, right? So you have gains of about 0.33% for the Nifty 50. And the broader markets also not looking too bad. Green on the screen, I wonder whether that holds. And the rupee, interestingly, has also moved up a little further. So the question is, does IT continue its up move from last week? It was the sector of the week as a whole with gains, quite considerable gains, right? Particularly towards the end of the trading session on Thursday. Does that continue?
There is a good possibility because, like even Parag Bhai mentioned, this was the first sector to fall even before the war started. So a lot of damage had already been done. Hence, the recovery could be perhaps, I wouldn't say led by IT, but the first signs could come about, and you are already seeing that in the price. This started bottoming out a lot earlier, than your banking names and your auto names. Metals obviously were doing well anyway. So especially if you see the volume uptake on the green days, right? There's been a good delivery marking. So definitely there's some kind of value buying coming in from. Technical levels are massively oversold, positive divergences as I've mentioned galore. So yes, there is an uptick. HCL Tech, Coforge, Persistent, these are stocks that I would have on my radar from a momentum trade perspective. But Thursday's lows, those will be your stop losses if you decide to go long.
Okay, 908 by the way, and the rates are settled. So let's bring up the rates and just show what is happening. The Nifty, not bad. 0.3%, 67 points in the green. So the start doesn't seem to be all that bad. Let's see if it lasts. I wonder if banks are participating here, and that is what is leading the markets higher, if you will. HDFC Bank, 1% higher. Yes, indeed, you have the big boy participating and showing its weight. Trent is participating too. Airtel not bad, about 1.25%, and IT is, as Alex pointed out, is actually doing well. What is not doing well, maybe a bit of metals, etc., maybe a couple of insurance names, but not too bad. I mean, nothing to really shout hoarse about. But this is not a bad start, considering the fact that crude started off at $115 to a barrel WTI, and we are at 0.3% in the green.
I think it's not a bad start, considering the fact that we saw an eye-popping social media post with so many asterisks in it that you had to sift and see what the real message was. Yeah. So
praise be to Allah.
That seems to be
that's a good
always,
message.
But seems to be more sound and fury than action is what the street seems to be keeping in place. If you look at Asian markets as well, considering that the deadline has been pushed, that Axiom report that we talked about. Okay, quick notes, because we want to give you ideas this morning. Let's look at what Titagarh is doing. Jefferies has actually initiated a buy with a target price of 810 rupees on the stock. The stock is showing some signs of life in the pre-open session, and they expect a 10% FY26 to 30 CAGR in India rolling stock capex. They see a 9 to 16% CAGR in passenger and metro coaches. When I say CAGR, I mean compounded annual growth rate. Wagons should grow at a 5% CAGR as we estimate a 6% annual cargo growth for Indian Railways versus its 16% target. They're also expecting a 43% EPS growth between FY26 to 30, and that's one of the key reasons for their upgrade. So Jeffries is quite bullish on railways overall. I mean, this is one sector I think people have kind of forgotten. Thoda sa. Railways, pops up around the budget and then you kind of forget. But the fact is those infra spends are continuously coming in.
Yeah, it is coming in, but right now in this year to be bullish on such names is slightly difficult. Just remember, just recently after this oil price spike, government has let go of 14,000 crore revenue monthly, on a monthly basis at current Brent price. And,
so you're saying there will not be that scope to spend?
We'll have to see that how much space they have to spend significantly higher on railways or defense. Of course, is a priority now because of the geopolitical things.
You have no choice.
I don't have any.
No, you have no choice as far as but then apart from banks and consumption, then what else? Because now the street needs to start looking for more ideas.
Yeah, absolutely. So basically, you see, pharma is there, IT is there, FMCG is there, auto is there. Of course, auto also is little bit, the environment is little bit clouded, but I would say that if you are buying great quality companies like TVS Motors, when they fall, you cannot go wrong if you give it a time.
But would you also consider some of these companies, because of the kind of shock that we've witnessed, induction manufacturers, certain electronic companies, will see a pop? Would you buy into them?
No. Anything which is very short-lived, you cannot buy after it has rallied. If you are first, then it's okay.
Just want to look at NMDC very quickly if we can, because there have been sharp increases in iron ore prices. So watch out for that. In fact, Morgan Stanley says they see continued elevated seaborne iron ore prices. Relatively negative for JSW Steel. Let's pull that up. Jindal Steel, given their external iron ore requirements, and Chinese steel supply reforms are in play, coupled with higher shipments, should turn sentiment negative for seaborne iron ore prices. This, of course, again, related to what we have seen with the war, and that's going to be the big one. What is the war-proof bet? Very quickly.
Bharti Airtel for me.
Very
clear.
Chalo, that was quick and furious. What about you, Kush?
Bharti Airtel, but I would suggest something that has already been affected by war. So something like an L&T is something that you do consider because of the kind of fall that's already come about.
Oh, so you say that there's chance for recovery.
I have banks and all. So basically, as I said, I was saying last week, you have to bucket it, right? So these are impacted stocks which have fallen, so you should buy, and these are non-impacted stocks. But for example, Bharti Airtel has also fallen. It has not. It is not that it is holding at the same price. It has also fallen from 2,000 to 1,800.
Well, for me, it is watching NDTV Profit, and that's war-proof for sure. You don't lose money, trust me. If anything, you will gain a lot of money if you watch it closely. Here's how the markets are starting off. This morning, 40 points in the green. These rates will keep on changing now in the red. I mean, at least we've started off flat, which is not a bad thing. Bank Nifty 0.17%, mid caps 1/3%. The market breadth is not bad, must say. Small caps are flattish, but 1178 to 586 is not bad. Let's get the heat map up on the screen. Want to see what HDFC Bank is doing. Trent though is the big winner, 3.5% higher on that strong update that the company came out with. Wipro is a stock in news as well, up about 2%. Power Grid, you would argue a bit of a defensive. Don't quite see HDFC Bank in the top 10. It is in fact just about 0.4% higher to that pretty decent, actually slightly better than estimated set of numbers that they've delivered. At least the business update suggested that. But Trent, standout winner. Wipro is not too bad either. Even Stevens, almost even Stevens, slightly more red now actually than green. And the Nifty 2 has slipped, Sensex has slipped too. Sun Pharma, 1.3% lower. Interglobe Aviation yet again slightly lower. There is weakness in Kotak Bank, much lower than what some of the peers have done. I believe that is probably the reason why Kotak Bank is down about 1%. Dr. Reddy's and some of the others too are correcting. If Aurobindo was here, I presume it would have shown a bit of green. Bajaj Finance is down. ICICI Bank is down as well. So even Stevens, yes, there is a Kotak and an Indigo, But I would say that maybe, just maybe, on open at least, the standout name is Trent with that sharp 3.5% uptick. So good going.
Yeah, and I think Avenue might follow as well. I mean, the fact is, this is not a bad morning. This is not a bad morning with everything that's going on in the world. You have a slight downtick now on the Nifty, about 35, 36 points down. India VIX slightly elevated, about 2% up. Let's look at the broader markets and how they're following suit on this Monday morning, even as the rest of, or the top lines are quite muted. The mid cap, about 0.5% down. Advanced decline ratio is in the favor of the declines right now. The small cap 250 suffering more, about 0.75% down. The sectoral heat map will likely show you that banking stocks are relatively doing okay. IT is doing okay. Nifty IT about 1% up, actually the strongest gainer there. The rest all in the red. Pharma is seeing some heat, and this is in part because of the 100% tariffs that have been announced by the US. Nifty Realty, some of those updates were good, but it's not really cutting it. Nifty Realty also 1% down. There's also a report saying that you're going to see real estate prices slow down in light of what's happening with the war, and that's probably why Nifty Realty is also hurting. But overall, I would say this is a weak start, a quiet start, but not a massively negative start compared to what we've seen in the last few days as well. Nifty IT also losing some of its steam. Let's get to specific stocks and look at what's happening there. I mean, the story has been about business updates, hasn't it? And a lot of those coming in. Maybe there will be some stock-specific action that we could see. RBL Bank, we pointed out, actually cracker updates, but just about 1% up. That's how muted the mood is. Sobha also decent updates. The pre-sales figures were good. Quite muted. Metropolis, another set of good business updates, not really helped. I mean, 1% up, which in this market is not bad. The mood is quite somber ahead of that press conference. I think people waiting and watching, seeing what the US president will say later tonight. L&T Finance is the other one that I want to pull up for business updates. Aadhar Housing Finance as well, that's in the negative. Bajaj Finance in the negative. L&T Finance had a decent set of business updates. Trent, we pulled up. Let's look at Trent again, if it's holding up, and Avenue as well from that space. Senco Gold, positive updates. That's the one winner there, 9% up this morning, and that's showing quite a bit of action. I want to look at TVS Motors. There's an upgrade by Goldman Sachs on TVS. That's just about 1% up. Aurobindo has announced buyback details. Promoters will also be participating. That stock about 0.75% down. So not too many movers, Alex. I would say that the mood is muted. It's wait and watch, because one really doesn't know what's going to happen in the next 12 hours or so.
Yeah, you said it, Tamanna. And in fact, since that start where you were flitting between gains and losses for the benchmark Nifty 50, we've worsened. And you've actually seen the tide shift just a tad bit. In fact, quite considerably, down about 0.33% for the Nifty 50. The small cap index now close to 1% lower. And the breadth is looking not too great at this moment. In fact, for the Nifty 500, you have only about 70 odd stocks that are gaining ground right now, and a few stocks are losing quite a considerable amount. IRB Infra, one of them, losing about 5.6%. Astral is losing 4.2%. Chennai Petro is under pressure today, down about 4% as well. Swiggy losing 3%. Star Health, PG Electroplast, Indegene, Aegis Vopak, all seeing cuts of over 2.5% at this moment. What is working is Ola Electric on the back of an expectation, I would think, of an improvement in demand for EV. It's up and about. It's gained in the recent past as well. Bear in mind, though, that the fundamentals have not been great for this company, and so have a sense that this is a highly volatile stock. So we'll ask Kush about it in just a bit. Trent is something that is working. We pointed this out to you. It's up about 4.3%. Adani Power is doing okay. Bank of Baroda from the banking pack is doing okay as well. But you have the banking pack, Nifty Bank, and pull up the intraday chart if you can for the Nifty Bank, because it's lost quite a bit of ground and then once again moved back up. It was down about 0.8% at one point when I saw it, and it's rebounded just a tad bit to trade with cuts of just about 0.4% or so. Kush, very quickly on Ola Electric, because the stock is up as much as 7%. Would you be cautious with this?
Absolutely. So I would avoid Ola Electric. There could be, a momentum. There could be a rally. Volume also on Thursday and Wednesday, by the way, was pretty healthy. So yes, there could be this uptick that could continue. But when you speak about a more structural move, I think Ather Energy is something that I would prefer over Ola Electric. So yeah, I mean, if you have a position at lower levels, you could hold it with a trailing stop loss on Ola. But Ather is something that you want to consider as a steadier positional bet.
Got it. All right. On that note, gentlemen, thanks so much for taking the time. Pleasure having you as always. We're joined this morning by Vinod Karki, Head of Strategy at ICICI Securities. Vinod, thanks so much for taking the time and good morning to you. The sense that we're getting is that there's a considerable amount of uncertainty. That's the only thing that you can have absolute clarity on. And a lot of people looking at the price of crude oil as a barometer of where this entire situation is heading, and we're well above $100 to the barrel. And so therefore, the question to you at the onset, as a keen watcher of the space and somebody that researches this very closely, what are the top few talking points that you are focused on, or data points that you are focused on when you look at the market and fundamentals today?
Well, thank you. And rightly pointed out, it's the price of crude which reflects all the sum of all fears, if you may say so. So I think from a base case perspective, we are almost 1 month past this crisis which started. It appears to be a case where this will be a 2-3 month affair where oil prices can remain above this $100 level for maybe a quarter, 2-3 months, which effectively, I think the market has taken due cognizance of that. If you see from the point where the conflict started, the market cap erosion has been close to 50 trillion rupees, which is almost 13-14% of GDP. So the market, I think, is kind of pricing in this base case Gulf crisis, which I think could last for maybe 2-3 months. So it's there in the price. It's not as if while the noise is there, I mean, all the incremental data points make you worry, and fear is there. But you have to also remember that you have shaved off close to 50 trillion rupees worth of market cap, which is almost 13-14% of GDP due to this effect. So a lot of it is there in the price.
Then from that perspective, Vinod, I think the question that a lot of people are asking is, to tide over this period of elevated uncertainty, what are the few sectors or ideas that are relatively isolated or insulated? What does not get badly affected at this moment?
So it's very simple. If you see through what's happening right now, if you look at the Nifty, for example, as a basket of stocks, and it's an energy crisis where there's energy shock prices. I mean, you're not getting enough fuel, and prices are rising. So from that perspective, if you look at the corporates, there are two types basically. One are those supplying energy in the system, and the ones which are consuming. So if you look at the Nifty as a index, as a basket of stocks, one thing great about it is that all the energy suppliers in the Nifty which are listed are all positively benefited, be it Coal India, be it NTPC, Power Grid, and even some of the oil and gas companies which are there in the Nifty are upstream, which actually benefit ONGC and to some extent Reliance. Where the suppliers of energy, they are getting really impacted by either losses rising due to cushioning of prices, or they're not getting enough supplies. The oil and gas OMCs and other companies, they are not there in the Nifty actually. They are outside the Nifty in the other indices. And from a consumers of energy perspective, also, if you observe, almost more than 40% of the weight of the Nifty is in IT, bank, those kind of services sector, which directly don't have an impact. And secondly, some of the large industrial companies which are there. Good thing about India as an economy is that almost 55% of the consumption of energy is driven by coal and electricity, and 45 is from oil and gas. And even within that, if you look at between residential households and industrials rely a lot more on coal and electricity. So I think from that perspective also, I saw, if you see the metal companies, for example, they're largely reliant on coal and electricity. Cement is a mix of coal, electricity, oil and gas, petcoke and all.
Yeah.
And some of these consumer companies, they have better pricing power. So you've already seen some of them passing on some of the price,
But Vinod, having said that, there is an impact and a major one. I mean, macro strategists say that an average of $80 might bring down GDP growth to 6.5 from the estimate of 7. If it's average of 100, it could bring it down to 5.5 as well. We are staring at a slowdown. Are the markets pricing in this slowdown already? Or for that to truly emerge, you need a further correction, 1,015 or 2,000 points on the Nifty?
No. So just before you joined in, Nikunj, I just mentioned that from the day this conflict started, the market has given due cognizance to this crisis. The aggregate market cap is down.
Vinod, sorry, Neeraj here, and I heard that. But my question is this, that because things are moving so swiftly, if it's an average of $100 per barrel on oil, do you foresee a further downtick of an X number of points? And therefore, should buying decisions be postponed or staggered more?
So my take on, sorry, Neeraj. So my take on this is that the market has corrected. The overall market cap has dropped by almost 50 trillion, which is almost 13-14% of GDP since the crisis broke out. So it has given due, what you should say, it is pricing in to large extent this whatever losses we are seeing from a base case perspective. So what is the base case? The base case is that we have almost finished 1 month of crisis. This may continue for 2-3 months or maybe a quarter overall. And we may see oil prices above $100 for a quarter or thereabouts, basically. So this has been priced in. But if this crisis goes one leg above that, we actually start seeing further increase in crude oil. For example, we're just doing the numbers. So far, so much of escalation has happened. The crude oil average price, Brent crude, for this crisis period is around $100. It has moved up and down and all that. So assuming that similar level of crisis continues, we'll see oil prices at around $100 thereabouts for another month or two. So that we have to work on what is this scenarios right now. So the current is that the base case scenario, if you look at the surveys also, there is an expectation that this will get resolved in 3 months, maybe, thereabouts, While the conflict may continue, the oil prices may drop below these elevated levels after 3 months. So the point is, in a scenario of a base case scenario that 3 months we have this crisis, 1 month is gone, the market has absorbed that in terms of a significant market cap erosion of almost 50 trillion rupees, which is almost 13-14% of GDP. So that's the point I'm trying to make.
Vinod, hi, Tamanna here. Just wondering how closely are you watching the Q4 updates and the subsequent results that will be announced in the fourth quarter by companies, considering that this is also for a period which was pre-war in that sense. Yeah. Some of those initial numbers looking pretty heartening, but is that giving you enough optimism right now to go out and buy?
Well, see, if you look at the macro picture, I consider this to be currently a situation where the demand has not broken. So demand is stable. I'm not saying it's going all out guns, but demand is stable. If you look at the bank credit for March, only for the month of, I'm saying not the full quarter numbers. The business updates were reasonably good from most of the companies. But if you look at the numbers just for March, be it auto numbers or, the PMI number, it was reasonably stable for March. So I think I read it like this, that the demand environment is stable. You have a supply shock so far. What happens when you have stable demand and a supply shock is that prices rise, basically. And which you are seeing across the board wherever there is shortages and things are not flowing through, prices are rising. Now, there are two ways to look at it, positively and negatively. Positive is that, as I said, if it's a base case scenario, that 2-3 months of supply shock, and you get an inflation kicker. So if you remember, pre to this period, this crisis period, we had this other issue that inflation was just not picking up in this country. WPI, CPI, and it was, and that's why the nominal numbers, if you see, were looking pretty weak, 8%, 9% nominal GDP numbers. Now, this, if it kind of gives a kickstart to inflation, but remains a short-term problem, then it is actually, it may turn out to be a little healthy in terms of kickstarting the inflation to some extent. But that's where the good news ends, that if the base case scenario is not held and we get into a very bad situation where what will happen is this stable demand environment starts cracking, in the sense that prices rise so much that there's no longer the demand will be stable. It will start falling because the prices rise so much. So that will be the situation where I think there can be further downside.
Okay, it's looking like a iffy situation and quite a tough one at that. Thank you so much, Vinod, for speaking with us. Always a pleasure to have you on. But, talking about business updates, we have to react to what's in front of us. And CSB has reported strong business growth for the fourth quarter, with loans rising 27% and deposits up 20% year on year. Before we speak to the management of CSB on these updates, Piyush joining in to set that conversation up. Piyush, what's the breakdown of the CSB numbers as we see them?
Yes, Tamanna, CSB has actually posted a strong set of Q4 provisional figures. The bank's loans are up 27% year on year at 40,364 crore. Deposits are up 20% at 44,246 crore. We know that CSB banks, almost half of its loan book is into the gold loans, and gold loans, as you know, are doing quite well over the last few quarters. CSB's gold loan have risen 53% year on year to rupees 21,567 crore in Q4. The bank's loan growth is held by the rally that we have seen in the gold prices recently. It is among the largest gold loan lender in the industry. It has a strong presence in South India, and the bank stocks are up 15% over the last 1 year. In their Q3 results, the bank's slippages rose materially, particularly because of a few SME accounts which are affected because of the ongoing conflict in the West Asia region. The bank's management said that 10 to 11 accounts have slipped in Q3 FY26, these SME accounts, and 4 to 5 accounts comprise around 40 to 50% of these accounts. 4 to 5 accounts comprising 40 to 50% of these slipped accounts will get upgraded and recovered in the fourth quarter itself, the bank's management had said. The bank's management says that no SMA2 or the delinquent, the stressed loans will be in the gold loan. And finally, the NIM is expected to be stable at around 3.7 to 3.9%.
In fact, Piyush will take some of those questions to Mr. Pralay Mondal, the MD and CEO at CSB Bank, who's with us on the show right now. Mr. Mondal, very good morning to you, and thank you so much for speaking with us. I think everyone looking at these Q4 updates very closely in light of everything that we've seen in the last few weeks as per what's happening geopolitically. So before I come to these updates, wanting to understand if there is any kind of exposure or any kind of impact that you've had, especially from NRIs.
Good morning, Tamanna, and to viewers. From an NRI perspective, I don't think there is any major issue at this point of time. Of course, the NRI deposit book has not grown as much as the deposit book has grown. But in terms of any other, whether it is remittance, whether it is stability of those deposit books, I don't think there is any issue. So I think we are pretty good on that.
And as far as the Q4 is concerned, what has stood out for you, sir?
I think Q4, 2-3 things. One is I think we have remained consistent in our growth, whether it is on the deposit side or on the asset side. And we have sort of outpaced the market growth significantly, the way you have done it in the last few quarters. And that is one good thing. The other, of course, is some of the challenges which we faced in third quarter. And my analyst call had said that some of those upgrades will happen, has happened. So to that extent, I think past is past for us from asset quality perspective, which happened in third quarter. Rest we will discuss when we announce our results. And of course, we did well in the gold loans. It's an opportunistic cycle, and we must leverage that. We have done that. At the same time, most important is our entire tech transformation journey, which we started in the beginning of this year, has done brilliantly well. And hence, all our franchise, whether it is wholesale, retail, SME, and of course, gold, we will start building it up. We are going to build the entire CASA franchise now, because now we have the systems and the products we are going to launch one by one. So overall, looking very positive.
Interesting. Mr. Mandal, good morning, and this is Alex here. I'm just wondering, on the gold loan side, you said that it's an opportunistic moment and you need to leverage that. 50+% rise in gold loans, and this is understandable. The entire system is seeing that. But I'm just wondering about the constitution of your book. It's already quite a sizable chunk. And if this pace of growth continues, then there'll be a pretty large exposure to the gold loan segment as a whole. Is this unlikely to be a long-term trend? Because as I understand it, and in our last conversation as well, you had indicated that it was going to be a more balanced contribution for each segment.
Yeah, Alex, absolutely right. So that is exactly the plan. This is, that's why I said that it's tactical in nature. It's not strategic in nature. So from a strategic perspective, in the long run, wholesale, SME, and retail will form a very large part of the portfolio by FY 2030. And that plan is intact. And for that, we had to ensure that our systems and processes are in place, whether it is the core system migration, which we did to Oracle, the entire transaction banking systems, the CMS, the supply chain, the trade finance, the OBDX platform, which we're doing on the net banking, mobile banking, digital platforms. All of that is now in place. So we are going to build the bank stage by stage on all sides. Already wholesale has started performing well. I think we have had a fairly good growth in wholesale this year so far, and this quarter it also sustained. We tactically had stepped back a little bit on SME and retail this quarter, but that is something which will pick up next year, because I think once we have better clarity on how the ecosystem is performing, I think we're ready to grow that book. And even on gold loan, if you see, the overall system growth is around 130%, and we have grown by around 50-odd%, so 53%. So we are taking much lesser risk in that portfolio. Our LTV is very, very comfortable. So we do our sensitivity analysis and see even if gold prices fall significantly from here, our portfolio is safe. So to that extent, I think we are playing a balanced approach and preparing the franchise for future across all the segments of the bank.
Okay, interesting. So on the asset quality side as well, there are certain improvements, as you've already pointed out. As I understand it, 4 to 5 accounts are getting upgraded in the fourth quarter. And if I look at SMA2, which, if my viewers do not understand, this is the special mention accounts that have not yet become non-performing. So Mr. Mondal, what I'm trying to understand is, what is the constitution of that SMA2 book, which is 60 to 90 days of not having paid? Is it primarily from the gold loans, and do you anticipate that you will have to utilize collateral in this situation?
So first of all, Alex, gold loan, whether it in SMA1, SMA2 or SMA0, it doesn't make any major difference. What makes a difference in gold loan is significant price fluctuation, and that we are playing that risk with a LTV, conservative LTV. But yes, I mean, when we look at the quality of the credit portfolio, I think there are 2-3 components which is generally monitored. One is slippages, one is gross NPA, and of course, net NPA, net of recovery and upgrade. So on all these parameters, beyond this, I cannot say anything right now because we are in a silent period. I think whatever I said in the analyst call, we hold by that. So we are pretty comfortable on that front.
Mr. Mondal, good morning, Neeraj here. A lot of people are believing that there will be a 25 to 50 basis points rate hike in the current fiscal or the current calendar, if you will. Do you believe that to be the case? What does that do to deposits? Does it improve the deposit-taking ability of any bank and your bank too? And what is the resultant impact on net interest margins if that were to shape up?
So, Neeraj, the way it is working out is if you look at it globally, I mean, Fed didn't change the interest rates. In some parts of Europe, there has been the reverse direction in terms of increasing rates and things like that. We'll know in 2 days' time what RBI is going to do. But general consensus is that I think it's a wait and watch kind of a scenario at this point of time because global volatility is changing every day. We will know only late night today and tomorrow what is happening there in terms of the threats which are there. So from that perspective, very difficult to predict what is going to happen and we have to wait and watch. In case, hypothetically, there is a rate hike happens, already if you ask me, the sensitivity of the rate hikes has already moved on because the deposit prices, instead of going down after so much of rate decrease, we have seen an increase in the last quarter across the segment. You have seen the CD rates have gone up last quarter across even the larger banks. So to that extent, the net impact on the deposit side has already happened. If at all rate hike happens, I'm not sure about it. It will only increase the lending rates, which will not necessarily have a negative impact on the margins of the banks. But at this point of time, on a status quo basis, I think there's a challenge because deposit rates are going up, CD rates are going up, so cost of funds of banks has to be managed judiciously.
Mr. Mondal, just very quickly, what is your NIM outlook, all things considered right now, and the possibility that if interest rates do move, they'll move upwards?
I think we have said that our NIM will be in the range of 3.7 to 3.9. I think I hold to that for a quarter or two. And after that, we'll see how the global scenario plays out and we will figure that out. So for us, some of those projections don't change much at this stage. And we will be in that range of 3.7 to 3.9. Hopefully, this quarter will be on the slightly higher end of that. But we have to wait and watch.
Are you seeing any sort of distress calls yet from the business side because of the whole Iran war? In any sectors or segments?
No, not really, not yet. And we may not be the right people to comment on that because our overall portfolio size is small and our exposure may not be in all the segments which could be affected. But for us, we have not seen yet.
Fair enough, but with whatever you have seen so far, you're not seeing any sort of SOS or concerns so far, especially from the SME side. And I know your SME book isn't that big, but nevertheless, whatever exposure you have. You're not seeing that?
No, not really. And whatever little bit cautious approach we took last quarter, I think some of those have come off well. And we are pretty stable from that perspective. So far, so good.
Let's hope it stays that way. Thank you so much, Mr. Mondal, for speaking with us. Pleasure having you here with us on NDTV Profit this morning. So, so far, so good is the word coming from CSB Bank. But of course, there is a preparation at all ends for what's happening across the world and to make sure India is secure. So the government held a meeting to step up production of induction cookers and petrochemicals last week as the Middle East conflict continues. We're going to be speaking with Stovecraft on what this means to us, but Rishabh joining in for more details.
Absolutely. What you had is, like you said, a preparation on all fronts. And one of those preps involves sort of amping up the domestic production of key products like induction cookers as well as critical petrochemicals. So what the government's POV is, it is to sort of look ahead, even if the war continues for a few months, starting now, the availability as well as the affordability of critical supplies like induction cookers should not stop. So in that vein, there was a meeting that was held between DPIIT, DGFT, various other ministries had representation as well. And what they decided was on that there will be some sort of a boost in production, and various ways to boost that production were also discussed. What we've also already seen from the government is a cut on import duties on various petrochemical products that are critical to other, that are actually critical raw materials to other products. So that's what we're seeing from the government, is this sort of proactive approach wherein more and more interesting and more important products are being sort of lined up, even in the sort of taking care of the worst case scenarios that are also coming up if the war continues.
Thanks, Rishabh, for that. Let's get in Mr. Rajendra Gandhi. He's Managing Director of Stovecraft. And start off, Mr. Gandhi, with a macro view. Good morning. This is Neeraj Shah here. There is a need for the products of this nature, of all everything subscribing to energy saving, to go up. Is one, we understand there is a push by the government as well to do that. Is there capacity and is there enough raw material to accede to this push and ramp up production, or will it take time?
Good morning, Neeraj. Yeah, as you will the market is witnessing a movement to use consumption of induction cooktops to ensure that the households do not suffer from delays in supplies for LPG gas. Yeah, there is a huge surge in the demand of induction cooktops, because about 50% of the inputs, around 50% of the inputs, we are depending on imports, particularly for electronic parts and for crystalline glass. The supply chain itself is global. So it will take some time when all this is made available in the country. There is a timeline when producers in the global markets produce this and supply this, and by the time it reaches our factories. So definitely there is a shortage of these components, and I think in the next 15-20 days this should stabilize.
Why do you say that it will stabilize? I mean, are there some real supply confirmations that have come about?
On the component side, yes, we have reached out to our suppliers to at least at the company's level, we have tried to double our capacities on production, and our suppliers to develop on their quantum of supplies that we source from them. So to that extent, we are assured. But overall, as a market, there is a demand across the Southeast Asian markets, and so even the suppliers are finding it. There is a huge surge in demand at their end. So it may be overall as a country, I believe this is going to be not very easy. It will take some time to stabilize. But at Stovecraft, we'll be able to double our production from what we were doing. We were manufacturing about 200,000 pieces a month, which we are confident of achieving a 400,000 pieces a month capacity on production.
When, sir? By when, Mr. Gandhi? 400,000 by when?
Yeah, this month we will achieve this number. Yeah.
Okay, I did want to ask about the glass top, and you mentioned that you as a company are importing. I'm just wondering whether there are local suppliers available, whether there's a possibility, if you are increasing production to this extent, whether there's an option for localization, Mr. Gandhi?
As of now, there is no capability and capacity for manufacturing the crystalline glasses that are used in the manufacture of induction cooktops. But even if someone wants to put up a facility, it will take 4 to 6 months to establish this.
Got it. So let me ask you this. So you've reached out to your suppliers to increase supplies, and you anticipate that you will double production. But at the same time, considering, as you've already pointed out, Mr. Gandhi, that the demand for induction in Southeast Asia has gone up, are these inputs also becoming costly, and what does that do to your margins? You might see a significant surge in your volumes and your top line, but will it be at the cost of your margins?
As a company, we are working on our fair margins that the company wants to be healthy with, and pass on if there is any input cost increase. There is a input cost pressure both on domestic and on imported parts. As it is, the rupee is depreciated by almost 15-20% to the CNY. Most of these parts are imported from China. So there is an input cost increase because of the rupee depreciation. Apart from this, because of the huge demand, particularly on the glass side, globally, crystalline glasses have seen huge surge in their cost. There's an input cost increase of about 100% on the crystalline glass. Domestically, there is an input of plastics and some aluminum parts in this induction cooktop. Aluminum has been seeing a continuous rise in the cost, but particularly plastic. Immediately after this war, the domestic suppliers or the manufacturers of plastic have increased their prices by 60-70%. Overall, there is a cost increase in the input of induction cooktops to the extent of 15 to 20% at the output level.
All right, all right. Mr. Gandhi, thanks so much for taking the time. Pleasure speaking with you and look forward to speaking to you once the results are out.
Thank you.
All right, let's talk about the real estate space. And Anurag is flagging early signs of caution in India's housing market as geopolitical tensions weigh on buyer sentiment. Before we listen to what Anurag's Executive Director Prashant Thakur has to say, let's bring in Varsha to talk about the key numbers and trends. Varsha, what are you picking up?
Well, geopolitical tensions have dampened when it comes to the demand for India's or domestic housing market, which led to 7% dip in the quarterly sales volumes. Middle East investors and domestic buyers have hit the pause buttons, I would say. Talking about the average property prices, India's top 7 housing markets have recorded muted 2% year-on-year average property prices in the Jan to March quarter versus last year, and weaker sales, due to negative consumer sentiment has kept in check, according to Anurag. Talking about average housing prices when it comes to 7 major cities, which increased to 9,456 per square feet in Q1 FY26 from rupees 9,260 per square feet in the preceding quarter. And on an yearly basis, if I were to talk about, prices were up 7% year-on-year in the same period last year. Talking about housing sales, well, housing sales across the 7 cities declined 7% in volume and 6% in value during March, which limits price growth. And lastly, top 7 cities housing sales rose 9% year-on-year when it comes to January to March period.
Okay, thank you for that, Varsha. In fact, one of the co-authors of that report is with us, Prashant Thakur, Executive Director and Head Research and Advisory at Anurag Group. Mr. Thakur, thank you so much for joining in. So the sum and substance seems to be that there is a very clear impact of the entire Middle East crisis, of the war on real estate right now, and you've already seen a slowdown in sales?
Tamanna, I think this geopolitical war that is going on, it impacts every industry, and real estate is just kind of not immune to it. And when we talk about the early signs of kind of momentum slowing down, we should also keep in mind that we have seen 3 to 4 years of back-to-back high double-digit growth. So anyways, the prices were already at its peak, and even without the war, there were some sign or talks of affordability kind of reaching unsustainable level. And this war, I think, definitely brings out certain elements which is kind of hampering the affordability. Is number one, the construction costs have shot up because of this supply disruption. The second is the sentiment is also kind of severely hit. And, sentiment is one of the core pillar when you talk about real estate buying, because people bet on the future earnings, or it's the future of their salary or the earning. In this scenario, I think everybody goes in kind of cash conservation mode, be it, individuals or corporation. That's what we are seeing. Again, having said that, we should also not forget that the developers are sitting at a healthy balance sheet. The industry is stable. I think this turbulence is definitely a time where they will recalibrate their launches. It will limit their capability to pass on the increase in construction cost complete to the buyers.
Let's just focus on, no, all of that is there. Can we just focus on this 7% dip in quarterly sales volumes? Where is this largely coming from? Which categories?
So I think all the categories have shown some sign of slowdown. Earlier we had seen affordable and mid segment taking a hit, while luxury and upper mid segment were really kind of pulling the market up. This I'm talking before this slowdown in momentum happened. But post, if you look at Jan to March quarter, I think all the segments are kind of witnessing some kind of momentum slowdown, and majorly it is coming from upper segment as well, because the wealth effect has also played out. The stock market is kind of very volatile, and people would like to kind of wait for this turbulence to pass before they make a big ticket purchase.
Okay. Prashant, we spoke about this recently when we discussed the micro markets in certain trends that are emerging, right? And the question that I'm asking you this morning is, specifically in Bengaluru or specifically in Pune, in certain other markets that have a significant exposure to IT, is there likely to be an outsized impact there?
Definitely, if you talk about the heavily dependent on IT, ITS, they will bear the maximum amount of burn. This AI-led job disruption is now turning out to be a real threat for the IT, ITS sector. If you take into account the recent announcement by Oracle, that was quite significant. Before that, we saw TCS laying off a significant amount of workforce. So the cities like Pune, Hyderabad, and Bangalore that are heavily dependent on IT and ITS, there we will see some kind of turbulence happening. And in fact, we have started seeing some kind of volume slowdown coming primarily from IT, ITS buyers.
Prashant, MMR, which is such a large market, good morning, Neeraj here, which is such a large market relative to the all India market too. The conversations have started coming up wherein developers on their own are giving the 2080 schemes, etc., in order to boost sales. Now, is this a sign of an impending large sales slowdown, or are these temporary measures and the demand is strong enough?
See, when you talk about MMR, I think that MMR is one of the most balanced and resilient real estate market that we have across top 7 cities. And most of the value growth comes from MMR. Today, MMR accounts for almost 45 to 50% of the entire real estate sold in top 7 cities in terms of value. And if you look at the kind of spread this market has, right from grade A developers to strong grade B developers, and also the huge pipeline of redevelopment, it provides a long-term resilience. The kind of schemes that are being offered now is effectively to manage this short-term cash flow mismatch crisis that the sector might face. If you talk about the long-term resilience and growth of MMR, I think the story remains intact. Look at the way the infrastructure is kind of opening up new micro market. And if you look at the depth of the economic activity, it's not only dependent on one or two sectors. Unlike other cities like Bangalore and Pune, you have IT, ITS, BFSI, manufacturing. So I think the scheme that you're seeing right now is a way to kind of manage the short-term cash flow mismatch that might be happening, or also just push the buyers on the fringe. And this geopolitical tension might be casting a cloud in their mind about the purchase. So I don't think this is a long-term phenomena that will kind of hamper. But again, having said that, we need to acknowledge this uncertainty, and I think everybody, right from the developers to the buyers,
Sorry, Prashant, are you seeing, are you getting ground reports of under construction properties also getting delayed to some extent? Because raw materials coming down, labor, etc., because we have reported that there may be some stalling of under construction properties, and then of course there are RERA deadlines, etc. Is that one area you're also watching out for?
See, right now the constructions are going on, as usual. There's no kind of immediate threat to it, because the construction materials are procured well in advance, and after COVID, everybody focused on effectively managing the supply chain. But again, having said that, if the war prolongs, I think you might see some slight construction delay in the under construction project, not only because of the supply chain disruption, because of the labor issue that might also come up, because the inflation will kind of start to trouble these workers who are working on site, and this overall ecosystem might kind of slow down.
Okay, all right. On that note, Prashant, thanks so much for taking the time. Pleasure speaking with you.
Thank you.
These are trends that we're going to have to study very closely in the coming weeks and months. But more recent and more immediate, you have the equity markets that are at the low point of the day for the benchmark Nifty 50, now cuts of about 0.6% at 22,570. We'll get more details on the other side because all of this hinges on geopolitical tensions, which we will speak about in our regular feature on India Market Open at 10 a.m. Stay tuned.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Welcome back. You're watching India Market Open. While markets grapple with business updates on one end, but more importantly, the clouds of war on the other, it's important to understand what really is going on. And we are doing this consistently, where we give you a geopolitical perspective on India Market Open, so you're well informed for whatever investment decisions you want to take. Joining us on this special segment this morning is Professor Gulshan Sachdev. He looks at European studies in JNU, but of course, there's right now, the conflict has included pretty much every major country in the world, one way or the other, in terms of impact. Professor Sachdeva, thank you so much for speaking with us here at NDTV Profit. Just a very basic question for us, because we're also speaking ahead of a conference and an address by the US President later tonight, India time. We're hearing what we are from the Iranian side. Is there any real sign of a ceasefire, a truce, or this conflict ending that you can glean?
Well, thank you for having me. I think at the moment, I think there are escalatory, rhetoric from both sides. This could be strategy from both sides, but at the same time, it doesn't look that you have to have any immediate end to this conflict, at least in the next few days or even few weeks. Because what has really happened is in the last 1 month now, it's becoming clear that war objectives of the US and war objective of Israel differ very, radically. So even if US is more worried about winding up this operation, and they're also worried about impact on the energy markets, on the global economy, Israel has a very different kind of intentions. So unless there are very serious talks happening between US and Iran, which at the moment doesn't seem to be the case. Of course, there are all kind of rumors, there are all kind of talks about happening that, but still you don't see indication of very serious indication of that. So even if United States decides perhaps declaring victory and moving out of this war, but I don't think that Israel and Iran are going to stop this war. They'll continue because Iran is looking for something more serious talk and some kind of assurance that it's not going to be attacked again. And of course, I mean, in one sense, I mean, this is a very unnecessary war because all the thing which US is now asking, whether it was nuclear talk or it was state of Hormuz, etc. Those are already open and they were already talking to the US. But anyway, that's history now. So at the moment, it looks like that, the damage is already done to the global economy. So it's not just only even if tomorrow, because, out of 105 million barrels a day, demand of the global economy of the crude, about 20 million comes from this region. And in any kind of scenario, if one is looking now for at least in the next foreseeable future, at least 10 million crude is going to be missing.
So, but the question is, Professor Sachdeva, the question is based on what we've seen over the weekend as well, and the tone and tenor of the messaging, particularly from the US president, there does not seem to be any off-ramp in sight. And so therefore the question is, can you unilaterally, even if you do announce a victory, are you going to be able to extricate yourself? There is a significant loss on the military side as well of equipment for the US now that it has to bear.
Well, that's right, because every day it's I mean, according to certain estimates, about $300 million the cost of war is on the US economy. And now already the prices have gone up in the US and it's have its own political impact. And it's also not just only political impact within the US, but also with the transatlantic alliance. There are serious strains there. So US would like to come out and even declaring victory. As I said, even after that, unless there is a serious discussion, serious talk, and serious agreement on this is what Iran would like to see. Because after seeing 1 month, in this war, they have certain appetite to continue for some more time. They are also not really in a hurry, looks like, because, they have already practically controlling the state of Hormuz even today. And the US doesn't seem to have appetite to send ground forces there. Even if they move out, I think the situation is still going to be very unstable. And, and if Israel continue to attack, particularly infrastructure, energy infrastructure within Iran, they will continue to attack in the whole Gulf region. And, the instability in this region will continue.
Professor Sachdeva, European countries, one by one, are speaking up against the conflict. The conspiracy theory is that they have been allowed, the ships have been allowed the passage. Do you think that becomes a clear and present strategy in that NATO could actually reach a bit of a breaking point?
Well, I mean, NATO is already facing very serious difficulties. And the Europeans are very clear because, what they are saying that, the US started this war without consulting Europeans. And now when even the US Navy, the formidable, the military power of the US, if they are not really able to open Strait of Hormuz, even few ships coming from the European countries are not going to make a major difference. And anyway, I think within Europe also there are different opinions. Particularly France is very keen that, you can't really forcefully open the Strait of Hormuz. You have to talk to, Iranians. And now, more than, 40 countries, they discussed this issue. Even the Indian Foreign Secretary was also party to that. That issue came to the UNSC, and within the UNSC also, the Chinese have, they said, no, you can't do this thing in force, nothing. Even the vote has been kind of postponed. So what Europeans are really looking first, they may try to come to the, rescue, come to do certain things about the Strait of Hormuz. But first they want a certain kind of hostility to stop and certain institutional mechanism, particularly some legal backing from the UNSC. Then only I think they'll be able to join, and that doesn't look very certain at this point of time. So we are seeing, at least the same kind of thing continue for some more time.
What is this some more time becomes a big question. Professor Sachdev, thank you so much for speaking with us. But a prolonged, painful war with this kind of a situation is definitely not what was required. Let's move on to our big conversation this morning on Talking Point. Harsha Upadhyay, CIO of Kotak Mahindra AMC with us. Harsha, very good morning. Always a pleasure to have you on. And I think one thing that's coming out very clearly through all of the data that we're getting is that even while FIIs have decided to look at other pastures, Indian investors are continuing to keep the faith in markets. Now, do you think that that's justified right now with what we're seeing? There seems to be an underlying sense that this will end at some point and then you should be well placed to make the most of it. Would you agree with that?
Good morning, Tamanna. I think clearly what you said is right. If you go by the flows that the industry has seen during the month of March or the first few days of April, it's clear that the domestic retail investors have continued to participate in equity market and continue to pose faith on Indian equities. Yes, we are in the middle of volatility. Very difficult to take a call in terms of where it's going to end, exact impact of the war, etc. However, time and again, we have seen that when you're in the middle of a crisis, it's always difficult to take a call. And once the crisis ends, the businesses will start to do better. And that's what people who are invested in equities believe at this point of time. And of course, on a like-to-like basis, there has been a fall in the market compared to where we were at the end of April, at the end of February. So to that extent, yes, the additional investments are also going in at lower levels, which of course would discount some of the damage that has been done to earnings trajectory because of the war. So all in all, I would say that anyways, in equities, you cannot predict the short-term return trajectory, or you should be looking at short-term in the first place. And if you are a long-term investor, if you are going to make staggered investments, I think the lower valuations that have been offered by the market is another good entry point to do that.
No, but the concern and question is where, because the nature of what we're seeing is so unprecedented, Harsha. There is a fear that some things may change in a more permanent or long-term fashion. In that context, what are the sectors that you see more likely to bounce back first or safer bets?
I don't think there is any safer bet in that sense at this point of time, except for maybe the defense segment, which will continue to receive orders despite what's happening around the world. That's the only segment where you can be very confident in terms of the demand continuing at the same pace or at higher pace. Most of the other sectors could get impacted if there is a prolonged war. It's all about not just about the price, right, Tamanna? Right now, the issue is more about the price rise and how it's going to impact margins and all of that. However, if there is a damage to oil infrastructure, which is going to lead to a medium to long-term impact on the overall production of oil and derivatives, then that's where the market would take it as a medium to long-term negative and start to price in. At this point of time, I would say that most of us are expecting it to be more of a short-term impact just on the pricing rather than on the availability. Yes, there are logistical issues, but it's hoped that those logistical issues will get resolved at some point of time in the future. However, if there is an impact on the infrastructure, then it would take time to rebuild those assets. And to that extent, then the earnings trajectory could have a meaningful damage depending on what happens, etc. So that's not something that we are pricing in at this point of time.
Harsha, morning. Speaking about pricing in, this is Alex, by the way. What do you think the market is currently pricing in? Which is that you've seen a depressed market for quite a while now, and you've seen quite a crack, particularly over the last 1 year across the board. But what is the market pricing in on the earnings side, in your opinion? There is obviously a shock, but what is projected?
Alex, clearly, market was trying to price in a recovery in terms of earnings at the end of January or February. To that extent, that notion is somewhat getting tested at this point of time. I would say that the market is probably pricing in a similar kind of financial year as compared to financial year 26 now, as we speak. However, it all depends on the extent of war and the damage that it would leave on a medium to long term basis. Right now, when we are in the middle of the war, it's very difficult to really put a figure in terms of what's going to be the earnings number for the full year. It all depends on how long this continues, but it's fair to say that at least a couple of points of earnings will get shaven off because of the war. And if it extends, of course, there is going to be more damage to earnings.
The reason I was trying to get that is that I think a lot of people are building that consensus that now is a good time to start taking a greater exposure to equity, particularly because of the valuation argument, right? And so if we are pricing in a lower earnings situation and then there's a resolution over the next 3 to 4 weeks, say, then there could be a significant up move if those estimates are correct, or maybe even a little more pessimistic. That's what I was trying to get at, but I guess it's too early to say. How much, Harsha, of a bearing could monetary policy have? Because at this juncture, globally, you're seeing a situation where the markets are pricing in the possibility of interest rate hikes. In India, I'm not certain how much of interest rate hikes are going to be possible, because we're yet to see the price of fuel at the pump go up.
You're right, Alex. As far as India is concerned, the transmission of the high prices is going to take a little more longer time compared to global counterparts, I would say. And as you rightly mentioned, at least for now, we are not expecting any change in the interest rate regime. Of course, we cannot expect further cuts in interest rate, which was the case even earlier, I would say. We were expecting a longish pause in interest rate trajectory, and that's what seems to be continuing at this point of time. However, it all depends on what kind of retail petroleum prices would start to get priced in, and what will be the second order impact of that on other inflation, etc. But at this point of time, I think we are reasonably better placed compared to many of the global economies in terms of handling the inflation. So to that extent, I would say a pause is what one can expect from monetary policy, at least for now.
You're not factoring in a hike in order to stem any slide in the rupee or otherwise. You are baking in a pause for the rest of the year, Harsha.
That's right, Neeraj. At this point of time, it's more of a pause. However, we need to keep an eye on the war and what is likely to happen on the prices, etc. But for now, we believe that it's going to be a pause.
I hear you. Okay, Harsha, the other thing is I'm just trying to hypothesize that, assuming, let's hope for humanity's sake, the conflict ends in a hurry and there is a relief rally, whatever extent, 500,000, 1,500 points, whatever it is, and whatever number on the valuation it reaches. Will the markets have a different bounce and a different trajectory, unlike the previous crashes, simply because this time around, the supply side challenges will come to the fore, as you highlighted as well in your earlier answer, very, very swiftly. A lot of damaged infrastructure will not be turned around at a flip of a switch. It will take time. And therefore, there could be second order challenges which will come back and the markets will start pricing them in once the initial bounce is over.
Neeraj, I mean, if we are pricing in kind of an early resolution, which means over the next week, 10 days, etc., then I think market will take it in the stride. Yes, there will be some minor impact to some oil infrastructure, but it's not going to really derail the overall oil market. Right. However, if this extends, or even if there is an early resolution, that resolution comes after some serious damage to oil infrastructure, then I think there is a problem. Right now, markets are kind of pricing in the logistical issues that most of us are experiencing in terms of availability of oil and a little bit of higher prices, which at the moment seems like it's more of a short-term blip rather than a structural change from a medium to long-term perspective. However, if that hypothesis changes, then of course you will have to redo your earnings expectations. You will have to reevaluate your valuation thesis. All of that will become necessary.
Okay. And Harsha, where do you how do I say? You could almost divide the market into cohorts, right? There are a set of stocks which have been impacted by the conflict, will probably continue to get impacted, but the valuations have certainly gotten decimated there. Is that the pool that you fish in, or you steer clear of anything that could presumably get impacted by the conflict and the after effects? Because there are enough and more sectors that have also seen a valuation reset because of just the broad nature of the downtick that we've seen in the markets. I mean, I'm just using that as an example so that viewers understand, but Airtel may not get substantially impacted because of the conflict, but even that has seen a valuation downtick. So is that the kind of pool of stocks that you fish in?
Neeraj, I think it's better to keep a diversified portfolio in focus. While there could be a very, very strong pullback in some of the segments where there has been a larger impact because of the war, for example, oil marketing companies, aviation stocks, or some of the chemical stocks, or some of the areas where fuel becomes a larger part of the overall margin profile, etc. There could be a sharp bounce back if there is an early resolution to the conflict, but we'll have to, again, as you rightly mentioned, we'll have to evaluate from a bottom-up basis whether those changes are sustainable or not, right? Then there is other basket, which is largely insulated from what's happening. However, because of the negativity in the market, those stocks have also seen correction in valuation. So there are two of these baskets. You need to be in both of those baskets. You can't be extremely focused on one because at this point of time, since it's an evolving situation, it carries more risk. So to that extent, as a portfolio manager, we would prefer to have a diversified focus on almost all of the sectors, and then take a call as situation unfolds. It'll be better to take those calls rather than preempting something at this point.
Harsha, thank you so much for joining us on the show. Always a pleasure to have you on. Harsha Upadhyay, CIO, Kotak Mahindra AMC. I mean, of course, the wise money would tell you that these kind of situations are in time to buy in a staggered fashion with a very long-term view. But if you're looking at your screen on a more regular basis, yes, there is reason to wonder what's happening. Having said that, the kind of response to business updates, I think, is quite optimistic, and it's heartening to see. I mean, pull up a trend. Decent business updates, strongest in the last 2 quarters, trend over 6% up right now. Pull up a Nykaa, again, good business updates. These are pure play consumption and discretionary consumption companies, right? 3.5% on Nykaa as well. I think we were showing Nykaa before that. That's the detail on trend. Let's show Nykaa, 3.5% up as well. So the domestic businesses and the Q4 updates are good. Having said that, it's also a fact that FIIs seem to be fleeing. I can't even say just selling. They seem to be fleeing in droves from their investments in Indian shores. And Somit Sarkar joining in to put all that data together.
Well, yes, the FII selling has been quite a lot in the month of March. In fact, they have sold close to $12 billion, which is the highest ever that we have seen. Now, if you look at from the peak level that we had seen in September 2024, foreigners, FIIs have sold close to $45 billion of Indian equities from September 2024 till now. And the sell-off as a percentage of market capitalization of India, if you look at that metric, then that stands at around 0.8%. Now, this metric is even higher than what we had seen during the global financial crisis back in 2009. But this amount of this number of 0.8% is still lower than the sell-off that we had seen back in 2022 when the global tightening cycle was ongoing, and that time also the FII selling was on a spree. Obviously, the quantum is highest that we have seen in the current trend, but as a percentage of market capitalization, the number is still lower at 0.8% because that time it was around 1%. Now, Goldman Sachs here has done this assumption, and they are saying that if the current outflow hits the 1% of market capitalization mark, then that implies that there could be further selling of around $12 billion in the Indian equities going forward. And they are also expecting that because of this Iran war, there could be a much more FI selling that could come in, but that could be limited to around 12 to 13 billion US as per Goldman Sachs that we could see now going forward.
Okay. All right, very interesting. Let's take a look at the kind of recovery that you've seen. Thanks so much, Samit, for that. The recovery that you've seen in the Nifty Bank has not held. We're trading with cuts of about 0.2% now for the Nifty Bank. I'm talking about the Nifty Bank. So Nifty 50 now trading with cuts of about 0.4% or thereabouts, just about negative for the Nifty Bank. And Nifty IT as well, seen a little bit of a cool off from the high point of the day. It started off with those tremendous gains, but now with gains just about 0.4%. The other factor, of course, is the Indian rupee, which has moved even higher today. So pull up that ticker on the Indian rupee, now trading at 92.88, moved above and holding well above that 93 mark. And I guess to a certain extent, this is what is playing out and will be discussed in the RBI monetary policy review on Wednesday as well. Guys, the conversation is going to be, I think, about strategy on rupee and the outlook on inflation at certainly a big talking point this week.
The monetary policy to some extent, but the problem is that the moving forces and the moving parts of this entire story, one is sitting in Washington, the other in Tehran, and all of us sort of in the middle of it. What continues to astonish is that how Indian markets seem to be worse hit than even US markets. US markets relatively looking more resilient.
Yeah, well, their macro is taken care of by a certain V that they acquired called Venezuela, and they're all available there.
They have the oil, though I must say that what we have been doing with our reserves and making sure that there's no panic is commendable. It's amazing. And on the little bit of travel I did, I saw that in nations that don't produce their own oil and are heavily dependent on imports, the hit on the streets can already be seen. That's not being seen in India. It's business as usual, so that's a big deal.
Yeah,
and we have managed that.
Social media was saying in Pakistan, for example, petrol is 300 rupees a litre.
Yeah, really? So that cushion has come in. We've managed to shore up enough so that people are not suffering right now. LPG cylinders are in place, no panic in place. So we've managed to hold out, and that's important as well. Well, markets are also hopefully going to manage to hold out. No big cuts this morning, but that's pretty much all the time we have on India Market Open. Stay tuned. Your questions on your portfolio will be answered up next on Ask Profit. Thank you for watching.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards,
Hello and welcome to NDTV Profit. You're watching Ask Profit, where all your queries get answered through a technical and fundamental guest. But before checking on the market, you can WhatsApp your queries or even call us about all your queries. Well, moving on, let's see what markets are up to. Talking about Nifty 50, let's see what Nifty 50 is doing. It's down almost 0.44%. Let's see the gainers and losers when it comes to benchmark index. On the gainers side though, a lot of stocks are actually gaining on the back of business updates, strong business updates. You do have Trent, you have Bajaj Auto, Coal India and Titan, which are gaining when it comes to, there you go, Trent, Titan, Bajaj Auto, even you have Wipro, Ultratech, Infosys, Eternal, all are gaining when it comes to benchmark indices. On the loser side though, you have Reliance Industries, you have Max Health, Adani Ports, Sun Pharma and Cipla. Even HDFC Bank, a lot of banking names are also on the losing trend. You have Asian Paints, HUL, Geo Finance on the losing trend. Well, let's see sectors, which all sectors are gaining. And overall, if I were to talk about Nifty Realty, Nifty IT, Nifty PSU, Metal, all are up. Nifty Next 50 is also up 0.9%. Well, Nifty Realty, if you see, is up almost 0.5%. Talking about the broader markets, let's see what Nifty Midcap 150 is up to. Well, it's almost down 0.3%. Let's see which are the gainers when it comes to Midcap 150. You have Kalyan Jewelers, you have Nykaa, you have Godrej Properties, you have L&T Finance, which are on the gaining side when it comes to Midcap 150. Nykaa on the strong, business update. Well, on the loser side though, you have IRB Infra, you have Astral, you have UBL and Ipca Labs, which are on the losing trend when it comes to Midcap 150. Let's see what Small Cap 250 is doing. Let's pull up that chart as well. It's down almost 0.2%, mirroring Midcap 150. Though on the gainer side, let's see which are the stocks which are gaining on the Small Cap 250. You have Sterlite, you have Prince Pipes, you have GE Shipping and RBL Bank, which are gaining when it comes to Small Cap 250. On the losers side though, you have IRB Infra, you have Jai Balaji, you have KNR Constructions and Latent View, which are on the losing trend. But with this, let's also invite our guest. We have Gaurav Sharma, who's Associate VP and Head of Research at Global Capital. We are also joined by Mahesh Oja, who is VP Research Business Development at KC Securities. Welcome, gentlemen, at NDTV Profit. Always pleasure to have you. With this, let's start our first query. This is coming through WhatsApp. This is Sunil from Vishakhapatnam. He has bought AGS Transact Tech 800 shares at 40.4 rupees. Shall I hold or exit? Gaurav, Mahesh, coming to you on this, what's your view when it comes to this counter? What should investor do?
I think investors should exit from this counter. Counter not looking much good on these levels. So exit could be a good idea.
The next query is coming in from Sanjay from Bangalore. Reliance Industries, is it a good buy at current level? Any targets on this, Gaurav?
Yes, hi, morning. As far as Reliance is concerned, it is certainly a good buy. But the time frame matters. At least a 2-quarter time frame should be taken. It is not a trading position that is advisable at the current level. The stock can further witness some kind of profit taking towards 1275, 1250 odd levels, and that too should be considered a buying or an accumulate opportunity, keeping a medium to long term horizon.
Right. Next query is from Harshit from Bangalore on Samman Capital. He's bought at an average price of 146 rupees. The quantity that he's holding is 330. He's asking whether he should book profits in the near term. Well, Gaurav, what's your view on that?
From the NBFC space, yes, Samman Capital did outperform because it stayed in a range. It hasn't corrected much, while the larger peers in the similar pack, that is Bajaj Finance, Shriram Finance, that have been otherwise doing really and exceptionally well, have corrected a lot. So, yes, good amount of resilience is visible. I'll advise him to take a stop at 135 and hold the position.
The next query is coming in from Naga from Hyderabad. He's a long-term investor and he wants to know, should he add more shares of Genus Power at current levels? Any view on this, Mahesh?
We can add further on these level. Genus Power is doing fundamentally good counter and company doing very good. So in a longer term, I think they can hold further. If anyone want to add on these levels, they can add further.
The next question is on GMDC. Investor wants to know support levels and right time to enter into that. Gaurav, this question is for you.
Firstly, it is very well placed. Yes. GMDC is very well placed. The metal pack is otherwise doing good, not at all an issue. The support levels are placed at 520. These are the long-term supports I'm talking about. As far as some short-term supports are concerned, it is 560. Good time to hold, good time to keep it in your portfolio, and even fresh long addition can be considered at these levels.
Okay. Sridhar from Coimbatore is holding 100 shares of Vedanta, bought at a price of 683. He wants to know whether should he continue to hold this counter or should he book profits, and also the stock split will be happening. So what will be the impact of this is what he wants to know. Mahesh, should he continue to hold? Should he continue to hold till the stock split? What would you advise?
I think they can hold further. Actually, Vedanta is doing very good and good dividend. I think in a longer term, they can create more wealth on these counters. So I think probably they can hold further. If anyone want to add on these level, they can add further. In a longer term, I think still have a chance for upside.
Next query is from Venkat on NTPC Green. He's bought at 96 of rupees 96 of 500 shares. He wants to know short-term view. Gaurav, what's your view on that?
Short-term perspective, it is a avoid. The stock is still trading in a range of 92 on the downside, 100, 102 on the higher side. Till the point this range is not breached, I do not see any kind of meaningful upside here. Once 102 is surpassed, 106 and 112 are the immediate upside levels. So wait for the breakout to happen, then only enter.
Anil Singh wants to invest in bank. He wants to know whether should he buy Canara Bank or Punjab National Bank. Mahesh, your view?
I think Punjab National Bank is a good buy from these level. Further, if your horizon is a longer term, looks attractive on these levels. So Punjab National Bank can be add on these level. From Canara Bank, I think 4 to 5%. If any correction, 4 to 5% downside from these levels, they can add further in Canara Bank.
Right. Let's go to our first caller for the day. It's from Reddy from Hyderabad. Hello, Mr. Reddy. Please go ahead with your query.
Yeah, ma'am. I'm holding at HLA Limited.
Okay.
Buying price at 16, average price 80,000 quantity. I'm holding our average buying any suggestion.
Mr. Reddy, you want to hold it for long term. What's your time horizon? If you could please help us with that.
Long term.
Long term. Mr. Mahesh Ojha, this question is for you. Mr. Reddy is holding HLV shares at rupees 16. He wants to hold it for long term. Please let him know your view.
In a longer term, if you are looking from these levels, some upside can become. But if you are looking from this current sector perspective, I think ITC hotel is better place in the value terms. So slowly they can switch in. If any upside in these HLV, then they can switch in Indian hotel, ITC hotel.
Queries from Ahmed from Delhi. He wants to know, in the auto sector, which stock should he invest? Should it be Maruti Suzuki or M&M? Given the fact that petrol and diesel prices are expected to go up, will there be interest in buying cars? Mahesh, any view on Maruti or M&M?
I think M&M valuation wise, M&M looks good on these level. Some downside could become, but yes, fundamentally strong counter and having a much more value in M&M. So I think if anyone want to add M&M on these levels, they can add further. But if M&M looks 20 to 25% upside from this level.
Right. Next question is on Metropolis. Sunil wants to know, he has bought 100 quantity at rupees 428. What is short-term target and stop loss, please? Gaurav, this is for you.
As far as Metropolis is concerned, the stock has not done really well. It is struggling around the current levels, still hitting lower lows. I do not find it to be an attractive bet. Some more downside is pretty much possible. 400 is the immediate support level. If the viewer is having a position, then I'll suggest him to hold. Take a stop at 400. Fresh longs are not at all advisable at these levels. One should consider Fortis and Apollo Hospitals against Metropolis.
Right. The next query is a caller query coming in from Hyderabad. Satish, you can go ahead and ask your query.
Yeah, hi Thomas. Good morning.
Good morning, Satish.
Yeah, this query is regarding Allenbury Industrial Gases. Okay. So in the recent fall, I bought some 455 shares at an average price of 208 rupees. So can it become one more Linde India, or does this company has? I'm sure of the industry as an industry. I'm aware of what it can go up to, but as a company, how will it be placed after 5 to 7 years?
Okay, Mahesh, any view on Allenbury Industrial Gases? Is it a re-rating candidate?
Yes, I think Allenbury Gases is well placed. Some upside in the longer term can't be denied. I think if you are holding from a 3 to 5 year horizon, then I think the wealth can be created in Allenbury Gases. So from my perspective, they can hold further. If anyone want to add on these levels, they can add further.
Right. Well, the next query is from Karthik Kumar from Bangalore. He's holding IDFC First Bank 125 shares, which is bought at 85 rupees. And shares, if you see, is down almost 30% as of today. So he's asking, does he require to hold, or since Haryana government has already empaneled this bank? Gaurav, what's your view on this counter?
That news came in, the stock witnessed steep hammering, and yes, it has corrected reasonably from the buying price of the viewer. I think he should hold on to the position now. The stock is at 60, and I find the stock should take reasonable supports around 55 and 52 zone. So hold is the advice here.
The next query is coming in from Siva from Amravati. He's holding 1,000 shares of Hindustan Aeronautics, bought at a price of 5,050 rupees. He wants to know whether should he continue to hold this counter or sell in the next 6 months. Gaurav, any view on Hindustan Aeronautics?
Absolutely hold. From a next 6 months perspective, I see it heading towards 4,200, 4,300 zones.
Right. Next query is from Animesh from Kuala Lumpur. Well, it's about JK Lakshmi. He has 144 shares at rupees 687. Should I average it down? Gaurav, what's your view?
In the light of the recent updates that we have seen, a 20 to 50 per bag price hike is likely within the cement sector, and JK Lakshmi will also announce the same. Also, the stock has corrected reasonably, and now it is available at attractive levels. Hold and add is the view from my side.
Okay. The next caller query is from Andhra Pradesh. Prasad, you can go ahead and ask your query.
Sir, my query is Ashok Leyland, sir. Last week I have sold out at 147. Re-entry levels, sir. Tell me the re-entry levels.
And this is for short term, I believe, right?
Yes, sir. For long term, sir. For long term.
Okay, long term. Mahesh, should Prasad buy Ashok Leyland at current levels?
think if from a shorter term prospect, I think they can accumulate in these level, not in one shot. So accumulation can are advisable on the for a circular.
Right. Next query is on Tata Motors, and Mahesh, this is for you. Umesh from Bangalore is asking, he's bought Tata Motors PV at rupees 357.98. Should I average it or sell for long term 10 years plus? Mahesh?
I think they can accumulate further on these level because I think stock has a much more potential in the longer term horizon. So it's advisable to accumulate slowly in the Tata Motor PV.
Tarkaram from Tirupati wants to know whether is it a good level to buy latent view. Gaurav, any view on latent view?
Samit, in the previous trading session, latent view went up to hit the upper circuit 20% mark. It is, a little bit of profit taking is witnessed in today's trading session. I think if the stock is available at 285 today, then only one should consider a fresh entry. Otherwise, it is better to avoid.
Okay.
Right. Well, the next query is from Shushila. She's asking, she has MRPL shares at rupees 179. Please tell me short-term targets. Gaurav, what's your view on that?
Very attractive at current levels. Short-term targets are 200 to 210.
The next query is from Chennai, where Vijay is holding few shares of Cummins. Again, he wants a short-term target on this. Gaurav, any view? Cummins?
We are positive on the entire capital goods segment. Cummins has performed really well. Currently also it is looking good. A flag and bolt pattern is clearly visible. Results are pretty much upbeat. He can consider adding even at current levels. Take a stop at 4350.
Right. Well, before we move on to our next query, it's time to dive into the FNO market setup and the cues shaping trade today. Let's bring in Sharad for more details.
Well, we are getting a mixed signals, but nevertheless, there is a good bounce back coming in from the markets. But from the other hand, Reliance is being a big drag. Consumption names back on the Q4 updates and certain BFSI names also doing well in the green. But the concern is definitely Reliance. That's down almost 3%. That is why it's kind of pulling the Sensex down. And also the pressure is coming in the Bankex as well. The India VIX, a mild jump coming, nothing much to be there, but remember 2 to 3 days is very much important, especially on the geopolitical front, and RBI MPC meet also comes in. Let's pull out Bankex and see what's happening here. Seems like the Bankex structure might be a little bit better than Sensex because of the updates coming in. Long build up for the jewelry related stocks. Trent and Kalyan Jewelers, both of them seeing a good volume pickup. Both stocks up more than 5 to 6% short covering seen in Bharat Dynamics and Bajaj Auto as well. Of course, Bajaj Auto has also come out with its March numbers. Long unwinding, no clear trends coming in. I'd just like to point out Astral. This is something where we are seeing a sell-off happening and a reversal of sorts. And lastly, I'd like to point out the important short build-up, and of course, Reliance makes it to the list, and also Force Motors comes here. Little bit of profit booking was also something which we are seeing from the long-term investors. But net, no major trend is coming in the FNO space as of now, as geopolitical tensions and RBI MPC is something which you'll be watching out for. So expect a range-bound movement in the markets.
Thank you, Sharath, for that setup. Moving on to our next query coming in from Bangalore. Shankar wants the view on Bharat Coking Coal. It's a recently listed company. Mahesh, any view on this counter?
I think if anyone want to add on these levels for my longer term perspective, I think longer term perspective more than 2 to 3 years, then they can add further on these levels. I definitely can do very well in upcoming time or a longer term horizon.
Right. The next query is on Grow. Usha from Hyderabad is holding 300 shares of Grow at rupees 150. Can she hold or exit? What's your view, Gaurav?
I'm at large bullish on the capital market space. Therefore, Grow is a hold.
Next query is from V. Murli from Bangalore. He wants to add Ashapura Mine Chem at current levels of 480 for the next 12 to 15 months. Can he expect a 15 to 18% return on this, Mahesh?
They can add gradually. I hope 15 to 20% upside can come in this counter. But yes, from adding perspective, slowly add on accumulation can be done in this counter.
Right. Well, let's move on to our next caller, who's Gaurav from Gujarat. Hello, Gaurav. Welcome at NDTV Profit. Please go ahead with your query.
Hello. So I have 100 shares of Zaggle at 210 price. So what is the technical outlook for 3 to 6 months?
Right, Gaurav, this question is for you for next 3 to 6 months on Zaggle.
Okay. So from a 3 to 6 months perspective, yes, a counter rally and a bounce back towards 300 is pretty much likely. The viewer should hold his position, taking a closing stop at 210. Look for targets close to 260 to 270.
Okay. Okay. The next query is coming in from Gopi Reddy from Hyderabad. He wants to know whether Indigo shares will go up or not from the current levels. I believe it might be for short term. Any view on this, Gaurav?
From a short-term perspective, there are a lot of headwinds that I see. Therefore, not advisable. Only a long-term investment is suggestible here. That too should be in excess of an investment horizon more than 1 year. No short-term advisor.
Right. The next question is on IDBI Bank. Gaurav, this is for you. Anil from Pune has bought 500 shares. He wants to know whether he should hold or sell. Buy prices at 68 rupees and he needs to know 1 month view.
From a 1 month perspective, I think he should utilize any bounce towards 70 to 75 levels to exit his position. The stock has been beaten down very adversely and take a stop at 65.
Next query is from Sudhakar from Bangalore. He wants to know the view on WeWork India. He's been holding 23 shares right from the time of IPO, but the share price have been continuously falling. Mahesh, any view on WeWork?
The stock is continuously down, and if any upside they can exit from the stock. I don't think in a medium term the stock can do very well. So from my perspective, if any upside they can exit from the stocks, and many more stocks are available in low PV, they can look on the sell.
Right, with that, it's time to start our first rapid fire segment. So would request Gaurav and Mahesh to keep your answers as short as possible. Starting with Lokesh from Bangalore, he wants to buy Ajax Engineering for a long term. Mahesh?
They can add further in this this level.
Pawan from Andhra Pradesh is asking, is it good time to buy Reliance Industries for long term? Mahesh?
Yes, Reliance Industry looking promising in longer term horizon, not for medium term, but yes, longer term horizon they can add on this level.
Ramu from Andhra Pradesh is holding a few shares of Airtel. Should he add more or book losses, Gaurav?
Add more.
Murli from Bangalore is asking to add Ashapura Mine Chem at current level of 480 from 12 to 15 months. Mahesh?
Yes, they can add further on these levels.
Azim from Guntur is holding shares of Excelsoft Technology. Should he hold or exit? Mahesh?
They can hold from a longer term prospect.
Right. On JK Lakshmi, 144 shares at 687. Should she average it?
This is.
Yeah. Mahesh?
Yes, they can accumulate in lower level if anyone they are getting. From the current perspective, wait and watch can be better. In lower, they can accumulate.
Anil from Jalandhar wants the view on Union Bank. Gaurav?
Yes, stock is looking promising at current levels. Take a stop at 165, hold your position, add above 180.
Right, Kavita from Australia is asking, she's bought Pidilite 200 shares at 1,470, short-term 3 to 6 months view. Gaurav?
Some more jitters are likely if crude continue to rise, more downside is possible. Caution is advisable at current levels.
Anil from Guntur is holding few shares of Aarti Industries, currently sitting on a loss of around 40 to 50%. Should he continue to hold or exit? Mahesh?
These level we are not advising from booking losses. So if anyone want to add on these level, they can gradually add. 30 to 25 to 30% upside can come in the 12 to 18 month perspective. So from that perspective, they can add further in lower.
Right. Azim is asking, he's holding Excelsoft Technologies, average price at 126. Should he hold or exit? Mahesh?
Can hold.
Mukund from Bangalore is holding 1,000 shares of Prestige Estates, bought at a price of 1,510. It's been falling. Should he add or sell? Any view on this, Gaurav?
Exit.
Right, Siju from Qatar is asking, he's had 80 shares of Coforge at buy price of 1,013 rupees. Right time to buy more shares at current price level or should wait? Mahesh?
Yes, they can definitely add on the Coforge, can add in this level. I think longer term or medium term Coforge can do well.
Satyan is holding few shares of Sterling and Wilson. He wants to know the fundamental view. Should he add or sell? Mahesh?
Yeah, slowly, gradually, Sterling Wilson can be accumulated on these level. From a longer term perspective, we are positive on Sterling Wilson.
Well, with that, we end our first rapid fire segment. Thank you, Gaurav. Thank you for joining us and giving us your view. Mahesh, stay on. We'll get more viewer queries post that.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
To understand the Tamil Nadu twist, join me in the midst of our people, language, and politics. Vanakkam Tamil Nadu. Here we come.
When others are warming up, I'm raring to go. The stories that matter, the stories that shape your life.
Welcome back. You're watching Ask Profit, where all your queries get answered through our fundamental and technical guests. With that, let me also invite the second guest to our show, which is Ajit Mishra, who's Senior Vice President at Research Religare Broking. Welcome, Mr. Mishra. Always pleasure to have you at NDTV Profit. Well, let's move on to our next caller, who's Dilip from Hyderabad. Hello, Dilip. Welcome at NDTV Profit. Please go ahead with your query.
Hi, good morning. My query is on Gravita India. Currently, I'm holding at 1650 rupees, around 1,000 shares. I'm sitting at 3 lakhs around loss. So I'm looking for a view. I'm looking for a view on this. I would like to hold at least 3 to 4 years.
Okay, Mahesh, this question is for you. Dilip wants to know about Gravita India for 3 to 4 years. Mahesh, I think you're on mute. Ajit, let's have your view on Gravita India.
Yeah, hi, good morning. So what we are seeing that the stock has been experiencing profit taking phase for almost like 1.5 years. And since he has been holding it from roughly around 1600 mark. So it's still a very reasonable level considering the kind of stock has witnessed a performance in past. We are currently at a very critical juncture. The long-term averages on the weekly charts are aligned close to around 1300, 1320 area. And we are seeing that stock has been trying to stabilize around this zone. Since its time horizon is 3 to 4 years, in past when the stock has experienced a corrective or a consolidation phase, it lasted for several years and followed by a very decisive trend. This time around also possibly it might further consolidate. So near-term outlook may remain sideways to negative. Means close to around 1600, 1800 is the upper band, and maybe around 1200 to 1000 would be the area where it might find support. So as of now, consolidation is more likely, but since this stock is fundamentally sound, he can continue to hold his position with the long-term time horizon.
The next query is coming in from Anwar Basha from Vijayawada. He has bought 236 shares of CDSL at a price of 1,701 rupees. Should he add more or continue to hold what he has? Ajit, any view on CDSL?
So Somit, we are seeing that capital market related counters after this declining phase are trying to witness some bit of a stabilization. In fact, BSE has been doing exceptionally well, which is almost on the verge of retesting its record highs. CDSL, after this retest of close to around 1100, 1120 area, the last swing low also coincides with that zone. So yes, he can look for adding more at current levels with 1050 as a stop loss. For fresh momentum, we need a break above 1250 mark. So once we see that, then probably 1350, 1400 is something that the stock might test in the near future.
Right. The next query is coming from Sabu from Kerala. He's holding 1100 shares of Texmaco Rail at rupees 170. He's asking whether he should add, hold or exit. Ajit, your view?
So Tex Rail means, in fact, the entire railway basket. We have had this, long phase of underperformance, and still there is no decisive sign of reversal. So in between, yes, due to the oversold position, we might continue to see rebound, like what we are seeing, seeing from the last couple of trading sessions. Still, the stock is trading below its short-term averages. So once we, let's say, surpass 92 mark, then probably the stock might attempt rebound towards 100, 102 levels. So if the view is short term, he can continue to stay put with 84 as the stop loss.
The next query is coming in from Shashi Kumar from Bangalore, and he wants to know whether is it a good price and time to enter Godfrey Philip for the next 1 year. Mahesh, any view? Godfrey Philip?
I think they can add further on these levels. Godfrey Phillips looking good from a longer term horizon. I think this should keep you more than 18 to 24 months. I think the stock can do well in the longer term horizon.
Our next caller for the day is Vinay from Pune. Hello Vinay, please go ahead with your query.
Yeah, good morning. See, I am holding Larsen and Toubro shares, many large quantity since long time. It has corrected from 4,400 to around 3,600 now. So my question is, how long can I hold it for 1 year or 2 years, and what would be the target? And second is, whether can I replace it partially by any other semiconductor stocks?
Mahesh, what's your view on that?
See, the Larsen is basically down from higher side due to Middle Eastern concerns. So I think they can hold further in longer term horizon. Price is already beaten down. If you're far escalating, so then stock can read it further and stock can up more than upside. I think 4,500, 4,600 level could be achievable in a longer term horizon. From my perspective, they can hold Larsen. If anyone want to add on these levels, slowly they can add further.
The next query is coming in from Shivakumar from Bangalore. He is holding shares of Central Bank, currently sitting on a loss of 10 to 15%. Should he continue to hold this, Mahesh?
They can hold further.
Right. The next query is from Piyusha Kanodia. Well, she's asking, she's holding 210 shares of PG Electroplus at 542 rupees and currently incurring loss of 18%. Should she hold, average or exit at current juncture? Mahesh, what's your view on that?
If any downside, they can accumulate in PG Electroclast. If from a longer term perspective, I think 640, 650 level could be achievable easily. After that, they can review further. From current view, they can add in the any dip.
Ismail from Hyderabad is holding few shares of Suzlon, around 500 shares, bought at a price of 42. Mahesh, outlook for the next 3 to 5 years on Suzlon?
Definitely, company is doing very good. Balance sheet has improved a lot in last few years. So order book is also good. So I think if anyone holding from a longer term perspective, Suzlon is very good. From mid-term perspective, stock can consolidation can be done in the stocks, but yes, after 50 to 55 level, we can see some more upside. So from longer term perspective, yes, Suzlon can be added on these level, and if anyone have, they can hold further.
Right. Well, the next query is on HBL Engineering. Investor want to know the entry level and is it good time to enter? Well, Ajit, what's your view on that?
So HBL definitely is among the top performing names. Means though the stock has retraced considerably from the record highs, but comparatively, the structure still looks positive. Means short term, it might continue to face pressure on rise close to around 700, 750 area. But broadly, if you see that since the trend was almost vertical in the past, so it's just time-wise correction that the stock has been experiencing. So in my opinion, he can continue to stay put. 600 should be the closing stop. Once we, let's say, surpass the 750 barrier, then probably the stock might edge toward 850 to 900 levels. So he can continue to hold at current levels with 600 as a stop.
Okay, viewers, before we go on to our next query, you can call in us on the numbers that has been flashing on your screen, and we'll take your queries live with our guests. So do call in on the numbers that is just flashing on your screen. The next query is coming in from Ravi from Mumbai. He wants to know, at the current market scenario, from medium term, which is the best pick in the pharma space. Ajit, any view here?
So large cap names, Amit, they are doing largely well. It's just that we were seeing a bit of a profit taking last week. The pharma index was down roughly around 3.5%. So it's a normal profit taking that we are seeing after retesting the record highs of 2-week high in most of the names. I believe that Lupin is one such stock which after retesting its record high is witnessing a bit of a consolidation. So it's a good opportunity to accumulate. So in this range of around 1170 to 2270 to this 2200 mark, it's a good area to accumulate. 2100 on the closing base should be a stop loss. And above 2400 mark, the stock can inch toward 2700 plus levels. So the risk reward is still favorable. He can continue to look to accumulate on dips.
Right. Well, the next question is from Bangalore, from Mr. Govida. He's bought 200 shares of large revenues, that is Exico, at average price of rupees 189.5. Can he hold for next 6 months? Ajit, what's your view?
Can you please repeat the name?
Yeah, it's La Transverence, Exico.
See, if I'm not wrong, it's a penny stock, and we usually don't track such stocks, so I can't comment.
Okay, the next query is coming in from Baburao, and he wants to know whether can he make a fresh entry into IRB for long term. Mahesh, any view here?
See, the valuation are there, and if you are looking from a IRB perspective, stock is just trading at 20 level. So I think 24 to 25 level can be achievable in longer term horizon. Stock has values, so they can hold further from my perspective.
Right. Well, the next query is from Vinay, who's from Pune, and he wants to invest 20 lakhs in semiconductor, data center, defense, and alternative energy and AI stocks. Any recommendation, please? Mahesh, what's your view?
See, from a defense perspective, BEL, HAL, BDL are good advisable on these level. From a semiconductor perspective, many more names are like Anantraj in data center story. Anantraj is preferred. So from this sector perspective, yes, they can go ahead and invest in this sector.
Okay. The next query is from Karthik from Hyderabad. He has bought 15 shares of ITC at a price of 633. Should he buy more or average or sell? Any view on this, Ajit?
Sumit, we are still seeing that stock has been gradually drifting lower with every passing week, though the pace of decline has reduced a bit. Volume have also dried, so maybe we might see a rebound attempt. Since the overall trend is negative, I wouldn't recommend to go long at current levels. In fact, in case of rebound, a 300 is going to be the critical area to watch out for. In case if the stock fails to recover and sustain above this mark, you can consider exiting his position on rise.
Right. Well, the next query is from Heyman Jethwa, who's from Pune. He's had 200 quantity of Ola at rupees 24.76. What's the target and stop loss? Ajit, what's your view?
So after this prolonged, underperformance, we are seeing the stock has been experiencing a rebound from its record lows area. Of late, the stock has already witnessed a decent recovery. Means we are very close to the resistance mark. So since we have bought it at 24, at least partial profit can be booked at current levels, and for the remaining, he can maintain a trailing stop at 27. The next target could be close to around 33.
Okay, the next is a caller query coming in from Bangalore. Vikas, you can go ahead and ask your query.
Hello, hi, good morning. I'm having Poly share 46 quantity at the rate of 2282.
Okay.
So I want to know, can I hold it for at least 1 year or is it okay?
Okay. For the next 1 year, Mahesh, any view on Polymed?
Polymed counter is good. If anyone want to add in lower levels, that is advisable. So from my perspective, in longer term, they can hold. If you are looking from an add perspective, then add gradually on this level.
Right. The next question is from Abhishek. He's asking on Hutco. He's got 281 quantity at average price of 254 rupees. Should he hold an average from long-term perspective? Mahesh, what's your view?
From Hodupco perspective, I think they can add on these level. Hodupco looks promising on these level. So stock can do well in longer term horizon. Yes, they can go ahead for add.
Okay. The next query is from Jai Krishnan from Kerala. He has bought few shares of Galaxy Surfactant at a price of 2015 rupees. Should he continue to hold this counter for the next 6 to 9 months? Ajit, any view on Galaxy?
So the stock has been experiencing consolidation after this phase of decline. So probably it might consolidate further. So if the view is very short term, he should avoid. In case if the view is long term, he can continue to stay put.
Right. Well, the next question is on Godrej Properties. Satish from Bangalore is asking, is current price okay or any levels for purchase or any other share in realty sector? Your advice, Mahesh?
From Godrej property, specific looking counter, that is levels are okay. I think 1,500, 1,570 range could be accumulation range. So if you're looking from a longer term perspective, yes, stock has a valuation. We are positive on Godrej properties, so they can hold further on these level. If you want to add, if any dip from these level, they can add further.
Okay. The next query is coming in on from Rajesh, and he wants to know whether should he buy IEX, that is Indian Energy Exchange, for long term. Mahesh, what's your view on IEX?
I think IEX is not looking promising from a longer term perspective. So if any dip from these levels, then they can look for the same. But yes, from a longer term perspective, I don't think so much more valuation can be done in IEX. So from longer term perspective, we do not advise on IEX. But yes, in the medium term, if any spike or if any changes, they can look on the from trading perspective.
Right. The next question is on CMPDI, the recent IPO. Well, Arvind is asking, is it a good buy in the long run? The IPO has slided by over 15 rupees on the opening day, bought 240 shares at IPO rates. So, Mahesh, what's your view on this IPO?
Recently listed counter, I think they can hold further from a longer term perspective. Company's fundamentals are good, and stock is available at 150 range. So I think the stock can do well in the longer term horizon. From that perspective, they can hold.
Okay. The next query is from Karthik Murugan, and he's holding 15,000 shares of PC Jewelers at a price of 13 rupees. The stock is now trading around 8 rupees. Should he continue to hold or exit? Any view on this, Mahesh?
I think if any upside nearby 10, 11, then they can exit from the stocks and can buy your like counter like Titan. So from my perspective, exit on high.
Well, let's move on to our next caller, who's Purav from Pune. Hello, Purav. Please go ahead with your query.
Question is regarding the power sector and power ancillary sector. Is the fundamental analyst is bullish on the power and power ancillary sector? The second is I hold BBL, Bharat Bijli, from long time, more than a decade. So I have seen a top of 5,500. Presently it is hovering around 2,100 to 2,200. Now it's almost one-third of the top, from the top. So what is the view of the fundamental analyst on the particular stock?
Well, Mahesh, this question is definitely for you on Bharat Bijli and overall your view on power sector, considering a huge loss to Purav when it comes to Bharat Bijli.
Definitely, BBL has a much more downside from higher level. But if you are holding from a longer term perspective, I think they can hold further. If anyone want to add, then they can gradually add on these level. Stock can do well in a longer term horizon. I think a 2 to 3 year horizon minimum need to kept on these stocks. But from sector perspective, I think power sector we are preferring power sector. Power grid are looking good. If your PFC are looking good. So from power sector perspective, yes, we are bullish. So if you're looking for power sector perspective, you can go ahead and buy some stocks in power sector.
Sarun from New Zealand has around 1,000 shares of IDFC First Bank, bought at a price of 70 rupees. What is the short-term view on this, Ajit?
So after this sharp cuts, Sumit, we might see a bit of a breather, means a rebound attempt towards 63, 64. And since his view is short term around that area, he can consider exiting his partial position. And for the remaining, he can maintain a trailing stop at 60. Once, let's say, we surpass this hurdle, then probably around 70, 72 is something also that the stock might attempt. So as of now, it's a hold with 58 as a closing stop, and close to around 64, 65, he should review his position again.
Right. Well, the next question is on LIC. User bought LIC at 43 shares of LIC at 950 rupees each, which has gone to 1100 now at 750. Should he hold, sell, or book loss? Mahesh, what's your view?
LIC has in a longer term, if you're looking from LIC perspective, LIC has a good value in longer term horizon. If you're looking from add on these levels, definitely they can add, I think 1150 to 1200 level could achievable in 12 to 15 month horizon. So our perspective on LIC, we are bullish on LIC. So on these levels, they can hold. If anyone want to add on these levels, they can add.
Okay, the next query is coming in from Jeff from Goa. He is holding 810 shares of Ashok Leyland, bought at a price of 198. Should he continue to hold this counter or exit? Ajit, any view?
So this correction is sharp, when it comes to Ashok Leyland, because in past we were seeing a very steady uptrend in Ashok Leyland, Sumit, and after this correction, though, we are seeing a bit of a stability in the auto index, and that is what reflecting in the Ashok Leyland price also. Volumes are still high, during the down days, so it's not a good sign. So let's the stock to stabilize. Around current levels means close to around 140, 135 zone is what we are seeing at the next support area. So that should be the stop loss zone. And in case of recovery, the first level could be close to around 165. So as of now, it's a hold with 135 as a stop loss, and use recovery towards 167 to 172. Review your position.
Right. Well, the next question is from Arun. He's asking, is it right time to add Avenue Supermart, planning to invest 1 lakh? Ajit, what's your view on this?
So after this, prolonged corrective phase, means the stock has spent roughly around 5 years in this broader consolidation range, and off late it made a higher low on the weekly charts also, and post that it's a noticeable price action with volumes. So this indicates a potential of a decisive uptrend unfolding, and at least a retest of the previous swing highs close to around 4,800 to 5,200. in the coming weeks. So as of now, yes, it's a hold with 4,200 as a closing stop loss, 4,800 to 5,200 targets.
Krishna from Chennai is holding 600 shares of Utkarsh Small Finance Bank, bought at a price of 56. Should he continue to hold or exit, Mahesh?
On higher level is a good advice in customer finance bank.
Right. Well, the next question is from Kanan. He's holding 1,000 shares of ITC accumulated over 5 years at an average price of 340. Should he purchase more at current level? Long-term investor. What's your view, Mahesh?
I think ITC has a much more valuation from a longer term perspective. On these level, P is reasonably valued. So from these level perspective, I think ITC can be added on these level.
Savant Prashant wants to know whether should he buy SBI from for the next 1 year, from the next 1 year perspective. Mahesh, should he?
Yes, definitely. SBI balance sheet much more improved. I think stock can do very well in upcoming time. So from SBI perspective, yes, we are bullish. I think a 1,150, 1,200 level could be achievable easily. So from these level, yes, SBI is preferred.
Right. Well, the next question is on SBI. Savant Prashant is asking whether he should buy SBI to... Okay, then let's move on to the next query. I think SBI, we have covered it. Well, Anikesh from Karnataka is asking, is it right time to invest in JK Tyre for long term for 4 years? Mahesh, what's your view?
Accumulation can be good idea in JK Tyre from any downside from these level. As situation are not preferred good for tire company, so any downside they can look on the same.
Okay, the next query is coming in from Sankara Ramayan from, okay, in fact, he's a retired AGM of SBI. He's holding around 75 shares of Chola Finance at a price of 1,498. He's a long-term investor. Any view on this, Mahesh? Should he continue to hold Chola Finance?
Definitely, they can hold. Chola Finance doing very good, so I think they can hold further from a longer-term perspective.
Right. Well, the next question is from Vijay. He's asking, what's the medium-term view on HDFC Bank? Need to switch to Axis or an ICICI Bank? Mahesh, what's your view?
See, if you are looking from a private sector banking, all three counter are reasonably valued. From current level, medium term perspective, I think Axis can do well from these level. As a technical setup, our Axis is positive. So from technical medium term perspective, yes, Axis can be looked. After that, Axis ICICI is preferred.
Okay. Okay, the next query is coming in from Achal, and he has bought Tata Tech shares, around 30 shares he's holding from IPO, but the stock has been falling. Should he continue to hold this, Mahesh?
I think stock has down much more from higher levels. So from these level, if your horizon is more than 2 to 3 years, then they can hold.
Let him start.
Okay, we start our second rapid fire segment. Mahesh and Ajit would request you to keep your answers short, to buy, sell or hold. Starting off with Abhin from Kerala, he has few shares of Tata Power. Should he buy or average here, Ajit?
Hold.
Right. Well, holding 1,600 shares of Blue Clouds at rupees 20 each, at 20 per share. What's your view, Ajit?
It's a penny stock, please avoid.
Okay, let's skip that. Let's take in the next one. Akhil wants to know whether is it a good time to enter Eicher Motors for the next 2 to 3 years. Any view here, Mahesh?
Definitely, they can add on these level from Eicher perspective. If any dip, they can add. From a longer term perspective, I think Eicher can do well from these level also.
Well, George from Cochin is holding 500 shares each of HDFC and ICICI Bank, and he wants to sell any one of two. Which one should he sell? Mahesh?
All these counter can be hold, but yes, if you're looking from an exit perspective, HDFC chart slightly weak compared to other counters, so they can exit from HDFC.
Nitin is holding 40 shares of IRCTC at a price of 265. Should he add, hold or sell? Ajit?
Hold.
Right. Vanita Bala from Kuwait is asking HDFC AMC or Nippon India AMC to buy for long term for 5 years. Mahesh?
I think Nippon can be added on these level. Nippon, I think really looks good from a technical perspective as well fundamental. So from my perspective, they can add in Nippon AMC.
Okay, Simon wants to know whether can he buy Bliss GVS Pharma for long term. Mahesh, should he buy?
If any downside, because the stock has done really well from 160 to 230 level. So if any downside nearby 210, 220 range, then they can look on the same from a longer term perspective. In 270, 285 level could be achievable.
Right. Well, Mohit has got 500 shares of restaurant brand Asia. Can he buy more to reduce his purchase cost? Time horizon is 3 years. His purchase cost is 106. Mahesh?
Yes, definitely. If any downside, then they can add.
Mahalakshmi from Hyderabad is holding 100 shares of Gabriel India. Should she add more for the next 1 year, Ajit?
She can add more, but maintain a stop at 780 for the entire position.
Lalita is asking, is it advisable to buy consumer durable shares at this moment, TTK Prestige or Stovecraft? Which one is a good buy? Mahesh?
Stovecraft can be added on these levels.
Ravi Shankar from Bangalore is holding 36 shares of Hyundai, bought at a price of 2,189, currently sitting on a loss. Ajit, should he book losses?
Rather, he should hold and use recovery to reduce.
Well, right. It's well. Thank you so much, Mahesh and Ajit, for joining this conversation and having, our viewers, helping our viewers for the queries. But viewers, it's time to wrap this edition of Ask Profit. Stay tuned to NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
To understand the Tamil Nadu twist, join me in the midst of people, language and politics. Vanakkam Tamil Nadu. Here we come.
When others are warming up, I'm raring to go. The stories that matter, the stories that shape your life.
Hello and welcome to watching Prime 5 with me, Raisha Sehgal. What's happening? How to
The show that sets the prime time agenda.
We'll be deep diving into this topic to tell you what's at stake.
Join me, Raisha Sehgal, on Prime 5 only on NDTV 24/7.
Hello and welcome to KYC. I am Sharath Dubey and you are watching NDTV Profit. Let's start the show. I'll give you some hints about this very interesting company which I have got. And also the first one hint is it's a pet waste recycling company. You heard it right. It's a new industry. Let's get in more details about it. The second hint I would like to give you is a big government boost and was announced, and that's why there has been a good rally in the stock. Highest ever volumes were seen recently in this, and you will be surprised the stock is up more than 62% from January 2026 lows. Very interesting company, but I would like you to understand what the company is all about, and the company's name is Ganesha Ecosphere. But apart from this, let's also talk about what are the key important developments coming in for the company and why are we calling this company. Is company mein khas kya hai? That's the main question. It's a small cap company, but I'll get you more details about it. The new government mandate on recycled PET, will it accelerate the adoption? And if that happens, will it benefit this company? Of course, this is one of the larger players in India in this segment. Of course, the market share and the key triggers for growth, what are those, especially on the capacity expansion, is something which I would be watching out for, especially the Odisha plant. Of course, the impact of elevated crude prices on the raw material and sourcing, is it impacting the company or the spreads which are increasing actually benefiting the company? We'll be having a watch on that. The expansion and growth plans, especially on the Odisha plant, that is what the street wants to know. By when will it be completed and how much incremental benefit will be coming to the numbers? Capex plans going ahead and the capacity utilization. How much are the current capacity utilization standing for the company? These are the important questions we'll be asking for Ganesha Ecosphere. And overall, the margins growth outlook will be also important because the margins have been under a pressure, and let's see if that has bottomed out or not. And the big question is on the ROC improvement, because the company is focusing on high margin value added products. And to give us more perspective, Yash Sharma would be there. He's the director at Ganesha Eco Pet. Now, this is the 100% subsidiary of Ganesha Ecosphere, and a lot of action is happening in this subsidiary. So that's why we have taken this subsidiary's spokesperson to give us entire perspective. So Yash should be there with us, joining us later on. But company करती क्या है? कानपुर की company है ये, Ganesha Ecosphere. Interesting name. Very modern, to be honest. The company is, especially, but look at the foundations. It happened in 1987, so it's not very old also. The thought process, it was there from 1987 onwards, so very nascent industry still now, I would say. Recycles over 16 to 18% of India's PET bottle waste. That's so much important. Ganesha Ecosphere is his 100% subsidiary of Ganesha Ecosphere, where we'll be discussing about the company and also the legacy businesses as well. The new business, Ganesha EcoPet, is your pet for packaging mandate related. So this is what the overall view is for this arm. The manufacturing units are there in 3 places, Kanpur, Rudrapur and Bilaspur. So it is separated properly, at least for the sourcing on this space as well. Apart from this, let's look at the cumulative capacity, and that's strong, 118,800 tons per annum, likely to go up on the next 2 years. We'll have our eyes on that. But आगे क्या करते हैं? Customers, Coca-Cola, PepsiCo, HUL, Bisleri, Asian Paints, anything which is bottled, which gets crumbled, gets processed, then it comes under various fibers and yarns. This is how simplifying this entire story of Ganesha Ecosphere is. These are the key customers you should be watching out for. And going ahead, what has actually been there? This product is used where? It's used in manufacturing of textile related products and fillings. This can be your everyday wear, this can be technical textiles, and Q3 numbers were but very disappointing. The standalone business was offset by the down growth in the arms operations as well. Some
kind of issues were there in the capacity utilization, especially on the Warangal plant. Group's filament yarn recently qualified with a leading global textile brand, and this augurs well. More and more global textile players come with them. This augurs well for the company. So it's a mixed kind of a views coming in the Q3 numbers. Capital utilization of Warangal business, that's where it declined to 50%. Of course, impacting the sales also, and the margins, single digit margins the. Will it change? That's the big question. Sales number also was impacted. So Q3 was not that great. But of course, we'll check the history also of the company, how things are planned out. And the most important thing and the trigger of the stock is the extended producer responsibility. Look at the recycling targets which has come in. These are the 4 segments: plastics, packaging, multi-layer and compostable. Look at the overall headroom which is there going ahead, and this is the FY29 use target coming in. This is for, of course, the reusable components. If you could just show the other key targets also, this also includes the reusable target of 25% for rigid plastics. So जितना ये target बढ़ेगा, जितने segment की मैंने बात की, उतना company को फायदा होगा. This is how simplify you can do that. But is the company in a sweet spot? Yes, it is. First mover advantage in PET recycling, that's what is there. Secondly, the regulations are turning favorable for Ganesha ecosphere. So this is very much important, benefits a lot from it. Also, the third important reason is a significant volume-based buying was there last week, and you could say this was almost the record level of momentum happening. It has a better integration and expansion plans compared with the peers who are there. Largely, they are in the unorganized space, but nevertheless important. Valuations remain comforting. इसका भाव 2000 के ऊपर था. Of course, अब जो है 1000 के पास आ गया भाव. So still valuations are comforting. So this is why Ganesha ecosphere is in a comfortable spot, and maybe from current levels also there might be alpha. But to give it more perspective, we'll have our 8 rating parameters in KYC, जहाँ पे हम आपको बताएंगे आपके income statement, balance sheet, cash flow, how do they work, return ratios, is it good, bad, or will it improve, and also shareholding pattern, how things have changed over the last 3 to 4 years, street cred, how much money has been made, and of course congratulations to folks who have recently invested in the stock, good up move coming in. Valuations will compare the company with itself. We just want to give an apple to apple conversation and the outlook, especially on the industry tailwinds and what company is doing. So all of these 8 rating parameters will judge Ganesha ecosphere. The first one is income statement. Let's look at that, and the numbers are pretty decent. FY23 से 25 के 3 year CAGRs देखेंगे तो largely we see 13% revenue growth coming in, but वही EBITDA and PAT has been decent, but there is a little bit of disappointment. Where is the disappointment? That's in the third quarter. That's why we saw a big sell-off happening post the numbers. YOY basis, the revenue, EBITDA, everyone tanking, and the biggest concern for me and for a lot of investors was a single-digit margin, 8.64. And if you just highlight the margin trend also, we'll see that's where the disappointment comes in. हर बार 10 से लेके 15% का एक margin band है. But now that has gone down to 8.6%. Of course, sequentially, there was a little bit of uptick, but has the margins bottomed out? That's the big question we'll be asking. And by when can we get the double-digit margins? That is where the street is concerned about the stock. But net to balance things out, it's a neutral rating when it comes to the income statement. Let's talk about the balance sheet, how important this is. Yes, the borrowings have gone up. Company is going for an expansion. We can understand about that, but net, the debt equity ratio for this company or in the industry is still stable. Cash bank balance is also healthy at 122 odd crore rupees. So net, we could say that the balance sheet is having a neutral rating as of now. So we spoke about income statement, we spoke about balance sheet, but cash flow is very much important as well. There is a little bit of lumpiness involved in this business as well. But net, the cash flow from operations and the PAT has been done well. The conversion is decent. And if you look at the net cash flows coming in, remember investing and financing activities is also very much important. So there will be lumpiness if you study a cash flow for a company like this or even an industry like this. But this time it's doing well as of now for the FY25 data. But let's keep it neutral when it comes to the cash flow segment. Now let's move on to the return ratios, and of course the ROC numbers I have taken. Largely in this kind of a business, the legacy business is there, so आपको ज़्यादा ROC मिलेगा नहीं, 10 से 12% का ROC मिलेगा. But as and when we see things moving to the value-added segment, that is where the ROC starts changing. Currently, they have 40% value added, they're aiming 65%. Then we can expect a 14 to 15% ROC business. So right now it is decent. Little bit of recovery has come in FY25, but really will it be a 15% ROE business? Only time will tell. So right now, it's a neutral rating. Let's talk about shareholding, how much things have moved around, and largely from March 24 onwards, promoters have taken stake, and that's what we have seen, that up move also coming in after that, especially in the mid of January. That is where the stock started going up. Of course, there is a relation with crude also. We'll try to understand spreads mein kya fayda hota hai, but FIs they have sold, but promoters have taken, and the DIs have been pretty much stable. But recently, last week, there was a massive volumes coming in, and guess what? There is some institutional buying coming in, and on that basis, I would like to give a strong thumbs up to shareholding. So interesting names which we have talked about. And let's talk about the street cred, how things have moved. And of course, congratulations to the folks who have entered the stock in the last 2 months. You have made a lot of money. And of course, see, from the January, almost you could say February 26 or January lows, it's up 62%. So congratulations on that. But over the last 1 year itself, despite this up move, the stock is still down 26%. 2,000 rupees share price is something which we had seen earlier, but then there was a big sell-off happening. And the last 5 years, if we talk about it, that is also, stock has given a decent return. It's almost up 90% even after the correction as well. So it's pretty much important to track. And street cred, I would like to give this a neutral rating as well. So street cred is done. Let's talk about valuations. And in our valuations, I've taken the 12-month trailing P ratio. So there was the euphoria regarding this recycling theme 2-3 years ago, and the 5-year peak, look at that, 135 times. But after that, normalization happened of the industry. There's of course a lot of dynamics at play for a company like this, and there is a gestation period as well. And the 5-year average was 49 times. And even after the up move which has come in the stock is still trading at 27 times. It's a 12 months trailing P ratio. That means valuations are now also pretty much there for a re-rating, and they look attractive. So net, when it comes to the valuations, I'll be giving this a strong thumbs up as well. Let's talk about the outlook. Outlook is very much important. This is one of the reasons why I've got this company in KYC, so that you understand where the future is lying. The government's new PET mandate to accelerate its adoption, that is where the trigger has happened. And a lot of other factors are coming in. The second one I'd like to point out, the key outlook, is the increasing PET granules capacities, which the company has already announced in its exchange filings. When does this happen? When is the completion of it? That is what we'll be looking out for. The third important thing in the outlook to look at is the target revenue contribution of the value-added products to 65%. Currently, it's around 40%. And if that happens, your margins and the ROEs both improve going ahead. Apart from that, the capitalization on the regulations, and one of the few companies to have a large B2B unit, they have backward integration also. So the moment this industry goes up, the benefits and the higher market share gains is something which Ganesha Ecosphere will have. And that is something which I will also be focusing on, but it takes time. There is a gestation period to it. Nothing happens so fast in this industry, and that's what we have seen. So we see a strong thumbs up coming up for the outlook. But let's revise the KYC ratings. What numbers we have given? Kya ye company pass hua hai ki nahi? That's the big question to be asked. Of course, the numbers we see were pretty decent. Income statement, balance sheet, cash flow, return ratios. It looks very stable, but nothing out of the park. Neutral rating. Let's see what else is there here where can get some value out of our analysis. This also includes the shareholding. That is where the volumes are picking up, promoters are buying stake in the company, valuations are very much sustainable right now at these current levels, and there might be a re-rating. And the outlook, that is where the alpha is there, especially where the government mandate has started coming in, and after the stock being beaten down, there is a good up move coming in, especially technically, and that is why we have given this company a final rating of 5.5 out of 8. It's largely it's neutral to positive, but it's a very developing story, and we will be judging this company every 6 months to understand what happens and to put everything in perspective. But joining us to give us more flavor of the entire company is Yash Sharma. He's the director at Ganesha EcoPet. I would like to Welcome, Yash. Good afternoon, Yash. Always a pleasure to have you. The most important thing why I'm very much interested in Ganesha Ecosphere is the government's central mandate which has come in, where the increase is there of the key products. Just explain us the government's mandate and how much beneficial it is for Ganesha Ecosphere.
Hi, thanks. Good morning, everyone. Thanks for having me here. And yes, definitely, after the government's new mandate that has come into picture, actually the mandate was in place last year itself to have minimum 30% recycled content in all rigid packaging applications. But there was a lot of confusion. A draft came out in the middle of the year in June, after which the usage of recycled plastic by a lot of converters and brand owners was delayed or stopped. There was a lot of confusion around the mandates of what's the new mandate's going to be. So finally now on 31st of March, the government of India has released a new mandate where it has stated that for 2026 to 2027, 40% recycled PET, recycled plastic has to be used in category 1 applications. And along with that, the last year's requirement of 30% has also been carried forward and is to be covered in the next 3 years by doing minimum 1/3 of every year. So which will be basically going to create an environment for a very high volume demand for the recycled plastics. And it will also obviously help us, Ganesha Ecosphere being the largest in this space currently in India and the biggest organized player in this space. We are already working with so many brands, so we definitely stand to benefit massively from this new mandates.
And Yash, just to get in a little bit of numbers, what kind of incremental benefits we can expect for Ganesha Ecosphere and the volume growth outlook? Does this change now, because there was a pressure in your numbers which we have seen in Q3 also, but not, I don't want to talk about Q3 because it's the past, I'm talking about the future, is what is the incremental benefits, and if you can quantify or give me a range, your volume growth outlook or something addition coming in your top line.
Surely. So we have a current capacity of about 42,000 metric tons, which is already fully operational and live. Now, last year, what happened is that more or less from April to December, we have been able to operate that capacity on around 50 to 55 to 60% utilizations on and off throughout the year. That was because there was so much confusion and the demand offtake for the recyclate was not very clear. So this capacity utilization, which was at about 50 to 55% for the good part of the last year, will now be operating at north of around 90% levels because of the good, strong demand that is now there in the market. Also, what we're benefiting right now is, since the virgin plastic prices, because of this Iran war, the plastic prices of virgin has increased by about 30 to 60% based on plastic to plastic. In case of PET, there's an increase of about 45%. But in case of our recycled plastic, which is recycled PET, the price increase was around between 10 to 15% range. So it has also benefited us economically and has led to a big demand creation in the last 1 to 2 months. We think that going forward with the mandate in place, we will be able to operate our existing 42,000 tons capacity at very, very optimum levels of 90% approximately.
Right.
And the new...
Yeah. Right, Yash. Just a query on that. Right now, you're having a 90% capacity utilization coming in. Everybody is wanting to know about the Odisha plant. What are the date lines? What are the capacity addition which will be coming in? Because there was an overhang in the stock because we needed extra capacities to come in, and it takes time in your industry to make things happen. It's not something like happens in 2-3 months. It takes 12 to 18 months, 20 months. There are some delays which we understand. I've tracked the company for the last 2-3 years. But now, what are the key timelines? Everybody is wanting to know that.
So what we had done is we had changed our strategy because of the last year's muted demand. We changed our strategy and we have now divided the capacity expansion into brownfield and greenfield. So we have already upcoming about 45,000 metric ton capacity expansion in brownfield expansion at our Warangal unit itself. And the Odisha plant, though it was delayed last year because of the muted demand, we will now be going forward to take the right decision of how we want to go forward with it. Obviously, now with the mandate in place and the clarity in place from the brand owner side, we'll be going forward and, in the next 2 years, we see that we'll be able to do more greenfield expansions.
Right, and just could you give us some numbers to it? What can that be with Odisha, especially the completion? You said next 2 years. So by when it can get operational?
By FY 27-28, we think it will be operational, the new greenfield capacities.
Right. So it's another 2 to 3 year odd story coming in for Ganesha Ecosphere. Yash, I just want to understand with the raw material pricing, you spoke about the recycled plastic has not gone up as such. But for you, your sourcing costs are also a bit can get higher, right? Because there's a lot of derivatives that play from crude. How much of that will impact on your margins, especially in Q1 or Q4?
So definitely the raw material cost for us also has gone up by 10 to 15%. But then what we do is we have a understanding with our customers in terms of having a pricing formula which takes care of the increase in the raw material prices. So it's obviously during volatile times it's very difficult to manage expectations on all the sides. But once things are stable, I think we'll be able to achieve our healthy margins because we have a very close relationship with our customers to be able to adjust the raw material price fluctuations in the final granule prices.
Right. Of course, the granule price is something which we spoke about. But Yash, just try to understand the margin outlook. This Q3 numbers was below the 10% mark. Your company has double-digit margin history all throughout, and now the dip is coming in. And there was a slight bottoming out if you compare Q2 and Q3. But yes, is it now that we are back to the double-digit margins in fourth quarter, or would you like to wait it out, say, from the second quarter of FY27? Yash, well, I think we asked, yes, I will definitely come to the management, but yes, the margin outlook is something if you'd like to pull up, that is where the concern has happened and stock is down, if you could say almost 9%. Earlier, this was on 10 to 14%. So definitely it's going to take some time. And Yash is back with us. Yash, hi. I just wanted to ask the margins. Will they bottom out in the fourth quarter or will it take some more time? Because there's a lot of uncertainty and there is a pricing pressure across the board.
Yeah, so I think that we should be able to see incremental improvements in the margin profiles going forward with the new demand. Q4 also, I think we should be able to be slightly do better than Q3. Hopefully, it's still under preparation as we speak. But I think we should be. I mean, the volume profile and the offtake was definitely on the positive side. Going forward, also, we think that we should be able to reach our optimum, standard margin levels, which we were targeting earlier as the time progresses. Obviously, currently there is a lot of volatility in the markets and we have to adjust that. But going forward, we think we should be able to perform better from here on for sure.
Right. And what was your target which you have set for the short term for the margins, Yash?
We're looking at the stabilization of the margins in the next 2 quarters.
Right. So stabilization over the next 2 quarters, that's an important take as well. Coming in. But apart from that, any capex plans you have earmarked for this year over the next 2 years? I'm sure there is an expansion plan at play. There is a little bit of debt also on the higher side, which I see is there on the balance sheet. So if the expansion plans are coming in, there must be some kind of a capex. And yes, how will you be funding that? And any debt reduction plans right now or keep it elevated?
So we are obviously going forward with our capacity expansion plans already. And if you remember last year in 2025, February, we had already done a QIP round of about 350 crores and a promoter-led preferential allotment of about 150 crores. So we have already a good war chest ready with us to be able to fund our, forthcoming capacity expansions for now. For the next 2 years, I think we're already sorted.
Okay, so you are sorted for the next 2 years. That's pretty much interesting, Yash. But the important question is the value-added products. So now you have claimed that from 40% is going to become 65%. I'm not going to get the margins in because we have discussed that. The ROC numbers in this kind of business has generally been between 10 to 12%. But now if you move, say, in the next 2 years or 3 years, 65% is achieved. What happens to the ROC numbers? And if you could just give us that feel about your value-added products, how are you increasing the contribution in your total revenue? Yash.
So with the value-added products, we definitely look at achieving of close to about north of 15% ROC numbers in the new value-added products and the high-performance products that we've launched in the recent years. As the shares of these value-added performance polymers goes up for Ganesha, definitely we'll be seeing a we'll be seeing the improvement in the ROC margins as the the product market share tilts more towards the high end products. So we think by that we'll definitely will be able to increase significantly our ROC profile from here on.
Right. So ROC profile, Ganesha Ecosphere is targeting 15% plus. If you're talking about the value-added products, the margins will stabilize in the next 2 quarters. And of course, the demand offtake is coming in, is giving us clarity, especially for your Warangal as well as your Odisha plants. Interesting timelines coming. But Yash, I just want to ask one more question. There are a lot of other industries also which needs recycling, and of course you are part of one of the subsidiaries of Ganesha Ecosphere. I just wanted to understand other subsidiaries of Ganesha Ecosphere apart from Ganesha EcoPad. What are the strategic growth outlook looking like for them? Any legacy businesses also you have? What are the outlook for that? Viewers definitely want to know what else is happening in Ganesha Ecosphere apart from Ganesha EcoPad. So if you could just give us a little bit of light on that.
Sure. So we have a couple of subsidiaries focusing on different, business diversification or geographies or product profile in that, for that matter. For instance, Ganesha EcoPet has launched a lot of value-added products in both packaging as well as textile space. We've launched products which are performance products used for very high-end industrial applications in the Ganesha EcoPet portfolio. Similarly, Ganesha Overseas, another subsidiary of Ganesha, does operations outside of our domestic of India, basically. So we are currently operational in the Nepal country as of today, but we are also trying to find out and secure other avenues where we could potentially expand and create a supply chain for the recycled polymer. So yeah, definitely, I think we are working on a lot of fronts. If you look at from the point of view of PET polymer, from the other plastics point of view.
Right, yes. We are coming short of time. It's a very interesting take coming in from you and clearing a lot of doubts about the company. Of course, the future holds bright for the industry and your company. It's always a pleasure to talk with you, Yash, and we'll track your company's growth very closely. So that's the company I'm talking about, Ganesha Ecosphere, and they make 16 to 18% of PET bottle recycling, and government mandate has put the stock in focus, and promoter buying is also something which we saw. But nevertheless, these are the interesting companies we get for you in KYC. So stay tuned to NDTV Profit for this show.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
understand the Tamil Nadu twist, join me in the midst of people, language, and politics. Vanakkam Tamil Nadu. Here we come.
When others are warming up, I'm raring to go. The stories that matter, the stories that shape your life.
Hello and welcome to watching Prime 5 with me, Aisha Sehgal. What's happening? How to do?
The show that sets the prime time agenda.
We'll be deep diving into this topic to tell you what's at stake.
Join me, Aisha Sehgal, on Prime 5, only on NDTV 24/7.
It was a tepid day of trade on the Lal Street. Nifty lost more than 40 points, while Sensex shed over 190 points. Advance decline ratio is tilted sharply in favor of the advances. As Q4 updates start trickling in, banks continue to repost sluggish deposit growth, while the CD ratio continues to rise. Avenue Supermarts emerged as an outlier in the consumption space with sturdy performance. Trend abuzz after a strong set of operational updates in Q4. Standalone revenue rises 20% YOY, also clocks in more than 100 store additions in the quarter. Sun Pharma under pressure after Trump slams fresh tariffs. Patented medicines will face a 100% tariff entering the US. However, companies can still avoid the taxes by striking deals with the administration. Wipro pulls off a big-ticket win, bags a $1 billion AI-powered transformation deal from the Olam Group for 8 years. Acquisition is expected to close by Q1 of FY27. Hello and welcome. You tuned into Markets at 12. I'm Nisha Poddar. A quick look at the markets at this particular hour. And yes, 22,680 odd points on Nifty 50. So yes, it is down, but only marginally down. In fact, the real picture is in the contribution chart of Nifty 50. Take a look at that. Big boy Reliance Industries is the biggest dragger, losing over 70 points for Nifty 50, and minus Reliance Industries' sluggish move or weakness and loss on that, Nifty 50 would have been in a positive zone. So looking at some of the other components in the contribution, well, HDFC Bank as well as Axis Bank are the ones really taking the lead in terms of contributing. Trend tightened from the consumption space with the overall outlook looking good, is also performing well. Reliance Industries, biggest dragger, losing about 77 points, while Bharti Airtel, M&M, SBI are also on the losing side. When we talk about the sectoral performance, well, it's also remember the crude prices which are really impacting the overall market sentiment as well. And oil and gas space is the one which is the biggest dragger in trade, while defense, a momentum play, a more sentimental play as the war situation really continues, that is the one which is gaining the most. Pharma, of course, because of the new tariff threat really coming in, is also a dampener. Let's take it straight across to Sachin Jasuja, who's the head of equities and founding partner at Century City Wealth Tech. Sachin, pleasure welcoming you on NDTV Profit. How do you read into the market movement where it has been fairly volatile because of various factors globally as well? And last week we saw a fair amount of volatility coming in. This today there is weakness, but with evidence of buying being seen in the market.
Thank you, Nisha, for having me. Yes, we remain constructive on the markets, and we have seen that in last 4-5 trading sessions also, some kind of reshuffling across, you can say, rotation among sectors is already happening. And even if you bake the scenario that earnings may get a hit for forthcoming quarters, or the GDP growth we were projecting at around 7.4% can come down to 6.6, 6.7% looking at the Middle East crisis. But yes, the markets have also corrected, and we see sectoral rotation. A lot of selling happened because of FIA sell-off, and the money is also shifting towards some specific sectors also, so giving us the confidence that valuations are reasonable. And and we have seen in the last previous crisis also, whether it is global financial crisis or COVID, first 1 or 2 months caters to 90% of the selling, panic selling, you can say. And after then rotations happens, and money starts moving towards sectors where the market feel comfortable at that particular time, that yes, the valuations are reasonable and the growth can come in those particular sectors.
Yes, but when you look at the defense sector, Sachin, that has been also a sentimental play. How do you look into this sector and any stock picks at this particular time, and the way the sector has gained because of the Middle East tension sentiment?
See, even if you don't cater, even if you don't factor in the Middle East crisis, and you look at an independent basis to the defense sector now, from last 1 year, I mean, we have been growing in the export side also. The data come just, I think, 2 days back, that the defense export has touched 38,000 crore. In FY 25-26, vis-a-vis almost 20,000 crore in FI. So it was almost 60-70% gain from FY 24-25. So we have been growing, we have been building our capabilities, especially even if you remove the larger names like HAL or BDL, even the other names like Data Patterns, Amta Tech or Bharat Dynamics, those kind of companies have gained huge order books. And yes, crisis supports these kind of names because they give you the structural picture. And one, strong point about defense, that where the euphoria was there in the valuations 1 year back, now the valuations have also corrected. Even though they have grown in terms of profitability, but still, you talk about HA, Hindustan Aeronautics or BDL, so these companies have corrected by more than 30% from the peak, almost 25-30% from the peak. And but yes, the kind of wars which are happening now and in future, I think a lot of electronic usage will be there. The missiles will be different, heavy laden with tech. So the scenario will change, and there will be some companies who will be taking lead into the overall pack. But overall, at a sectoral point of view, I think India can emerge as a very strong play on the export side also, which will make it a very constructive long-term growth play in the defense sector.
All right. And any particular stocks you want to mention which are more favored for an investment?
Yeah, I think some of the companies which are pro-technology and on the electronics management side. So you can say Data Patterns or even solar industries have emerged as a very diversified play into the defense segment. So we feel more comfortable into such place rather than the traditional large companies of defense.
Right. But Sachin, if you really take a look at the market today, Nifty 50 would have been in the green zone, would have been gaining if it were not for Reliance Industries, which is seeing a heavy selling. And it has also touched its 10-month low levels with almost 4% drag on Reliance Industries. How do you really assess this particular counter?
Now, overall, see, Reliance, so there are many moving parts for Reliance Industries specifically. I think it is just the way that sometimes FIA money flows in such a way. Reliance specifically has been very strong in this crisis. Again, a lot of reasons. Geotelecom IPO will be coming maybe in 1 year. You may see Reliance Retail IPO in next 2 years. And these independent company can become 10 to 15 lakh crore company. Right. So Reliance itself is hardly 15 to 20 lakh crore company at this point of time, where majority of the business comes from petrochemical business. Right. So on a various front, Reliance has been a strong stock. But yes, in this kind of a market scenario where the buying is also happening into stocks where there has been huge correction, and they need some stocks where even FIA sell and can start buying in some other stocks. So I think it's a market activity. I don't want to comment specifically on the stock side, but yes, it keeps on happening. But overall, I think we remain constructive on the companies like Reliance Industries, Bharti also. And overall market, there are some segments where the valuations are comfortable, and market will see some pickup of activity over there also.
All right. But Sachin, as you rightly mentioned, there are many aspects that are impacting Reliance, apart from it being a heavyweight and that trade-off that is really taking place. But of course, the Geo IPO is another, and oil and gas impact and crude level impacts are another. But before leaving, Sachin, any particular sectors which are looking at good valuations for investment and an investment strategy view from your end, given that the markets have been volatile?
Yes, I think one or two sectors which used to be cyclical, but now they have become long-term structural stories. You can say every country has realized that energy security is something that you can't get away with. You have to have your energy security. So on that theme, I think the companies who have got power assets or the full value chain of energy side, the transition of energy, so the renewable sector will also play a very key role over there. And I think one segment where India is playing a huge role, it is a data center infra play. So indirectly, you will move towards semiconductor play, where we have already started, making semiconductor chips built up in India. And I think 2026, 27, we'll see a lot of companies coming into this field. The names like CG Power or Keynes or even BEL, kind of companies who are working into this theme. And I think 70 to 80% of the semiconductor demand from India will be catered by these companies. So it can emerge as a huge sector which has already corrected by 40 to 50% and has come down in terms of valuation from maybe 70, 80 multiples to now 40, 50 multiples, but still looks at a very long runway of growth in coming years.
Right. So those are some of the sectors of choice. Thank you so much, Sachin, for joining us on NDTV Profit. All right, let's move our focus to the banking sector, and which has been also gaining the momentum with HDFC Bank and Axis Bank really taking a lead in the market today. So as the business updates really start trickling in, well, my colleague Piyush is here to tell us how the key banks performed this quarter before we get you the word coming in from the management of Suryodaya Small Finance Bank. Tell us, Piyush.
Yes, Nisha, that's right. Banks have posted a strong set of numbers for Q4, which is technically the most busy season for banks. Leading banks have reported double-digit rise in both their loans and deposit book, although the pace of deposit growth remains to be slower than the pace of credit growth, which is also leading for banks' CD ratio to go up, and the RBI may not be very content with that ratio moving up. Bankers tell us that the retail, agriculture and MSME segment has really done well for PSU banks, whereas private lenders have seen a spurt in their gold loans, unsecured personal loans as well in Q4. Bankers say that MSMEs could see a hit if the Middle East conflict continues for a month or two more. In Q1, banks expect a slight uptick in stress in the SME segment. Number-wise, Axis Bank and Kotak Bank posted really saw a strong set of loan growth numbers, whereas HDFC Bank's loans were up 12% and deposits were up 14% in line with the management commentary. Fitch Rating expects Indian banks' margin to fall by 20 to 30 bips in the next financial year, as they see limited flexibility for the RBI to put durable liquidity into the system after the recent efforts that they took in to defend the Indian rupee. Back to you, Nisha.
All right. Thank you so much, Piyush, for getting us all those details coming in on the banking sector and the business outlook. And yes, deposit growth still remains a constraint. But with market fall, looks like that thing may be something to watch out for going forward, because market has been attracting a large part of the savings of the common man. But let's focus on one particular management, Suryodaya Small Finance Bank, which delivered a steady Q4 update. Loan growth remains strong strong for this particular bank, and deposits are building momentum, and CASA traction continues to improve, signaling better funding stability. Well, the focus now shifts on how this balance sheet expansion really translates into margins and asset quality going forward. Let's take it across to Bhaskar Babu Ramachandran, who's the MD and CEO of Suryodaya Small Finance Bank, for more insights. Mr. Bhaskar Babu Ramachandran, thank you so much for joining us, and thanks so much for patiently waiting by while we were talking about the overall business outlook. But looking at your business outlook, there has been a sustained growth and gross advances are up 29%. The entire banking system is faced with one particular aspect, which is the deposit growth is not taking shape as it was earlier. How is this particular aspect really turning out for your bank and from your part of the industry?
Yeah, I think at the small finance bank level, overall, the growth has been comfortable in terms of deposits. And specifically for us, given that the base is around just 14,000 crores, in terms of deposits, we did not have much of a challenge as far as term deposits are concerned. CASA has continued to be a challenge, but however, we have grown on that front as well. We are grown by around 150, 200 basis points compared to last year, but around 22, 23. We are looking that while at our size, deposit mobilization is not seeming to be a challenge. The pricing does cease. It has really gone up. We have increased our pricing to around 8.1% on the 30-month deposit bucket to focus on the retail liabilities.
All right. So that's what to focus on the retail liabilities. But I'll request you to just hold on. There's an important news development. Sources tell NDTV Profit that government may be opting for fresh bids for IDBI Bank. Cabinet Secretary meeting is underway on the decision regarding IDBI Bank. And Shrimi, our colleague, is here with the exclusive details. Tell us, Shrimi.
Yeah, so Nisha, government may be head for a reset for the IDBI Bank disinvestment, and we've been reporting about it. Now, what we are learning at this point that they are going for a fresh bidding, and that emerging as a strong possibility. A key meeting chaired by Cabinet Secretary TV Somnathan is currently underway to take a call on the way forward. And in fact, this is the second such meeting in just past 1 week with officials from DPAM and banking division, Department of Financial Services, and other concerned department are the part of the discussion. So what we are also picking up that at the heart at this point of time, what they are discussing is the valuation, because sources says that the bid received so far have fallen well short of the government expectation. And in fact, what we are also learning that two potential bidders have quoted 40,000 to 45,000 crore range, which is significantly below the government minimum reserve price. So given this gap, the government is now leaning towards shelving the current bids and starting the process afresh. But do remember that a fresh round of bidding will take some time, as the entire process will have to restart from the scratch. And IDBI Bank, particularly being a sensitive sector, all the due diligence and fit and proper criteria will be applicable. And one more fact is very important and crucial, that for the current financial year, government set the target of 80,000 crore, both for disinvestment as well as asset monetization. And this is way much higher from the previous fiscal year. And that is mostly because they are assuming that IDBI Bank will, take place in this financial year. But we need to see this entire development, because even if the entire process and all the fit and proper and all the due diligence, the kind of RBI takes time. And remember, in the previous bid as well, it takes almost 3 years to come through and to get to this position. So it will take clearly more time. So they need to revisit and maybe reassess the entire target for this financial year, Nisha.
That's right. In fact, the part stake sale by the government, which needed a huge amount of cash component in this particular transaction, was one of the stumbling blocks. And take a look at this particular counter. Remember, in anticipation of this transaction, IDBI Bank had gone past 100 rupees per share. But as soon as the timeline that was set by the government of last financial year did not meet, now it has come down to 68 odd record levels. From the time that this particular transaction has been in the works, which Shrimi said for 3 years, this is the same level that the transaction really started at. So in 3 years' time, it elevated to a much higher valuation, which made it also much more expensive. And with the cash component, it became even more difficult to really attract good bids coming in. All right, all eyes would be on IDBI Bank, but we have with us patiently waiting Mr. Ramachandran of Suryodaya Small Finance Bank. Mr. Ramachandran, looking at this particular quarter's, performance, what are we expecting in terms of the business outlook for the company in the coming quarter guidance?
So we ended up the last year with around 29% increase in assets, 32% increase in terms of no deposits. The momentum continues. Of course, we'll have to watch out for the war situation as it pans out on our segment, which is a very vulnerable segment, lower end of the income pyramid. So we will have, while we are cautious about it, the growth as we speak continues to be with the same momentum as it was in Q4.
There's another aspect to this, Mr. Ramachandran, which is also the RBI's action. And of course, your particular segment caters to the lower income segment. On the other hand, there is also cost pressure when it comes to the interest rates. What are we expecting from the RBI's front? Because the way the rupee has behaved, the way inflation has really come in because of the oil prices and its intermediaries as well, and uncertainty. What is the expectation and what is the requirement of your sector also from the Reserve Bank?
So currently we continue to focus on retail. We're at size-wise at 14,000 crores. So we aren't really too much looking at in terms of the RBI's actions and its impact. Anyway, at this point of time, we still pay a marginal higher cost across SFBs, and specifically in terms of, if you look at us in the March, towards the last few days of March, we increased it. What we're really focusing in terms of, can we reduce our cost of acquiring these deposits? Would it still be at around 150, 200 basis points, or can it be done through various other means, including digital, which at least reduces the cost of mobilization? So focus is in terms of, can the landed overall cost be a little lower than what it was in Q4?
Right. And also, Mr. Ramachandran, you have been saying on the focus on the digital first aspect as well. How is the company really focusing on this and lowering the acquisition cost of the customers?
The digital fixed deposit momentum has picked up. Currently, we have around closer to 35% of our monthly incremental fixed deposits coming into the digital platform. Probably customers are able to use the convenience of digital, book 5 lakhs of deposit across 4 or 5 banks, which probably offer a convenience in terms of little higher pricing. But more importantly is that they don't necessarily need to really walk into a bank branch to fill in the forms. Everything happens digitally. They do the VKYC, and the whole process takes no more than 30 minutes at the max, assuming that they complete all of that together. Otherwise, they still have a day two to come and complete the full KYC, which is through the video KYC. We see the profile of the customer is completely retail. It's around no more than 2 lakhs of average deposit. They come and start with a small amount, 5,000. Then they try closing it, wanting to know how quick they can get it back in their bank account. Once they're comfortable, I think the deposit increases from 10,000, 20,000 starting up, testing the platform, so to say, to around 1.5 lakhs at the end of the second month, third month. So it's pretty good. The cost of mobilization is much more cheaper than physical infrastructure. Physical infrastructure branches are required for the customer to get the comfort, just in case, where do I go? So we still require physical branches as trust points, but the transaction platform moves, including in terms of initiating through digital. That's our experience in the last 1 year.
And also, Mr. Ramachandran, just doing a status check, the war has continued for more than a month. In the last month gone by, have you seen any discomfort amongst the lower income category of your customers, especially with LPG crisis really impacting many of the businesses in the smaller sectors? How have you seen the momentum, and is there any on-ground impact so far?
As of now, no. And that also puts a puzzle in terms of how is it that it isn't really much of an impact. So we're going back and really figuring out, is it as comfortable as we're really seeing it? Because one of the measurements which you look at is in terms of your repayment, on-time repayment, but they may not tell the real full story. It just started. So probably the restaurant business, smaller ones, have really taken an impact. So to the extent we are going cautiously slow on few segments, which has got high dependence on LPG for a moment in the small business segments. But otherwise, are we really seeing a stress where customers are saying, yeah, can we really look at reschedulement is far off, including expressing in terms of difficulty, not yet. But that doesn't really mean that we take it as a pure green signal. We'll go back and still keep figuring out what exactly would be the stress points. As of now, the answer is not yet.
Not yet, but those stress points will have to be assessed and asset quality will have to be reassessed. So we'll reach out to you, Mr. Ramchandran, when you have a lot more clarity and, of course, during the results. Thank you so much for joining us right here on NDTV Profit. All right, let's shift focus to the IT sector, and Wipro is in focus after the company secured a long-term transformation deal with Olam Group. And Jasmeet is right here to share the deeper contours of this transaction and what it means for Wipro. Tell us, Jasmeet.
Well, thank you for that, Nisha. If you look at the overall deal, company signs a long-term transformative deal with Olam Group, and while this engagement is spread across 8 years, and this engagement also has a minimum guaranteed revenue of $800 million spread across the 8-year span. While this deal is for transformative services where they will use the AI-led operations to help the company and transform their services. While as a part of the deal, Wipro to also acquire the IT arm of the company for nearly $375 million, that's roughly 3,500 odd crores. While if you look at the price-to-sales ratio paid for this particular deal is about 2.7 times given the FY25 revenue for the Mindsprint. That's the company that have been acquired. With this acquisition, the company will expand their hold onto the food as well as the other segment and increase the niche. So given the IT pack has been doing acquisitions, this will add company going ahead and it will benefit company going ahead. While further, this acquisition is expected to be completed by Q1 of FY27. So all in all, we do see a good deal win as well as a good acquisition for the company to add up. The stock traded 3% above in trade today, and today also it's again in green today.
All right. Thank you so much, Jasmeet, for getting us all those details. And while we wrap, remember an important news development here that the Supreme Court has refused to stay Adani Enterprises resolution plan for Jaiprakash Associates. Remember, this IBC bid, which was won by Adani, was challenged by Vedanta in the Supreme Court, and SC has really refused to stay this particular deal. And because of that, Adani Enterprises stock has also risen in trade. It's a big corporate development coming in from the IBC space. Keep an eye out on that. It's a wrap on markets at 12. Thank you so much.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
To understand the Tamil Nadu twist, join me in the midst of people, language and politics. Vanakkam Tamil Nadu, here we come.
When others are warming up, I'm raring to go. The stories that matter, the stories that shape your life.
Hello and welcome to watching Prime 5 with me, Raisha Saigal. What's happening? How to
The show that sets the prime time agenda.
We'll be deep diving into this topic to tell you what's at stake.
Join me, Raisha Saigal, on Prime 5, only on NDTV 24/7.
Will the and sun win with a hand in hand? Will the two leaves and lotus bloom? Who will whistle to success in Tamil Nadu? To understand the Tamil Nadu twist, join me in the midst of our politics and people. Vanakkam Tamil Nadu. Here we come.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock, with a table thumping buy.
And when the street
Hello and welcome to NDTV Profit. You're watching Trending Stocks with me, Hiral Dadia, and Sharad Dubey, standing at the profit market pit with all the action in the markets today. Sharad, this is an interesting day of trade. We've come back from a long weekend as well, and I think all eyes are in terms of what's happening, because a lot of updates that have come in from the BFSI space, from the consumption space, so a lot of action.
Well, thanks a lot for that. Good afternoon, Hiral. And yes, the markets are also showing a lot of volatility. Earlier it was a gap down, there was a fall. Then the market's trying to do a recovery. Of course, there's a big drag happening from the heavyweights as well. Q4 updates, as Hiral spoke. Nifty just turned green, but there is no clear direction in the markets. Nifty Bank, however, if you look at it, a little bit decent coming in, because Reliance is definitely not there, but there is a recovery at play for Nifty Bank as well. And VIX also not going up so much as we expected. There is a fog of war and there's a fog of uncertainty as well in the markets. Let's pull out the factors and see what's actually happening here, what's dictating the factors right now. And you can expect a lackluster day of trade, no much volatility. Reliance is dragging the Nifty index, and Nifty Bank's technicals are still better than Nifty if you compare them. But today is the day for the broader indices. That is where the breadth is strong. Value buying is coming in the SMIDs again, and the sell-off which we have seen, not a lot, but Pharma and FMCG is there. That's where the sell-off is happening. But most of the sectoral indices are in a very tight range. Geopolitical tensions are dictating the uncertainty in the markets, and expect a very narrow range-bound movement, especially in the indices. Hiral rightly pointed out the Q4 update is something which we are watching out for. Brent crude is elevated, and rupee has weakened in the opening trading session. Last week, remember, there was an RBI intervention as well, and today is a very important time. Trump's press conference comes at 10:30 p.m. Indian Standard Time, so we'll be watching out for that. But as of now, things are looking hunky-dory.
Things are looking hunky-dory, and today Trump's press conference at 10:30 p.m. is going to be important. But let's quickly take the viewers through the watch list at this hour. A strong business update coming in from Trent and Nykaa, both of these counters buzzing in trade, along with the Senco and DMart. Dabur and AWL Agrios, the stocks have been flat, but the business update has been pretty much in line with what the street was estimating. Hindalco, aluminium prices are rising, and they have also reported their business update for the third quarter. Pretty flat is what I'm seeing in terms of production and sales. IEX, they've received the highest ever electricity trading volumes in this quarter. So that stock is buzzing. And Wipro, on the back of an acquisition, is in focus as well. In fact, the IT pack itself is in focus on the back of the potential buyback through open markets, as the SEBI has been mulling. Axis Bank, HDFC, Kotak Bank, strong operational numbers that have been reported by all of these three, so strong moves coming in there. And Bajaj Housing and Bajaj Finance, they've seen a double-digit AUM growth for the fourth quarter, I beg your pardon. Sun Pharma, 100% tariffs on patented drugs is what is putting pressure on this counter. And Aurobindo, seems that the street is not really happy with the buyback of 800 crores and the pricing that the buyback has been announced at. I think 1,475 is what you're watching out for. Bajaj Auto has posted a strong set of numbers in spite of weakness coming in when you talk about the export side of the business. And you have Supreme Petro and Astral that are in focus on the back of the PVC price cut by 10 rupees per kg. Goldman Sachs has also upgraded a TVS Motor, so watch out for that one pretty closely in trade. But let me get across to Sharad to take the rapid fire with Kunal Rambia of the streets.
Thanks a lot, Hiral, for that. Good afternoon, Kunal. It's always a pleasure to have you. We'll start our rapid fire. And two stocks on their operational updates, Senco Gold and Avenue Supermart. Strong numbers coming in from them. What are the technical charts suggesting? More up moves here, or is a good time to do a little bit of profit booking?
Good afternoon, Sharad. Thanks for having me on the show. So as far as Senco Gold is concerned, if you look at the last 1.5 year behavior, 1 year behavior, the counter has always made a bottom near 290 and the resistance is near to 380. It has bounced from the support level itself. So yes, there is a more room for upside with the target of around 360. One can think of buying and the stop loss can be 310. And Avenue Supermart, I think this counter is also looking pretty much okay. The strength is really gathering up. The upside can be till 4,800 to 4,900.
Right. And Kunal, your views on Bajaj Auto, the March auto sales, they were slightly above the street estimates. That's what the broking community is talking about. But your views, especially on Bajaj Auto, in the levels to watch out for?
See, actually, Bajaj Auto has consolidated really well near the lows and the support is near to 8,650. But the breakout is still pending. I think if the counter manages to close about 9,100, then the rooms till 9,500 are open. So for any momentum trader, I would advise to wait for the breakout of 9,100 levels.
Right. And Kunal, there's a broking upgrade also coming in from Goldman Sachs on TVS Motors. How do you see this development going ahead? Any kind of more up moves coming in from this counter?
Not really. This counter is consolidating well near the lows, but the resistance is strongly placed at around 3,500 and the support is at 3,350. So I'll wait for the breakout again. Until this breakout comes in, I think this sideways consolidation is likely to continue.
And Kunal, Reliance on a intraday fall that fell almost 4%, a big sell-off, it seems like happening in this counter. Important stop losses for Reliance?
On a broader time frame of last 4 years, counter is now reaching near the extreme support level. Reliance is down by around 20% from its all-time high, and right now at 1290. If the counter holds these levels of 1275 zone for a week or two, I think this can be a good bargain buying opportunity. So watch out for 1275 as a strong support and a stop loss for long.
Right, and there is a good sell-off happening in Astral and Supreme Supreme Industries as well. Sorry. So these two stocks, do you see more sell-off is there, or that sell-off has exhausted now?
More or less seems to be exhausted. And if I look at Supreme Petro, I think counter is doing pretty much okay. Come out of the consolidation and the breakout was at around 730. So I think this counter has the potential to show us the levels of 850 even in such kind of market. So yes, positive on Supreme Petro as of now. As far as Astral is concerned, I'll be a little cautious for now because there is no clear trend or say reversal sign. So we'll wait for some more development to happen. But I think support can be at around 1450, which should be held on for now.
Right. Thanks a lot for this rapid fire. Over to you, Hiral.
Thank you so much for that. Let's quickly just take a look at the trending stocks on Google currently, and then we will be joined by the management of Dodla Dairy to help us understand the impact of the war as well. But trend, obvious reasons why that stock is trending in trade: Bharat Forge, RBL Bank, HCL Info, and Tech Mahindra. A quick view when it comes to Bharat Forge and Tech Mahindra, Kunal?
So Bharat Forge, Hiral, I'm very, very bullish because this counter is consolidating well and holding up the supports of 1600 to 1625. If this counter manages to continue holding these levels, and if we see the uptick above 1700, then I think this can be a good falling wedge breakout on the hourly chart. The targets can be as high as 1850 to 1900. So yeah, it's very bullish formation right now.
Okay, so bullish formation coming in on that one. Thank you, Kunal, so much for joining in. Always a pleasure to speak to you as well. But moving on, Dodla Dairy, that's a stock to focus on in today's session as well. Let's quickly pull up the counter on the screens and see what's happening. Now, there are conversations going on that the dairy sector could be under pressure on the back of the war. And that's because, one, inflated polymer-based packaging cost is something which could be troublesome because that is up around 47%. Disruptions could be coming in the form of logistics as well as input supply chain, and imminent price hikes for paneer and curd is something that could be on the cards. Now, there is weakness in terms of institutional demand and labor availability. Let's understand the situation. Mr. Sunil Reddy joins in. Mr. Reddy, welcome to the show. Always a pleasure to speak to you. My question coming to you is, first up, what is the impact in terms of where the Iran-Israel war goes? If you can just break it up for us in terms of elements that get impacted.
Thank you very much, Hiral, for having me on your show. The war impact has been, I think the immediate impact, as you rightly mentioned, has been on the polymer plastic prices increasing, which although is not, in terms of percentage, yes, seems to be very high, but in terms of the absolute number, it will be a rupee per liter kind of a scenario that moves up on the milk, and maybe on the other packaging of curd and paneer, which are a little more thicker and sturdier, the prices will be a little more. The second major impact we are seeing is because of the gas shortage, or the initial fear of the gas shortage being extremely high. The commercial consumptions, especially what I mean is that local tea shops, or which are also big customers, their sales have dropped. But for us being majority D2C and not much of B2B, we have not seen major impact as far as Dodla is concerned in terms of the sales drop that happened. Minor sales drops that were there. We have to look and keep post maybe a month, maybe will fuel prices actually go up, which is going to be then challenging in terms of how much of the prices are going to go up, because logistics will form a major part of the cost. And keeping these in mind, how much do we pass on to the customers? How much do we manage ourselves? How much do we be able to look at it from a farming community? It's a blend of all these. So I think it's more of the uncertainty that is dragging things along. Otherwise, it would have been easier for us to make a call and move forward with the pricing. Keeping this uncertainty in view is what we're holding on with the price restructuring, either from a customer point of view or from the farmer point of view.
All right, Mr. Reddy, Sharad here. Good afternoon. That's the same question I wanted to ask is, any price hikes is there on the anvil? Because we have seen earlier also, last 4 to 6 months, there was a price hike coming in a lot of milk associations, which we had seen even in South, I could say, Nandini also had taken these hikes. Are you looking at the usual hikes, or there would be a little bit of higher hikes other than the usual norms in the month of April, or say in the next coming months?
So currently, Sharad, thank you again for chatting up with us. And yes, we have all taken those smaller high price hikes just to keep up with these immediate price costs that have gone up comparatively, and trying to keep the margins the similar levels of what they were. But to see how much are we going to be actually impacting, like I said, we are not too sure yet. So we'll have to wait at least for a month till this yo-yo effects calm down, and then we know what we are passing on. Because we don't want to just keep on passing on prices to the customer, because it shouldn't impact consumption at the end of the day, right? Because when customers, as an essential commodity, have a certain amount of elasticity, they cannot do too much with just price increases. So I think 1 month is not going to make much of a difference, because we will have inventories of packaging material and other such things which we can manage it and go along with that, and then make a more stable call once we see how it plays out.
Okay. Mr. Reddy, just stay with us. We have Mr. Tuhin Kanta Pandey, SEBI chair, who's just giving a quick bite to the media. Let's listen in to what he has to say in terms of the war updates as well.
मैं कमेंट नहीं करना चाहता हूं. मैंने पहले भी इसके बारे में बात की थी. आज भी मैंने जो अपने उसमें कहा है कि इंडिपेंडेंट डायरेक्टर्स की रिस्पॉन्सिबिलिटी है, बहुत इम्पोर्टेंट रिस्पॉन्सिबिलिटी है, और वो रिस्पॉन्सिबिलिटी है कि मैनेजमेंट को, जैसे मैंने कहा कि मैनेजमेंट्स की जो इंफॉर्मेशन है, इंसाइट है, गवर्नेंस है, कंप्लायंस ही नहीं, रिस्क मैनेजमेंट है, फाइनेंशियल्स हैं, उनको देखते हैं, और उनके देखने के साथ साथ एक जिम्मेवारी ग्रहण करते हैं. और यदि मैनेजमेंट को उनको कुछ बताना होता है या उनको समझाना होता है, उसके बारे में भी बोर्ड में चर्चा होती है। तो बोर्ड में सब इस चीज़ों की चर्चा होनी चाहिए, लेकिन कंस्ट्रक्टिव अप्रोच है और जो शेयर होल्डर्स हैं किसी भी कंपनी के या और स्टेक होल्डर्स हैं, वो कंपनी की परफॉर्मेंस और कंपनी के इवन जो मार्केट कैप के उतार चढ़ाव उससे प्रभावित होते हैं। तो जिम्मेवारी का काम है।
Sir, on disclosures, you spoke about shifting focus from disclosures to companies' independent directors. But of late, we have seen many companies not disclosing or making their own interpretations of material information. For example, in today's report, there was a story about Reliance disclosures. Earlier, there has been.
Again, मैं कोई भी इस तरह के इंडिविजुअल कमेंट्स नहीं करते हैं। जो डिस्क्लोजर्स हैं उसका एक फ्रेमवर्क है, उस फ्रेमवर्क के अंतर्गत डिस्क्लोजर होता है और उस डिस्क्लोजर्स में यदि कोई कंप्लेंट आती है कि उसके अंतर्गत डिस्क्लोजर नहीं हुआ है तो उसका एक अलग प्रोसेस होता है।
यूएस प्रेसिडेंट ने बोला कि रिलायंस इन्वेस्ट करेगा उनकी ऑयल रिफाइनरी में।
मैं इसके बारे में कुछ कमेंट नहीं करूंगा। मैंने एक कह दिया आपको कि एक डिस्क्लोजर का या उसका जो भी कोई इन्फॉर्मेशन आती है उसके बारे में जो इन्फॉर्मेशन देना एक सर्टन नंबर ऑफ आवर्स है, मटेरियलिटी है, वो एक फ्रेमवर्क डिफाइन है, उसके अंदर ही डिस्क्लोजर्स की बात होती है।
इसमें किस तरह के चेंजेस एक्सपेक्ट किए जा सकते हैं?
नहीं, इसमें डिस्क्लोजर के फ्रेमवर्क में जो भी चेंजेस वगैरह यदि होंगे या कभी भी होंगे, वो जो भी रिफॉर्म्स आते हैं, यदि हम जैसे LODR का जैसे कॉम्प्रिहेंसिव देख रहे हैं उसमें उसके हिसाब से क्या क्या चेंजेस आएंगे वो आप जानेंगे जब वो, ये तो लंबी प्रक्रिया है, उसके बारे में जब बातचीत होगी। और लेकिन आज मैंने जो ये बात की है कि हमारा जो कॉर्पोरेट गवर्नेंस है, कॉर्पोरेट गवर्नेंस को सुधारने के लिए एक फ्रेमवर्क की बात होती है, रेगुलेशंस की बात होती है। एक उस फ्रेमवर्क और रेगुलेशन के बीच कार्रवाई की बात होती है। जैसे कि आपने एक डिग्री का प्रोग्राम, एक यूनिवर्सिटी ने एक करिकुलम तय किया, एक प्रोसेस तय किया और उसके बाद एक डिग्री दी जाती है। अब उसकी क्वालिटी कैसी होती है डिग्री की, वो इसमें डिपेंड करता है कि तो उसके एग्जामिनीज कैसे हैं और एग्जामिनर्स कैसे हैं, वो कितनी मेहनत कर रहे हैं। तो कार्रवाई पे फ्रेमवर्क वही है। एक यूनिवर्सिटी के जो डिग्री है उसमें जो निकलते हैं वो बहुत ही वैल्यूएबल प्राइज्ड मानी जाती है। एक पर्टिकुलर यूनिवर्सिटी की डिग्री उतनी नहीं मानी जाती, जबकि वहाँ पे भी VC है, वहाँ पे भी एकेडमिक काउंसिल है, वहाँ पे भी वही चीज़ है, रेगुलेशंस हैं। तो ये भिन्न भिन्न क्यों है? इसका मतलब कैपेबिलिटी जो है वो खाली हर चीज़ रेगुलेशन से डिफाइन नहीं हो सकती।
So that's the word coming in terms of disclosure norms when it comes to the independent directors as well. And lots brewing on this front. But let me get back to our conversation with Mr. Sunil Reddy, the Managing Director of Dodla Dairy. Mr. Reddy, thank you for your patience and thank you for staying by as well. My question to you then is, you're talking about not increasing prices time and again because that becomes cumbersome from a consumption perspective as well. But from here on, one, what's the quantum of price hike that has already been taken? And two, because to some extent you will be bearing the price escalations for some settlements to happen, what's the kind of impact you're looking at in terms of business?
So basically the price increase is, we have already taken a couple of rupees of price increase, which is not from the war impact, but more from the sales of procurement and pharma price increase that we had to take into consideration. Coming from the war impact, like I said, we still have 45 days or so of inventory with us, and we'll be able to utilize our inventory, and then we will be making a call on what the increase should be. But I think the impact won't be that much comparatively, because whatever we have tried to do, we've already increased our selling price and passed it on to the farmer and trying to maintain our margins to the previous quarter's levels that we are at and keeping those margins going. And we also have to wait and watch and see how much of the price increase is going to happen in the other side, because the fuel increase will have an overall impact right from purchase to sales and what quantum is there. So we are not too sure how much is it. Is it going to be 30 rupees a litre, 5 rupees a litre? There's all rumors which we are not sure of. So we want to wait and watch before we take that call. And we will pass it on. We will not be holding it on to us.
Okay, so you will be passing it on, you will not hold on, but you have some more time to get there. But thank you so much, Mr. Reddy, for joining in. Always a pleasure to speak to you as well. Let's also get in CA Tapan Doshi. Tapan, good afternoon and welcome to the show. Always a pleasure to speak to you. Your views when it comes to a stock like a Dodla Dairy, where we're talking about price increases that they've taken, but if you're talking about the next 45 days, they become crucial as the management was indicating, and if they have to, they will pass it on.
Yeah, good afternoon. See, yes, of course, as management told that raw material prices will be impacting the profit margin of the company. But we have to see when they are able to pass it on. As management, we have to wait for 1 month or 2 months. I think they already told that they have an inventory of almost 45 days, so that is not an issue. But still, we don't know how long the war may go on, how the supply disruption will be from here. Now, if you see, even the local competition is coming from the local dairy players also. Again, seasonality effect is also there. Also, if you see the low market, low rural area, you cannot increase the price suddenly in one day. So, but I think management is working on value-added products, and that EBITDA margin is in the almost 10 to 11%. That is okay. And volume growth, if they are able to maintain 10 to 12%, I think the valuation currently what it is trading around, if it is coming around 7 to 8% down from around 950 or, I think that is a level of one can think about long term. The company is strong, but yes, the current disruption due to the war, I think it will have an impact, but it will be, I think maybe 1 more 2 months. Once it is settling down, I think this stock may perform well. So yes, at lower levels, I recommend to buy at a lower levels.
Now let's move on to the Q4 updates which is coming, especially in the consumption part, because these consumption numbers are really strong. Trent standalone revenue up almost 20%. Last 2 quarters that average was around 17 odd %. And they added 21 West Side stores and 109 Zudio outlets. And look at Nykaa, very strong growth. Highest coming in the last 12 quarters, the gross merchandise value growth in the late 20s, and even the net sales value is expected to be in the higher early 30s as well. So of course both of these counters doing really well. And joining us Tapan, good afternoon Tapan, Sharad here. 2 important consumption stocks, both of them doing well. Do you see this to continue in the Q1 as well?
Yeah, good afternoon, Sharad. Yeah, very good business update from both the stock, both the company as such. Trent has been struggling a lot from last few quarters. Their Zudio numbers are not coming so great, but I think this time they have shown a little bit sign, and stock has already fallen a lot. So of course, if you talk about the valuation wise, I think it is down from the top. So yes, at this level one can hold it, but I'm a little bit more excited about Nykaa. Nykaa has been doing well from last few quarters, and this is one of the company in e-commerce which has been doing well for long, and they are profit making also, and double digit growth, more than double digit growth every time they are showing. Their own house patent cosmetic products are also giving better margins from here, and they are going to focus there. So I'm much more bullish on Nykaa than Trend. I think Nykaa is a stock now at lower levels one can buy it, and even at this level, because the stock has also fallen from the top.
So that's with regards to where Trent, Nykaa go. But moving on, on the back of the PVC prices, you have Supreme Petro as well as Supreme Industries and Astra that are in focus as well. And this is because the PVC prices have been cut by 10 rupees per kg. And this is a flagging trend reversal that we're seeing. And this is mainly because the agri demand is weak. They're expecting weak April demand, heavy channel inventory, as well as imports that are coming in from China that will be cheap because of the custom duty that has been reversed as well. So the first quarter of FY27, the volumes and the EBIT are at risk. That's what you're looking at. Both these counters are in focus. Tapan, your view when it comes to Supreme as well as Astral?
But out of these two, I think I'm much more bullish on Astral. No, this stock has been doing well. Of course, the stock has fallen, but I think demand will be there in the coming quarters. And again, if you see the guidance on the management is also good. Overall, I think the margin expansion will be there in future. Hopefully, once the raw material prices get settled and domestic demand may go up in once all these things is settled. So overall, I think Astral is a good bet. One can bet compared to Supreme. Yeah, I'm hopeful about Astral for long term.
That's pretty much interesting. But moving on and taking a discussion to the IT space as well, especially a lot of deal making is happening all across. And also Wipro has come out with a very big $1 billion acquisition, it seems like. But what are the key details about it, Jasmeet? And by when this contract will play out? Give us all details about it.
Well, sure, thank you for that. If you look at the overall contract that Wipro has won, it's worth $1 billion. That's roughly 9,300 odd crores. And this deal is spread across 8 years with a revenue of 125 million per year. And this deal also has a guaranteed contract value of $800 million. Now, under this deal, Wipro has to acquire an entity that's Olam's IT pack, that's Mindsprint. If you look at the overall Mindsprint as a company, it operates into IT space when you look at agri and food business. Now, Mindsprint, the overall acquisition made by the Wipro for Mindsprint is roughly at $375 million. That's roughly 3,500 odd crores, which comes up to 2.7 times price to sales ratio, which seems a bit expensive compared to the other acquisitions the company has done in the past. So all in all, we do see that this particular acquisition will add roughly 3,200 employees to the company, but will also make companies niche more clearer in terms of food and agri business altogether. So it's all in all a positive news for the company. The stock was up 2% and currently in green as well.
Thanks a lot, Jasmeet, for that important development coming in. But Tapan, I would like to get you on this. I know you don't like the IT space right now because the AI confusion is there. But is there any value emerging? Even the rupee you can see is on the weaker side. Anything in the mid cap or the large cap?
Sir, if you talk about the rupee also, no, see in 2020 around, no, 2006 around, sorry, no, rupee was around 40, now it is 95. But the depreciated rupee has not increased the margin at all for the IT companies. The problem is, no, they get set off in the contract and overall the employee costs. So I don't think the rupee depreciating will help IT so much. And overall, if you talk about Wipro is among the weakest among the all top 4 companies. Of course, the stock has fallen a lot, so you can say that it's blowing at a very much lower level. So if someone want to hold, they can hold it. But I think still they may consolidate at this level for a longer time, maybe 1.5 year, and we come to know whether who is the winner out of this stock. No, then only better to bet on it, because still AI disruption is there, and we don't know what type of margin they'll be getting in future. So still I'm negative on the large cap IT companies and Wipro especially.
Okay, so that's with regards to where Wipro goes. In fact, IT will be in focus as well because numbers start trickling in this week. But moving on, Pharma is in focus, the 100% tariffs on Pharma. This does give relief to some companies, but some patented drugs is something that, gets impacted as well. Now, nation pricing, US manufacturing gets 0% tariffs. Firms without pricing deal but investing in the US face 20% tariff. And the timelines of 120 days for large companies is what they are looking at, and 180 days for smaller firms. Now, European Union, Japan, South Korea, Switzerland, these are the countries where goods have been faced with 15% levies, and with UK is likely a 10% tariff. On the back of this, if you see a Sun Pharma, that is the one which is impacted the most on the negative side, and hence you're seeing a downtick because their branded exposure is around 20% of their revenues. Illumina may face around 15% tariffs, and the near-term earnings downgrade that could be on the cards. Companies like Aurobindo Pharma, Alchem, Jubilant, Zydus Life Science, Piramal Pharma, these are the ones who could actually benefit as well because of the US manufacturing players who gain an advantage. And with this, just let me address Aurobindo as well. They've announced a buyback of 800 crores at a price point of 1,475 per share. And this represents around 0.93% of the total equity. Record date is 17th of April. It seems the market is not really happy with the Aurobindo buyback because the stock is slightly under pressure. Tapan, quick view. Actually, we don't have them for a quick view, but all of these counters are in focus as well. But thank you so much, Tapan, for joining in. Always a pleasure to speak to you. A thank you from Sharad, the team that put the show together, and myself. Lots more lined up on the other side. Please stay tuned to NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
When others are warming up, I'm raring to go. The stories that matter, the stories that shape your life.
Hello and welcome to watching Prime 5 with me, Raisha Sehgal. What's happening? How to
The show that sets the prime time agenda.
We'll be deep diving into this topic to tell you what's at stake.
Join me, Raisha Sehgal, on Prime 5, only on NDTV 24/7.
It was a tepid day of trade on Dalal Street. Nifty lost more than 55 points while the Sensex shed over 200 points. Realty, PSU banks and IT led gains. Oil and gas as well as Pharma on the flip side were on the back foot. And as Q4 updates start trickling in, banks continue to report sluggish deposit growth while CD ratio continues to rise. Avenue Supermarts emerges as an outlier in the consumption space with sturdy performance. Trent a buzz after a strong set of operational updates in the fourth quarter. Standalone revenue rises 20% on a year-on-year basis, also clocks in more than 100 store additions in the quarter. And Sun Pharma is trading under pressure after Trump slaps fresh tariffs as well on the entire sector as a whole. Patented medicines will face a 100% tariff entering the US. However, companies can still avoid the taxes by striking deals with the administration. Wipro pulls off a big-ticket win, bags $1 billion AI-powered transformation deal from the Olam Group for 8 years. Acquisition is expected to close by Q1 of financial year 27. Good afternoon. You're tuned into Lunchtime Trades with me, Shreyansi Singh, and this is the show that gets you a roundup of everything that is happening in the world of commodities, news and updates as well on the top buzzers at this hour, all while you grab lunch. But before we do that, a very quick look at what the markets are up to right now. So when you talk about Nifty, you're taking a look at just a sharp recovery really coming in about an 88 point thereabout uptick that you're seeing against that tepid move that we had by mid-noon as well. When you talk about Sensex, about a 200-point recovery is what you're seeing right now. So that's the kind of picture that you're looking at right now broadly. Let's also talk to you about the sectors that are performing greatly and badly. So there's Realty that is leading gains, PSU banks in good shape, financial services, banks, IT. Those are some of the sectors that are leading gains right now. What's not doing so well is something like an oil and gas. Even pharma is a little bit on the back foot at this point in time. So that's the kind of sectoral picture broadly that you're seeing emerge right now. When you talk about some of the stocks that are buzzing away in trade as well, something like a Trent is standing out with that 6.5% gain also coming in. Adani Green, Gravita India, Newland Bank, RBL Bank, some of the other counters that are buzzing away up anywhere between 5.5% to 6.5%. When you talk about the Nifty 50 pack as well, something like a Titan company is in good shape, Shriram Finance, Axis Bank, Coal India, Bajaj Auto, and even heavyweight HDFC Bank also in good shape right now. So that's largely the kind of picture that you have. On the flip side, there's Reliance Industries that's trading with a cut of about 3.7% in terms of the heavyweights. JSW Steel, ONGC, Max Healthcare, and Dr. Reddy's. Some of the other losers from within the Nifty 50 pack. But with that in mind, let's quickly get you the picture as far as metals are concerned, oil as well as gold prices, what they're up to right now. And we will also get you some insights. But when you talk about oil, you're largely taking a look at a volatile day of trade coming in for oil prices. And that's largely the kind of setup that you have now. You do have OPEC that has hiked the May output quotas by 206,000 barrels per day, and that's the symbolic hike that you're talking about right now. 8 members have gone ahead to have agreement on this particular hike, and that's something that you're seeing coming in terms of OPEC. But largely it's the commentary that they have that's quite important, and that's something that we'll be discussing with Kunal Shah as well. So Kunal Shah, Head Commodities Research at Nirmal Bang, is joining us right now. Mr. Shah, thank you so much for taking time out, and a very good afternoon. First things first, I'll start with the key commentary coming in from OPEC right now, because they're talking about how there's signs of acute concern about the near-term supply, and other than that, they're also flagging the energy strikes that are sustaining supply loss right now, and that's something that they've highlighted very, very clearly right now.
Yes, I mean, obviously there are concerns regarding the supply, and you rightly mentioned, near-term supply. That is what the market structure is all about. So if you look at the structure of the futures market on the WTI, which is trading on MCX, the near month is trading at 10,370 rupees right now. The far month, that is the May contract, is trading at 9,280. The June contract is trading at 805, and July contract is trading at 8,181. So the difference between the July and April, or virtually we are down by 2,000 rupees. So that if you take it, that clearly shows that whatever supply concerns which are persisting are quite likely to be a shorter term scenario. Going forward, as and when we have a clarity on the front of what is going to happen next, I think the Pharma contracts are already in a deep discount right now. So I believe that we have entered in a stage where there can be a last possible strike, and then perhaps you can see some resolution coming to this conflict. And once that takes place, I think that slowly and gradually the geopolitical premium which is there in oil prices will eventually cool off. I'm not bearish on crude oil, but I believe that the upside from here looks very limited. I'm not expecting oil to go above $120 unless this crisis extends to another one and a half, 2-3 months. Then I mean it's really grave scenario. But as of now, I think the sanity should prevail, and that's what the future chain of crude oil is indicating.
No, absolutely. And point taken there in terms of the geopolitical risk premium. But I also wanted to try and understand what you think this really means in terms of the broader complex right now. Do you think that we're looking at higher for longer oil prices, and that sort of shift is something that we've seen completely play out because of this particular conflict? Because just a few months ago, if you were talking about $120 a barrel, that would be a little far-fetched right now. And this is, something that a lot of brokerages have already factored in right now, given all of the supply shocks that the conflict has really introduced.
I think the right terminology which I would use is that the downside is limited. So before this war started, before the year 2026, the narrative was that oil prices are going to remain low. We are going to see lower for longer. Right now, you said the higher for longer. So the entire narrative has changed. So I believe that even if there is a settlement, if there is a ceasefire between Iran and Israel and US, I believe that the downside is limited because almost 8.5, 9 million barrels of oil, crude oil, is out of the market, and because the oil fields have been shut down. So now to restart this oil fields, it's going to take a lot of time. It's going to take perhaps 6 to 8 months to again back the supply into normal level. So that's the reason I believe that $80 should be the bottom for crude oil. It's the new normal, $80. It should not go below $80. And whenever you see this kind of attack again coming in on any oil field, I think again oil will flare up for that point of time. But I believe on the upside, maximum 120. On the downside, 80 seems to be the bottom.
Right, no, absolutely. And just to play the devil's advocate as well, you do have Donald Trump who's gone ahead and said that oil is going to be falling as hard as a rock after the conflict sees a major de-escalation. Now, is that something that you also seem to be penciling in right now? Now, you've said that, there's limited downside, but just to play the devil's advocate at this point in time.
Okay, so it's sentimentally oil can go down, but what about all these supply which have gone out of the market? It's not going to come. It's not like a tap of water. You shut it off and you shut it on, and all the oil supplies will start. So I do believe that sentimentally the near-month contract, when there is an announcement that there is a ceasefire, the near-month contract will fall very sharply. But like I explained at the start of the show, the Pharma contracts are already in a deep discount. So I remember in 2008 when oil prices tested $147, the similar phenomenon happened. I have noted down in my notebook at that time. The near month was trading at $147. The far month was trading at 137. The next month was trading at 130. Another month was trading at 120. So if I wanted to short oil at $147, it was just about the near month contract. So only the premium was built in the near month contract. And this structure indicates that whenever this ceasefire will take place, the far month contract will go down quite sharply again, and near month will fall immediately. So I think there's no point, in even shorting the near month, because you don't know when the crisis will hold on. So if there is a rally coming in, I think the far month contract is something, you should really focus on sell on rallies. But near month I think it will not go below $80, and that scenario is already priced in the backwardation chain.
No, absolutely. And thank you so much for helping us out with that very clear analogy as well when it comes to the taps, that the supply shocks are very much back in the focus as well. And that's something that you're looking at. But moving on, let's also talk about gold that seems to have paired losses just a tad bit. Let's also talk about the entire picture here when it comes to gold. Because on one side, you do have safe haven demand. On the other side, there's that entire picture in terms of inflation as well that you're looking at. Which are the risks that you're looking at right now when it comes to gold prices?
I think the US CPI data, which is likely to come during the middle of this week. And I believe that if the inflation in US shoots up, that's going to create a lot of headwinds for gold, because the rate cut narrative will be completely out then. And then we will be talking about whether there is a possibility of rate hike, and that's not positive for gold. So I believe that the upside will be capped on India, 1,55,000, 1,58,000 maximum upside. On COMEX, I believe $4,800 seems to be the maximum upside. So the upside, whenever there is a rally, if this war ends and dollar cools down and there is a rally, I think that should be used as an opportunity to sell, because if the inflation shoots up, then I think it's going to be a big headwind for gold.
No, absolutely. And what about silver? What is the outlook that you have here? Do you expect it to be trading as a sister metal in tandem with gold prices right now, or do you think that it's going to pick a path of its own?
No, I think it's going to trade in line with the gold. 2,45,000 in near term, that seems to be the upside. And then again, we can see, it can go down to 225. So Similar view for gold. I think the silver US CPI number is the major trigger this week, and ceasefire can lead to a temporary pullback in both these metals.
No, absolutely, and thank you so much for helping us out with that entire trajectory coming in as far as silvers is also concerned. Thank you so much for joining us with all of those insights.
Okay.
With that in mind, let's also shift focus and talk to you about some of the stocks that are in focus right now. In fact, Jasmeet is standing by with that entire list. Jasmeet.
Well, thank you for that. I have three stocks that remain key focus today in trade under my radar. The first one is RBL Bank. While Emirates NBT gets RBI approval to acquire 74% stakes in this particular bank, while post the acquisition, Emirates NBT becomes the promoter of the group, and the RBL Bank will be classified as a foreign-owned bank having the entities in India. Now, the next stock in my focus would be Adani Power. While company wins order worth 2,500 megawatt renewable order from RTC supply order from Maharashtra Discom. While if you look at the overall management commentary, they remain very focused on the Q4, and they say that Q4 they're seeing a very high upside, and this order win adds to that. Further, this order is won for the period of 25 years. If we look at the next stock, the last stock in my radar, that would be that's a brokerage note which I have Goldman Sachs on TVS Motor. While this particular brokerage upgrades the particular stance on discounter, what they upgraded to buy from neutral rating, and they hike target price as well to 4,100 from initially 3,830. Now, what they say is the overall pricing power is playing well for the company, given the inflation of the input goods are not much impacting the company, and that's why the company remains a key focus. And when compared the company's volume with the peers, the volumes will remain stronger for this particular counter. While thirdly, they also see that companies better placed to pass to the RM inflation and relatively limited volume impact from metal and crude inflation as well. While lastly, they also make a note that the company see a 35 BPS margin tailwind from the overall PLI scheme. So these are the three reasons why the brokerage upgrades a particular counter and also hikes the target price of 4,100 rupees.
No, absolutely, and thank you so much, Jasmeet, for joining us with that entire update coming in as far as all of the stocks that we're keeping in mind are concerned. Wipro, of course, is also in focus, and that's after the company secured a long-term transformation deal with Olam Group. Let's also talk about that as well, try and understand the contours of this deal, because that stock is buzzing away, about 1.5% uptake coming in as far as Wipro is concerned.
Well, as rightly said, company wins a mega deal, a multi-year mega deal for transformative services from the Olam Group. Now, this particular deal is spread across 8 years, and it also has a contract value of $1 billion. That's roughly 9,300 odd crores. Now, if you look at the overall stance of this particular order, it also has a minimum guarantee of revenue of that's roughly $800 million. Now, with this particular deal win, the company, as a part of the deal, the company also acquires the IT arm of the Olam Group for roughly $375 million. That's roughly 3,500 odd crores. If we look at the price to sales ratio paid to this particular acquisition is roughly 2.75 times as compared to the calendar year 25 sales of Mindsprint. While that's the entity the company is being acquired. Now, while Mindsprint is a company that generally works, it's an IT company which operates in the food and agri business. With this acquisition, Wipro makes its niche much more stronger when it comes to the food and agri business, and also increases the employee count with 3,200, given currently Mindsprint has 3,200 odd employees. So all in all, we do see a good up move in the stock coming up. The stock was up 2 odd %, and right now it's up at 1.5 odd %.
Absolutely, and thank you so much, Jasmeet, for joining us with all of those details. So there you go, that's Wipro that's in focus right now, about a 1.5% uptick coming in on that counter. That's one more stock that makes it to his radar. But let's also move on and talk about something like a Tata Motors passenger vehicle, because that business is back in focus right now. You're looking at a weak operational update coming in from JLR, mixed volume trends as well, clouding the outlook. Now, add to that tariff headwinds, China challenges, and the planned wind down of the legacy Jaguar models. And FY26 is shaping up to be a year of execution risks rather than easy recovery. But Sharad, you've told us this morning that there is silver lining. Let's also talk about that, but also about the weak operations.
Exactly. The silver lining is why the stock is at the day's high level right now. There is a little bit of recovery. And Shreyanshi, look at the sequential numbers. That is where an improvement is coming. Why? Because, of course, last year was impacted by the cybersecurity incident. But after that, the production numbers and even the retail numbers have started recovering post the cyber incident. And this is the sequential numbers I'm talking about. Still, a year-on-year basis, there is a degrowth. but markets are forward looking, and look at that, that's up 16% retail sales. This is what I'm talking about. And let's just pull out overall wholesale sales. That's down 14.5% on a year-on-year basis, but up 61% on a sequential basis as well. Now, if you look at the entire wholesales volume, that's lower than expectations in most of the markets, but the European markets has seen a 4.1 growth. So that's the second silver lining as I was talking about. So definitely sell-off is coming in. The impact globally still persists. China market challenges are there. Full year volumes are still down on the global tariffs front. And of course, the cyber security incident is there. So of course, the sequential basis is definitely there, but there is some kind of silver lining which we discussed, and that's why the stock is in the green.
Absolutely, and you've given viewers a heads up bright and early in the morning about this. Sharad, stock, like he mentioned, is trading close to the day's high. Thank you so much for joining us with that entire update coming in as far as JLR is concerned. And Tata Motors PV is one counter that you should be keeping in mind on the back of this particular update. But let's also get you the update coming in as far as the pharma sector is concerned. Now, pharma sector is set to swallow a bitter pill as Trump readies another tariff blow on them. You're looking at patented medicines that are going to be facing a 100% tariff entering the US, but companies can still avoid the taxes by striking deals with the administration. In fact, Varsha is joining in with all of those details in terms of what the impact is really going to look like. And Varsha, a whole host of counters that are trading with some pressure right now in terms of the entire pharma pack. Let's go through this update.
Yeah, absolutely. So 100% tariff has been imposed on branded and patented drug, while generics are exempted when it comes to Trump tariffs, and biosimilars are also exempted from tariffs. Now, what's the reason for this? Of course, the focus is on national security and supply chain control, and there's Trump wants the push for domestic manufacturing in US, and the $400 billion investment commitment has already been driven, and API reserves and local production push is ongoing. How this is going to impact on global pharma, where big pharma will see pricing pressure, supply chain may shift to US manufacturing, and CDMO may face uncertainty because of this push. Now, impact on Indian generic pharma, no tariffs currently. Near term is positive when it comes to generic pharma. Hence, biosimilar is also fully exempted. But there will be a little impact on Sun Pharma, considering its high branded exposure of around 20%. Illumia, which comes under the specialty portfolio, will see 15% of tariff, and EBITDA impact is expected at 1 to 2%. Who can benefit though? The companies who have US manufacturing setup. You have Aurobindo Pharma, Alchem Lab, Jubilant Pharma, Zydus Life Sciences, and Piramal Pharma, which will have benefit, or which will be gaining, considering their US manufacturing setup that they have.
Absolutely, and Varsha, that's something that you're looking at when it comes to the entire pharma pack that is in focus. Let's also talk about some of these counters that Varsha has also spoken about, and the counters that are in focus right now. So you're looking at a decline of about 12 counters when you talk about the entire pharma pack as well. About 8 counters are advancing. So Ipca Labs is on the back foot, Alchem Labs, Piramal Pharma, Ajanta Pharma, and Dr. Reddy's. Those are some of the counters that are on the back foot. Add to that list something like an Aurobindo Pharma. Now, you do have a buyback announcement that you're looking at when it comes to this particular counter, and the buyback size is somewhere to the tune of about 800 crore rupees. The price that you're looking at is 1,475 rupees per share, and the shares that are going to be bought, you're looking at 54.2 lakh when you talk about this particular number as well. So that represents close to 0.93% of the total equity. When you talk about the record date as well, that's set for April 17th, and that's something that you're looking at. When you talk about the structure of the buyback, that's a tender offer that you're looking at, and that's very important to take note of. Aurobindo Pharma right now trading with just a little bit of a negative bias, but let's also shift focus onto what sources are telling your channel, that the government may opt for fresh bids for IDBI Bank. Cabinet Secretary meeting underway on decision regarding IDBI Bank. In fact, Shrimi is joining us with some more details here. Shrimi.
Yeah, so, it's all the reset on the IDBI Bank disinvestment, with fresh bidding now emerging as a strong possibility, and a key meeting chaired by Cabinet Secretary TV Somnathan currently underway, and they're going to take a call on the way forward on the stake sale. And this is second such meeting in just past 1 week, where the DPAM and DFS officials are part of that discussion. And the main issue is, of course, valuation, as we've been reporting that bids received so far have fallen well short of the government expectation, and two potential bidders are learned to have quoted around 40 to 45,000 crore range, significantly below the government minimum reserve price. Now, this is very crucial from the context that government is now leaning towards shelving the current bids and starting the process afresh. But a fresh round of bidding will take some time, as the entire process will have to restart it from the scratch. And do remember the fact that the current fiscal year, government set the target of 80,000 crore for both disinvestment and asset monetization for this financial year. But we need to wait and watch out the entire decision ahead, because that's actually the entire target will hinges on the IDBI stake sale. And also the current process almost takes 3 years to arrive at this point and this stage. So we need to keep that as well in the mind if government go ahead with the rebidding.
No, absolutely. And thank you so much, Shrimi, for joining us with that entire update coming in. As far as something like an IDBI bank is concerned, when you talk about that particular counter, it's trading with a cut of about 0.7% at this point in time. But you've seen that little bit of recovery also coming in the last few minutes when you talk about this particular counter. But with that in mind, let's also get you one update that's very close to your kitchen. Actually, let's also talk to you about induction cooktops that are making it to the to-do list of the government. The government, in fact, held a meeting last week to step up the production of induction cookers and petrochemicals last week as the Middle East conflict drags on. Before, let's also go across and listen in to Rishabh in terms of all of these latest details coming in. Rishabh.
Absolutely. What you had is, like you said, a preparation on all fronts. And one of those preps involves sort of amping up the domestic production of key products like induction cookers as well as critical petrochemicals. So what the government's POV is, it is to sort of look ahead, even if the war continues for a few months, starting now, the availability as well as the affordability of critical supplies like induction cookers should not stop. So in that vein, there was a meeting that was held between DPIIT, DGFT, various other ministries had representation as well. And what they decided was on that there will be some sort of a boost in production, and various ways to boost that production were also discussed. What we've also already seen from the government is a cut on import duties on various petrochemical products that are critical to other, that are actually critical raw materials to other products. So that's what we're seeing from the government, is this sort of proactive approach wherein more and more interesting and more important products are being sort of lined up, even in the sort of taking care of the worst case scenarios that are also coming up if the war continues.
All right, then worst case scenarios are also factored in. That's good to know. Thank you so much, Rishabh, for joining us with all of those updates. That's all the time that we have on the show. Thank you so much for tuning in.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
When others are warming up, I'm raring to go. The stories that matter, the stories that shape your life.
Hello and welcome to watching Prime 5 with me, Raisha Saigal. What's happening? How to
The show that sets the prime time agenda.
We'll be deep diving into this topic to tell you what's at stake.
Join me, Raisha Saigal, on Prime 5 only on NDTV 24/7.
Will the rising sun win with a hand in hand? Will the two leaves and lotus bloom? Who will whistle to success in Tamil Nadu? To understand the Tamil Nadu twist, join me in the midst of our politics and people. Vanakkam Tamil Nadu, here we come.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
New year. New power panel. India market open. Now in its boldest lineup. This is where the trends
Good afternoon, you're watching Small Cap Buzzers on NDTV Profit with me Somit Sarkar and my co-anchor Varsha. In the next half an hour, we'll take you through the most important small cap stocks that have been buzzing in trade today. So what's on the show today? Firstly, we'll be speaking with the management of Enviro Infra. Now, this company has announced 5 major project wins and these are worth nearly 1,500 crore rupees and the stock is also reacting on the same. So what's the way forward is something that we'll try to get from the management today on the show. Apart from that, we'll be covering stocks like Hariom Pipe. Now, the company has announced temporary closure of its operations at Tamil Nadu, and if you look at the stock, that is down nearly 40% in the last 6 months. We'll be also discussing Confidence Petroleum. Now, that stock is up nearly 54% in the last 5 trading sessions, and this company is engaged into manufacturing of LPG cylinders. But what could be the potential reason is something that we'll discuss with the fundamental guest on the show as well. And when we speak about Vikran Engineering, that company has also won an order worth nearly 530 crore from the Maharashtra government, and if you look at the stock, but that has seen a downtick of nearly 40% on a YTD basis. And lastly, we'll be discussing about Pace Digitech. Now, that stock has been buzzing on the back of the BSS EPC order wins that it has announced from NTPC, and the stock has also been gaining for the past few sessions. But today, some profit booking coming into the trade when it comes to Pace Digitech. Now, if you look at the market, the Nifty, we have seen a sharp gain in the last 2 hours of trade. From 20,550, we are now trading about 22,850. Nearly 300 points is something that the market has gained. And it's only Reliance Industries which is holding back the benchmark. Apart from that, most of the stocks have been trading in green. Now, if you look at the sectoral indices here, on the gainer side, we have Nifty Consumer Durables, that's up nearly 2% followed by Nifty Real Estate, which is up nearly 1.5% in trade. On the loser side, we have Nifty Oil and Gas. This is largely because of the oil marketing companies and because of Reliance Industries. And then there is Nifty Pharma and Nifty Healthcare, which are largely flat in trade, down about just 0.1 to 0.3%. But when it comes to the small cap indices, they have been also trading in green. But which are the key stocks that have been gaining and losing when it comes to the small cap sector? Varsha?
Yeah, a lot of stocks are actually buzzing on the back of business updates and of course volume, strong volume we are seeing for some of these stocks. Let's on the firstly we have Ruchi Infra, wherein if you see the stock is gaining, this is on the back of volumes. Volumes are trading at 11x of its 30-day average. There you go, the stock is up almost 14%. You have V-Mart. Well, this is buzzing on the back of volumes though at 34x. And if you see, this stock is up 30% in the last 5 trading sessions. Then you have, of course, you have Lux Industries, again buzzing on the back of volumes at 4 times of its 30-day average. There you go, the stock is up almost 17%. Bombay Seed, this company is buzzing, over the last few sessions. If I were to say, well, today if you see, the stock is up almost 14%. You have M&B Engineering also in the list when it comes to, buzzers of small cap sector. Well, on the loser side though, you have Bharat Rasayan, you have Lincoln Pharma, which are trading under pressure. You also have Hariom Pipes, again this is under pressure on the back of closure of its unit, and Uflex is also under pressure. So these are some of the small cap stocks which are gaining and losing as of today. But one stock which is in focus is of course Enviro Infra Engineering. Now the company has secured 5 major projects worth almost 1,500 crores, and they've also expanded into renewable energy and battery energy storage system. But to speak more about what are those orders, what are the execution timelines, and what's the growth ahead for next 2 to 3 years, we are here joined by Mr. Manish Jain, who is Managing Director at Enviro Infra. Mr. Jain, welcome to NDTV Profit, and always pleasure to have you. Let me start with the order wins, the 5 major project wins of rupees 1,500 crore. Just wanted to understand the execution timelines of the above projects, and if you could, give us details of that.
Good morning and thanks for having me. There are 4 projects of battery energy storage from NTPC. The total capacity of the projects combine all 4 projects is 930 megawatt hour, and the value is 1,070 crores. The execution timeline for these projects is 15 months. There is one project in the sewerage sector which we have won in the state of Bihar. The order value is somewhere around 400 crores, and again the execution timeline is 15 months. So this entire order book of 1,500 crore that we have won in March, this entire order book is to be executed in a period of 15 months.
Margins would also be in the range of 22 to 24% for all these orders, sir?
The margins in the water and wastewater sector, that is in the range of 22 to 24%. The margin in the renewable sector will be somewhere in the range of 15%. So that there will be a mix. Now the growth of the company in the renewable sector, that is complementing the revenues further apart from the revenues what we were getting from the water and wastewater treatment sector. So ultimately the overall revenue and the profitability, that will be good enough for the company. It is a complementing nature of the renewable sector works which we have got, and it will get added to the entire order book revenue and profitability.
And like FY27 has started with a good order inflow. Any guidance that you could share for FY27, and also how Q4 has panned out for the company?
Because this war broke out in March month, so there has been some issues with respect to the availability of the material. The supply side got impacted. So there will be some marginal impact because of the month of March, because that is the heaviest of month in the entire financial year. Apart from this, since we are having a good order book right at the start of the financial year, we can look forward to very good revenue growth and PAT growth in the current financial. Apart from this, there are various other orders which we are expecting quite soon. So on that basis, definitely our growth trajectory of what we are expecting somewhere in the range of 35 odd percentage, we expect that any miss which happened in FY26, that can be overcome in FY27 itself. So that way, the order book is robust, the inquiries are there, we are bidding for the projects, and everything seems to be aligned. There can be only one trend, at least at this point of time, since this war is going on and its impact. So the impact was there in the month of March. How long it will prolong, and if at all there can be any impact, it will be because of war. Other way around, everything seems to be aligned.
Sir, just for the benefit of viewers, so you are expecting 1,350 odd crore revenue in FY26. That means almost 630 odd crore revenue in Q4. Because of the Middle East war, will this target be achieved? Are you on track, or there will be some miss when it comes to this target?
There is some miss, that is for sure. There is some miss. It will not be exactly that number, but I cannot confirm any numbers. The audit process is now started. So it may take around a month's time or so when the audit numbers will be available. There is a slight miss, and that is why I am saying if we'll now look around over a period of 2-year trajectory. So if I look forward to 35% of this CAGR growth for 2 years, definitely it looks to be aligned for FY27. We'll be able to overcome this miss what can happen in FY26.
And sir, also, considering your historical margins, the EBITDA margins are consistent at 27%, but you gave guidance of around 22 to 24%. Is renewable the reason for dilution of such margins? And if yes, what is the contribution of renewables you're expecting in the next 2 years, which will have impact on margins?
Varsha, basically the margins, the EBITDA margins of 22 to 24% that we expect, it is from the water and wastewater treatment sector. So our guidance has always been in that particular segment, and the growth what we anticipate, that growth comes from that water and wastewater segment, which is the core segment of the company. This growth is getting this is getting complemented with the renewable sector. The EBITDA margins were 22 to 24%. So it was basically the product mix, the mixing of the various type of projects. It is water or wastewater. In wastewater itself, it can be sewage treatment plants, common effluent treatment plants, and then the type of project which can be EPC and HEM, and along with operation and maintenance. So all do have a different margin profile. So that mix gives a visibility what can be the profitability of the company. But ultimately, at a reasonable level, what we give as a guidance, so 22 to 24% is what we have achieved in all the past 3 years, and we continue to maintain our guidance. Now, if look forward to the renewable segment, basically FY26 is the first year when we started this renewable company, and the growth which will get aligned, so it will be a complementing nature of work. So I will not give a guidance that a consolidated margin. So there will be 2 different margin profiles. So with different margins, maybe at the time when we are declaring our audited results, so we'll be giving different margin profitabilities for both the sectors, and then a consolidation.
Right, sir. Sir, just wanted to understand one thing here. Can you just give us some sense of what is the kind of order bidding pipeline that the company is seeing for FY27, and what are the chances of what has been the success rate for Enviro?
Success rate of Enviro for the past year is somewhere in the range of 22 to 25%. The order book, which is currently there, for which the bidding is already under evaluation, or there are L1s, so somewhere around 3,000 crore is the order book where we have submitted our bid. If I look forward to this entire financial year of FY27, so there are huge projects even in Amrut, Namami Gange, which are coming up, along with the advanced wastewater sector, which calls for ultrafiltration, then ZLD segment. So if we combine all this, so this order book to the tune of maybe more than 60 to 70,000 odd crore is what is available and where the company can bid. So this entire order book, this entire visibility, company cannot bid. So basically we'll be bidding for the good projects where we find we are aligned and we are having good margins available with us. Apart from this, our geographical expansion, acquisitions, some good strategies which are going on in the company, and we expect some good results very soon.
Right. Well, got that view, Mr. Jain. Thank you so much for joining in and having a conversation with us. Always pleasure to have you.
Thank you. Thanks a lot.
Well, this was Enviro Infra. This may see some pressure when it comes to their Q4 guidance, but with that, let us invite the guest for our show, Girish Sodhani, who is co-founder at Ensure Capital. Girish, welcome at NDTV Profit. You heard Enviro Infra Management. What's your view on this counter? What should investors do?
So, hi. Basically, strong order books from the different verticals. The geographical locations was extremely good compared to the North, Uttar Pradesh, and Haryana and Punjab. So, all the central projections was very strong. But come to directly to the order books now. 3,000 crore order books are giving a strong margins. EBITDA margin should be very, very strong for the financial year 27 and 28. We are looking out. As well as just looking out for the overall longer view of the perspectives that the recurring income is going to be generated for the positions, we can say that next 3 to 4 years time down the line. So that's the reason I'm looking out for very attractions in this particular valuation itself. So the investors who are looking out for the next 3 or 4 years down the line, then the counters was very good. And obviously the renewable energy is giving a very big boost to this company growth revenues perspective also, like looking out for the next 1.5 year, we are looking out some around 200 or 250 crores revenue should be there from directly as well as the project lines too.
Okay, let's get in Sharat to understand what's been buzzing in the FNO side. We have seen a sharp bump up, a sharp recovery in the last couple of hours, Sharat.
Well, that's right. So, Somit, important reports coming in on the ceasefire between Iran and US and proposals also coming in. But remember, this is fog of the war and traders say this can be a sell on rise strategy as well. But we're seeing a good momentum, especially from the Tata Group stocks, Trend, Titan heading the Sensex. Apart from that, also the banking names, they have done well. But the only drag is Reliance, that's still down 3.5% to 4%, and that has not recovered yet. So there is a drag when it comes to Sensex. But BankX technicals are looking much better right now. And both of them, BankX and Sensex, are near the day's high level. Also, let's look at stock-specific moves where the action is, and Adani Group of stocks also make it to the list. Adani Green is up 7%, standard disclosure on that, and Trent also, the stock is doing a significant good job when it comes to good long build-up. Short covering for Keynes Tech and Bharat Dynamics, this was there in our list at 10:45 also, and it hasn't changed yet. Long unwinding, let's see which stocks are there in focus, and ONGC and Astral make it to the list. Remember, Brent crude prices have started slightly falling down, and that's why we are seeing some kind of an impact in ONGC, but Astral Supreme is something where the concern is. But short build-up, the biggest stock story would be the Reliance. That stock is down 4%, and some big volumes there as well. And Marico, some sort of profit booking is coming in this counter. Stock is down 2%. So yes, FNO space is seeing a lot of action, but will this sustain going ahead or not? That's the big question.
Thank you so much, Sharat, for all the details. Well, moving on, Hariom Pipes is in focus. Now this is on the back of temporary closure of one of their plant, but let's bring in Jasmeet to give us more details on that.
Well, Varsha, thank you for that. Before we get into the recent news why the stock is lying in trade, let's quickly understand a bit background about the company and what the company does. Well, company is a steel pipe and tube manufacturer, and company also operates under the name of Hariom and HPIL and has 900 plus dealers. If we look at the stock performance, the stock is nearly down 40% over the last 6 months, and over a month it has tanked 8%, and even today lying in trade down about 9%. If we look at the biggest peer of like over a year, the stock is on about 19%, and the current price stands at 14 times when you look at the price to earnings ratio. Now, in terms of the recent news, Tamil Nadu Pollution Control Board has temporarily given an order to close one of their factories, which is based out in the Perunduri plant, while the power supply to this particular plant has been cut off, and the overall reason why they have done the temporary closure is on the back of the environment compliance issue. While company is still estimating the impact on the financials so far, but they also say that they have been working with the authorities to find out the middle way and to resolve this issue at the earliest. If we look at the key financials and operation highlight, we do know that the company's over 80% of the revenue comes from the dealers network, while 20% of it comes from directly B2B business. In terms of the overall financial growth, over the last 5 years, the company has seen a healthy growth of 51% in terms of revenue, if you look at a compounded growth figure. And in terms of the overall EBITDA, that has grown to 51%. If we look at the key metrics, that is the overall production volume of last 5 years, that has seen a growth uptake of 44% on a compounded basis. Now, in terms of the current margins, are 12.98% versus 12% in the previous year. The margin have seen a trend, like it was at 13.2% 5 years ago. Then I saw a downtake of up to until 12%, and now they are again seeing an uptake in FY25. If we look at the 9-month figure, we do know the revenue is an uptake of 21% YY basis, while in terms of the overall sales volume, that has jumped by 21%. So the sales volume and revenue are going hand in hand. While lastly, in terms of the recent development, the management says they have a 60 megawatt of solar project which is still underway, and they expect roughly 35 megawatt of capacity of that to be accomplished in this month, as April 2026, and rest to be accomplished in the coming year. And they also expect this plant to start adding the revenue in the coming time. So all in all, we do see strong financials, but the stock is lying in trade today.
Thank you so much, Jasmeet, for all the details. Well, Girish, when it comes to Hariom Pipe, there was a time when people were super bullish on this stock, but because of depreciation, we are seeing some pressure on earnings. Just wanted to understand your view when it comes to Hariom Pipes.
So for the shorter period, obviously there would be the pressure because the one unit into the Tamil Nadu is basically give a big bunch into their particular performance as well as the supply chains. But come to the overall picture, with little bit of very aggressive on the volume guidance whatever companies are provided. The overall 25 to 30% compounding annual growth is a very strong numbers for the directly these type of companies we are looking out, as well as the B2B model like a channel development models are very strongly growth of approximately 18 to 20% year-on-year basis. So overall, the expectations was very strong. Come to the power generations as well as the renewable energy, their performance was little bit slow down. But for the next 2 to 3 years time around, I think the Maharashtra solar power projects is going to be expanded and give the strong build-up in the EBITDA margins. Now come to the third one, the launch of the Metal Mart. I think this is a unique idea what they are offering for their channel partners and gives a strong numbers in the revenue generations. Come to the utilizations perspectives, the utilizations are increasing slowly. But come to the direct debt reductions, they are working on their debt reductions too. So completely the whole picture is that for the longer period, the companies are looking out very strongly. But I think this news are giving a little bit shuffles on the particular stocks for the next 2 to 3 months itself only.
Okay. Confidence Petroleum is another counter that remains in focus. The stock is up nearly 54% in the last 5 trading session. It has been hitting the upper circuit of 10%. So what does this company do? It has 3 business segments. LPG division, which contributes the most part to the top line. In that segment, they have LPG bulk marketing, they have auto LPG, and they also have a bottling division. In fact, the company is the largest LPG bottler in the private space. And when it comes to the cylinder division, they have LPG cylinder manufacturing, LPG cylinder retail, and CNG retail as well. In fact, their CNG retail brand is known as Go Gas. It's in, I guess, it's in partnership with Gale Gas. Now, this is broadly the business of the company. Now, if you look at the clientele, they have all the 3 oil marketing companies as their major clients coming in, and the company also is looking now if you look at the debt of the company, that has also increased over the time period. In FY22, it was close to around 97 crore rupees. Now it has gone up to 750 crore rupees, and this is largely on the back of the expansion that the company has been doing. If you look at the compounded revenue growth of the company, it has been around 30% over the last 3 years, but this has not translated into any net profit growth because that has largely been flat for the company. And because of this, if you look at the company's ROC, that has also been on a declining trend. Its peak was in FY22 17%, and now it has nearly halved to around 9 odd percent. Now, what is the value? What is the outlook that the management has given for the next 3 years? They plan to add around 500 auto LPG dispensing stations along with 200 CNG stations. They plan to achieve a top line of around 10,000 crore rupees, and they also have plans to expand their LPG bottling plant to around 100 from 68 currently. Now, the top line target that the management has given is seems to be quite steep, because if you look at the last 12 months trailing revenue, it stands at close to 4,400 crore rupees, while the management is expecting this to double over the next 3 years. But the key question here will be, will this also translate into a growth on the bottom line front? Let's get in a fundamental guest on this to understand more. Girish, have you tracked this Counter Confidence Petroleum? The management has given a strong growth guidance. They're expecting their top line to double over the next 3 years. But do you expect that to also lead to a growth on the bottom line front?
So, yes, the managements are giving up very strong build-up lines, just doubling their expansions into the LPGs as well as the CNG stations around the Bangalore and other particular areas. But come to the perspectives of the longer period of time, little bit strong growth numbers itself, the margin pressures, the profit margin pressures are giving me a little bit concern about this particular counter itself. If we talk about the overall turnovers as well as the growth numbers, the margin pressures is still there, decreasing by 19%. So overall, I think the little bit rising into the confidence. Just go ahead with the net, at least looking out for the next 2 to 3 quarters itself, to just accumulate any particular proposition for the longer period. But because current geopolitical situations are still going on, so we are a little bit aware about the things are how the things are going to be converted in the next 2 to 3 months time.
Right, right. Well, moving on, let's pull up the chart for Vikrant Engineering. The stock is buzzing on the back of order of rupees 530 crore. Let's bring in Parth for more details.
Thanks a lot, Varsha. So Vikrant is a diversified EPC player. They have expertise in power transmission and distribution, water infra, as well as railway electrification. Their order book as of February 2026 stands at 4,700 crores. The reason why the stock is buzzing today is because the company received 2 orders from the Maharashtra government for 2 zones, which is Nashik and Kolhapur. The Nashik zone order is valued at around 235 crores, while the Kolhapur zone order is valued at around 295 crores. Both of these orders are expected to be executed in the next 21 months. And if we talk about the stock performance, then yes, the stock has rallied and gained around 8% today. But if we move on to the longer time frame, in the last month, the shares have fallen almost 5%. Year to date, the stock has fallen almost 40%. So a huge order book and order inflows coming in, but let's see if the management is able to execute them well and see a turnaround.
Thank you so much, Parth, for all the details. Well, Girish, what's your view on Vikrant Engineering considering 530 crore order win, and what should investors do post this rally?
So, investor not a right time to just jump and buy this particular counter itself for the time frame like next 3 to 4 months of time. Hence, but if you are getting opportunities to the level of around 45 to 50 levels, I think this counter is looking very, very attractive. Come to the order books as well as the segment shiftings. They are looking out attractions into the solar projects as well as the completely order book of around 4,700 crores. And the future order is also the management expectations was from around 2,000 crores. Of potential orders are currently in the pipeline of financial year 27-28. But margin pressures are still there. We are looking out for the next 2 to 3 quarters how the managements are going to be review their margins in the terms of the overall scenario. And come to the fundamental terms, the debt to equity ratio is very, very attractive. It's almost 0.59x. So looking out, the debt is completely almost a kind of these type of companies that we can say that almost a kind of a debt-free type of companies. The ROC and the PE ratios is also looking very attractive. So overall, the fundamental terms are looks attracts. And for the longer period, yes, I think this is a good counter, but at current levels, I'm not looking out very attractive for fresh buys.
Right. Well, thank you so much, Girish, for all the details and having a conversation with us. It was really nice to have you on our show. Well, viewers, this is all the time that we have on this edition of Small Cap Buzzers. Stay tuned to NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
When others are warming up, I'm raring to go. The stories that matter, the stories that shape your life.
Hello and welcome to watching Prime 5 with me, Aisha Saigal. What's happening? How to
The show that sets the
Good afternoon, you're watching the afternoon edition of Ask Profit on NDTV Profit. A quick look at the markets. The Nifty has recovered nearly 300 points from the day's lowest point that we had seen at around 11:15 of close to 22,550, and currently we are trading close to 22,870 level. The only culprit or the biggest culprit when it comes to the benchmark index is Reliance Industries. That is pulling down the benchmark by more than 70 points while all the other all the major other stocks have been gaining in trade. If you look at the sectoral indices, among the major sectoral indices is the Nifty Real Estate Index, which is up around 1.7%, followed by the banking indices like the Financial Service, PSU Bank Index and the Private Bank Index, which are up anywhere between 1.5 to 1.6%. On the losing side, we have Nifty Energy, which is largely the oil and gas index, which is down or largely flat in trade, and this is largely because of Reliance Industries, which is down around 4% in trade. When it comes to the F&O names, it's Adani, Green and Trent, which are the top F&O gainers, up around 7%, followed by Kalyan Jewellers and RBL Bank, up anywhere between 5.5% to 6.5%. On the losing side, among the F&O stocks, apart from Reliance Industries, it's Astral, ONGC and Marico, which are down anywhere between 1.7 to 2.4% in trade. Well, that is broadly the markets. Let's also welcome in our fundamental guest on the show today who will be addressing all the viewer queries today. Lancelot Dicona, CIO of ValueX Wealth, and CA Rudramurthy, BV, founder, director of Vachana Investments. Well, let's start off the first query coming in from Lalita from Bangalore. 100 shares of Devyani International bought at a price of 124.8. The current market price is 100, sitting on a big loss. She's asking what should she do? Should she continue to hold this counter, book loss or average? Lancelot, any view on Devyani International?
So, Devyani has been in the business of quick service restaurants in India, and however, that business has got impacted, and Devyani, if you look at its even last year performance, was impacted a bit, by the rise in input costs as well as the fall in demand, and we have seen that it has struggled, and that's where the stock has corrected. From a longer term perspective, I think the conditions are still going to be relatively difficult going forward. And hence, maybe there would be some further correction. If that happens, then probably it can be an opportunity to average out. But otherwise, at this point in time, one should probably stay away.
The next one is coming in from Sankalp. He wants to know whether the current levels are a good buying zone for Genius Power. Any view on this, Lancelot?
So Genius Power Infrastructure is actually as part of the Kailash Group, and it's basically into smart metering instruments and phase meters, 3-phase, etc. meters. If you look at the performance of the company, the growth has been relatively slow over the last couple of quarters, and I think the conditions being such that it's unlikely to pick up immediately. So one should wait, because this stock is trading at almost 14-15 times earnings. So one should just probably wait for either a price correction, or if there's an improvement in earnings, then one can look at getting into the stock.
Query is coming in from Suresh Nair from Hyderabad. He's holding 64 shares of Kalyan Jewellers, bought at a price of 502. Should he buy more, hold or sell? Rudramurthy, any view on Kalyan Jewellers?
Soumit, clearly today it has given a breakout above 405, and I'm very sure, seeing the current market price, the close will be above that breakout zone of 405. Looks very, very bullish, and also a lot of futures open interest addition is seen on the positive side. And also, if delivery volumes confirm that, this is a very clear breakout. Even at current market price, I will be a buyer and buy on dips to those levels of 405 where you have got the breakout. And I will be looking at initial targets of 445, 450 to come. Stock is available in futures. Definitely one can go long, and eventually even targets of around 500 is possible. So definite buy at current market price.
Okay. Sudhakar from Bangalore wants Lancelot, your view on Pine Labs. He has bought 40 shares right at the time of IPO. The share has been falling. Should he continue to hold this counter, Lancelot?
So, the IPO price was relatively very expensive. It was, while the business is good, they are in the business of payment systems, and that is helping, used all over as far as retail customers are concerned. But when you look at valuations, I think compared to the profits that the company is growing, the valuations are very high. So I think at this point of time, markets are discounting, all high value customers, high value investment options. Hence, one should stay away from it at this point.
Okay. One of the viewers has bought few shares of TTK Prestige at a price of 582. Should he hold, sell, or accumulate? Rudramurthy, any view on this?
See, the clear trend on TTK Prestige is downwards, and yes, I understand it's a fundamentally strong company, has given a lot of wealth for people who have bought it and held it. But at current market price, if you are a short-term trader, I will not advise you any buy here because the trend is down. Let it at least cross levels of around, let us say 500. And then if it shows momentum, then yes, one can look at buying for trading purpose. But if it is for investing, yes, on dips you can buy this company, which has been a great wealth creator.
Okay, the next query is coming in from Gedam from Vishakhapatnam. He has bought around 234 shares of JSW Energy at a price of 535. Shall he hold or exit or average? Rudramurthy, any view on this?
Clear hold, clear average. And I feel because crude oil prices have gone up so much, these alternative sources like energy and power themes can do very, very good. In fact, even Coal India is one script which I like a lot at current market price. Risk reward is very favorable. And similar stock and similar theme will be JSW Energy. And if you see charts very clearly, 460, 470 has been a very strong support zone. At current market price, definitely I will be a buyer in JSW Energy. Look at targets of 560 initially on JSW Energy and buy at current market price. Keep a stop loss of around 470 for the long call.
Okay, the next query is next query is coming in from Murthy from Vizag. Rupa or Kitex Garment, which one should he accumulate now? Lancelot, any view on this?
So I think, both are going to struggle going forward. Number one is you still have the overhang of what's happening in the US and the US tariffs and how they're going to impact the garment industry. Second overhang is now that you have supply disruptions in terms of, the raw materials required for garments and for crude, etc., based raw materials that come in on the textile front. I think you are going to see further pain in the sector. So one should probably, exit or not invest in both these stocks at this point in time.
Okay. The next query is coming in from West Bengal. Call wants to know the outlook on RVNL. Lancelot, any view here?
So I think RVNL is, a lot of its business is only dependent on the India railway projects and infrastructure projects. The government has assigned a larger share of projects to RVNL, and you are seeing that since it has increased its allocation, RVNL is benefited. However, when you look at the valuations, it is trading at 47, 48 times earnings. And in order to, justify this kind of valuation, it has to at least grow at 50% year on year, which is not really the case. So the valuation being expensive, one should wait for a correction and then one should buy into the stock. Longer term, the outlook is definitely good.
Okay, Siva from Amravati is holding 10,000 shares of Rain Industries, bought at a price of 178. Can he hold for the next 3 months? Rudramurthy, any view on this?
See, Rain looks a strong stock, and yes, when metals also do good as a sector, this Rain also does along with it very good. So for me, Rain has a strong support at levels closer to 100. So at current market price of around 110, I will be a buyer in Rain and keep buying it on any dips to those levels of 100, which is a good price to accumulate, and keeping a strict stop loss of 90. I will be looking at targets of around 150 to come. So it is a 1:4 kind of a risk reward even at current market price. So buy Rain at current market price, add it on every dips to 100 with a stop loss of 90, look at targets of 150 to come. So definite buy at current market price.
Okay. The next query is coming from Santhi, and he's holding, he wants to know whether the current price is a good entry point for Narayana Rudhala. Rudramurthy, any view on Narayana?
See, for me, yes, Pharma is doing really good, and some of these healthcare related stocks can do good even from here. So yes, stock has corrected a lot from its top level, and at current market price and on any dips to these levels closer to 1,600, I will be a buyer. So buy Narayan Rudhyalaya at current market price.
The next is a caller query coming in from Pune. Swapnil, you can go ahead and ask your query.
Hey, good afternoon to you and everybody. I brought Reliance at 1450 or some 1300 shares. I want to know, should I average it now, adding more, or should I sell it?
That question is there in many viewers' mind. I have got multiple queries on WhatsApp on Reliance Industries given the sharp fall that we have seen. So let's first take the fundamental view here. Lancelot, should one average Reliance Industries at the current levels or avoid?
So if your outlook is, you're willing to hold on to the stock from at least 3 to 5 years, then one should look at adding to your positions because, the fundamental business of Reliance will continue to grow, and the impact of, the negatives on account of the crude situation will ease up over a period of time, and then things will go back to becoming a little bit more regular. So I think longer term, yes, the company is very strong in its business opportunities, and they're also looking at a listing of their, GeoMart and retail businesses. So it will offer more value going forward. So one should either invest at lower levels or just hold on to the existing investment.
And Rudramurthy, any technical view on Reliance Industries? How's it looking on charts?
Soumit, very clear. If you are a short-term trader looking for momentum, in fact, the break has happened today on the downside. In market like today, Reliance is underperforming, and crucial support at around the 1310 has got broken in Reliance. So as a very short-term trader, definitely I will not buy this stock. But if you are a long-term investor, as our fundamental expert also told, if you have the time period of, let us say, 3 to 5 years, definitely yes, on dips you can buy Reliance. But as a short-term trader, wait, because today is the first day it is trading at the lowest level in last 1 week, and also it has broken crucial support at 1310. So I will not adventure a buy here, but for long-term investor, yes, you can consider.
The next query is coming in from Rajiv from Kerala. He wants to know what is it a best time to invest in Tata Motors commercial vehicle? Any targets or support levels that you could provide for this Lancelot for long term?
From a longer term perspective, I think Tata Motors, is, while the commercial vehicle business is primarily restricted to its India business, but we are expecting that, given this disruption in supplies, etc., you are going to see a little difficult year for Tata Motors commercial vehicle. And, that could have an impact on its profitability. So I think there's an opportunity to buy the stock at little lower prices.
Okay. The next query is coming in from Ramesh from Chennai. He has bought 200 shares of Graphite India at a price of 718. He wants to know the view for the next 3 months. Rudramurthy, any view on Graphite?
See, at current market price, definitely the stock shows good short-term uptrend, and there is strong resilience in the stock nearby to the support zones of around 600. So at current market price, I will definitely be a buyer. If you have it, hold it. And I won't be surprised, yes, in the next 3 months time frame, what he is asking for, he can look at price targets of around 700 to 730. So hold on, buy even at current market price, look at targets of 700 to 730 and keep a stop loss of around 600.
The next query is coming from Ramesh from Bangalore. He has 10 shares of ICICI Pru AMC, bought at an average price of 2,660. Is currently sitting on a profit. Should he buy more or sell his share at the current juncture? Any view on this, Lancelot?
Yeah, I think the asset management business is going to continue to grow from a longer term perspective. While yes, there may be some impact in the short term because people may, they may not invest as much, as well as, market values go down, and based on which the fees of the asset management companies get impacted. But if you consider it from a 3 to 5 year view, one can definitely add to the positions.
Okay. The next is a caller query coming in from Bangalore. Sean, you can go ahead and ask your query.
Sir, I have this BDL 900 quantity, which I bought it for 1400. Can you kindly let me know what to do, sir? It is gone very low.
I know. Can you hold for long term?
Yeah, I'm looking for a long term only, sir.
Okay.
Long term means, can you tell me how long it is?
At least more than 12 months. Can you hold that?
Yeah, I can hold it for 12 months.
Okay, Lancelot, so should Sean continue to hold this counter for long-term Bharat Dynamics more than 12 months at least, because it's currently sitting on a loss?
So, if you look at a longer term business, and I'm saying long term is not necessarily only 1 year, it needs to be at least 3 to 5 years. The reason being this stock is trading at 77 times its earnings. Now, while the outlook for business is good, it is very expensive even at this price. And you could have a short term correction because if any quarters the financial performance is not good, the stock could be re-rated downwards. So if you're willing to hold it for minimum 3 to 5 years, yes, one can hold on to it. Otherwise, maybe worthwhile to average out if it does correct further, and maybe when it trades at around 30-35 times earnings, that would be a good time to accumulate the stock.
Okay. The next query is coming in from Venkat from Hyderabad. He has 44 shares of Cyient, bought at a price of 2,231. Should he hold or average more? Rudramurthy, any view on Cyient?
Clearly, the stock is in a downtrend. It has broken all crucial supports, trading at the lows. So there is no strength. If it is for short-term trading, definitely avoid, or I won't suggest an averaging out nor to catch a falling knife. You can look at switching over to other IT stocks relatively where there is strength. It can be either Infosys or even look at Tech Mahindra, which looks very strong to me on chart. So if you want to be in IT, be very choosy. And two top picks from IT from my side will be Infi as well as Tech Mahindra.
The next query is coming in from Sai from Andhra Pradesh. He wants to know whether is it a good time to buy Max Healthcare, given the fact that the stock is at its 52-week low. Rudramurthy, any view on Max Health?
I will definitely avoid stocks which are trading at 52-week low unless you understand its fundamentals so well and you are also having a long time horizon and you want to buy it for your portfolio. That's a different story. But then if I just go based on the chart pattern of Max Health and trading at the lowest levels in last 1 year, I don't advise any buy here. But yes, you have a strong support zone for the stock now, right at those levels of around 930, 920. So if you already have the stock and if you want to average it out and if your time horizon is long term, keep a stop loss of 900 and then only hold on to your existing positions or even average at current level. But a stop loss of 900 is a must.
Mr. Singh from Ludhiana has around 857 shares of Bombay Dyeing, bought at a price of 109 rupees. Should he hold or sell? Lancelot?
So if you look at Bombay Dyeing, basically it's trading at 115 times its earnings. I think the major business now is in the real estate developments side, which is a long drawn business and where cash flows are going to be lumpy. So I think given that, we are seeing, some amount of saturation in that business and a little bit of slowdown expected, one should look at exiting if one can at this particular price point.
The next query is the next query is from a viewer who is asking for some support levels for Hindustan Copper and whether should one buy at the current level. Rudramurthy, any view on this?
See, if you look at charts of Hindustan Copper, yes, there is a strong support for this stock at around 450 zones. At current market price, yes, I will be a buyer in Hindustan Copper. And if you get any dips to levels closer to 470, 480, you can buy. But do understand that this is a volatile counter and you have to have that kind of a risk-taking ability to buy these stocks, whether it is Hindustan Zinc, Hindustan Copper. They all move very fast, either on the upside or on the downside. But at current market price, yes, it looks a good buy because the stock has already corrected from those 750 zones to current levels of around 500. So I'll be a buyer at current market price. Buy on dips to levels closer to 470, keep a stop loss of around 440 and expect a target to come at around 650.
Somashikar from Bangalore wants to know whether should he buy Hindustan Aeronautics at the current price for the next 2 years. Lancelot?
I think Hindustan Aeronautics, it is an expensive, stock because it's trading at a high multiple. But if one looks at the fundamental business, it is growing and a lot of the government orders are coming to HAL. So one should look at, accumulating it. But currently valuations are more than 70 times earnings. One should probably wait for a decline in the price before one can accumulate the stock.
The next is a caller query coming in from Mumbai. Ankit, you can go ahead and ask a query.
Yeah, I wanted to know, hello all, I wanted to know about Sports King India. I have 500 shares at 120 rupees. I wanted to hold this for long term at at least 3 to 5 years.
Okay. Lancelot, any view on this counter Sport King India?
So from this company is basically focused on manufacturing yarn and textile production. So in that sense, the business is relatively very less. The profitability in the business is low. Sales growth has been pretty low over the last couple of years. And since there's not much growth happening either in the sales nor the profitability, one should avoid investing in this company. There are a lot of other better opportunities with a better risk reward ratio that can be looked at.
Well, with that, let's start our rapid fire segment. Lancelot and Rudramurthy would request you to keep your answers short to buy, sell or hold. The first one coming in from Rao from Hyderabad. He has 40 shares of Gulf Oil. Can he hold for next 3 years, Lancelot?
Hold.
Sambasiv Rao is holding 10 shares of PI Industries. Should he invest? Should he continue to hold this counter, Rudramurthy?
Hold.
Rajiv from Delhi wants the 6-month technical view on Trans Rail lighting. Rudramurthy?
See, if I see the chart pattern, it is on a downtrend, but now at a crucial support zone. So I will hold with a stop loss of around 450.
Varshish is holding 150 shares of Grow, bought at a price of 100 rupees. Should he continue to hold this, Lancelot?
Hold.
Okay. The next one is from Ramesh from Bangalore. He's holding 1,715 shares of Canara Bank, bought at a price of 136, currently sitting on a loss. Rudramurthy, should he continue to hold this counter?
Hold and also average out.
Well, with that, we come to an end of this segment of Ask Profit. Stay tuned and keep watching NDTV Profit. Thank you, Lancelot, and thank you, Rudramurthy, for joining us and solving your queries.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
And here's where you can watch us.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
When others are warming up, I'm raring to go. The stories that matter, the stories that shape your life.
Hello and welcome to watching Prime 5 with me, Aisha Saigal. What's happening? How to
the show that sets the prime time agenda.
We'll be deep diving into this topic to tell you what's at stake.
Join me, Raisha Sehgal, on Prime 5, only on NDTV 24/7.
Will the rising sun win with a hand in hand? Will the two leaves and lotus bloom? Who will whistle to success in Tamil Nadu? To understand the Tamil Nadu twist, join me in the midst of our politics and people. Vanakkam Tamil Nadu. Here we come.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
Welcome, you're watching India Market Close, and what an exciting Monday closing session it's turning out to be. Largely because of hopes of a ceasefire. Alex, this is truly, telling about how the only thing, in a sense, putting pressure on the markets right now is what's happening geopolitically, and the first sign of that tension lifting, and look at how markets behave.
Yeah, absolutely. It has to do with that Axios report, the possibility, even the whiff or a sign of a ceasefire, a 45-day ceasefire is being spoken about, but nobody's sure about whether this is going to pan out. You still have a sharp spike in the market.
I think a few more updates since the Axios report this morning. So this morning, of course, that report that we put out, that a 45-day ceasefire is being mulled. That now got built upon with newswires reporting that there could be a ceasefire for after 15 to 20 days. That's when you saw this sharp spike. Iran, in a statement a few minutes ago, has said that the Strait of Hormuz might not be opened even if there is a ceasefire. So, of course, there is a fog of war. Markets have paused recovery because of the uncertainty on that ceasefire chatter. Reports say Iran-US get hostilities end plan. Iran has rejected a temporary Hormuz reopening. This is what NDTV is reporting. Meanwhile, Reuters is saying we could see a final deal in 15 to 20 days. So there has been a technical bounce, but reversal is unconfirmed. If you look at the kind of lead we're seeing today, you have large private banks leading, Reliance is dragging, but value buying is continuing in small and mid-cap stocks. So the risk-off tone is gradually easing. Bond yields are also softening. You've seen the rupee strengthen, and you could see a sell-on rally. I think the big one, though, Alex, is going to be that press conference at 10:30 tonight, India time, where Trump, with the top brass of the American military, is going to be addressing the media. My guess is he may have those rescued fighter pilots there with him at that press conference as well.
It's all about showmanship at this stage, and you've seen a lot of saber rattling from both sides, right? Particularly over the weekend, you saw the tone and tenor of that social media post that everyone seems to be talking about. But let's take a slightly more deeper look at how the markets are right now. We're at the high point of the day, as we showed you for the Nifty 50, but let's look at the internals and look at Reliance Industries, which you will see at the bottom of your screen if you pull up the heat map for the Nifty 50. And ultimately, it is HDFC Bank that is balancing things out on the other side of the spectrum. You will see that in the contributions chart in just a moment. But take a look at that, 3.6%, a very heavy weight on the downside for the Nifty 50, but a stark change from what we saw in the morning, Tamanna. You had green only to this point approximately, and that is spread across the screen. What is looking good is Trent. Oh my goodness. What a story this is.
Not just Trent. Actually, look at the Tata Group stocks today. Trent, Titan, Tata Consumer, all of them shining. The fact that along with an HDFC, Bajaj Finance is pulling up, and L&T rebounding the way it is very telling to me, because L&T has been depressed because of this whole Middle East crisis situation and their exposure to those geographies. If you pull up the broader markets, let's do that very quickly as well and just give you a sense of what's happening there. The mid cap also doing phenomenally well at the high point of the day, 1.5% up. That climb there is good. Small cap not so much, about 1% up, and the sectoral heat map will tell you that the story is going beyond just the business updates. What you were seeing in the morning was the business updates. So save for the oil and gas, because
which is Reliance,
and Brent is, if you pull up the latest, Brent is still high up there because all of the stock is there, but not too much going out of the Hormuz, and it's Reliance specifically which is in pain. We'll have a special report by Somit Sarkar in just a bit to tell you exactly why, but Brent actually has cooled off a slight bit at 108. So it's going to be painful. We should look at what Europe is doing very quickly, because if this is definitely a situation where there is some easing, so at least the FTSE is now showing this. DAX also off its lows, about 0.5% down.
But we've also had much more carnage in our markets compared with some of these global markets. So I think to a certain extent that relief is warranted.
Yep. Himain Kapadia joining us this afternoon. Himain, very good afternoon to you. Are we seeing 23,900 sustaining, because that's where the Nifty seems to be oscillating?
A very good afternoon to you, Tamanna. Thank you for having me on the show. It's always a pleasure. 23,900 sustaining. I'm probably seeing 22,900 sustaining. I'm probably seeing 23,400 and 23,800. Markets are deeply oversold, Tamanna. I know this is obviously on the news of a pause in the war situation, but we were overdue for a bounce, and I think that's what is happening. I think the month of April, unless there's going to be some major new hostility, the month of April should be good for markets. In fact, if you see over the last 10 April, I believe 8 to 9 have been positive. So I would say a recovery, and a pretty good one at that, is underway and should be for some more time. Tamanna.
So, Himain, hi, good afternoon, Alex here. And so therefore, on the individual stocks, right, some of these frontline names, even if you look at it from the valuations lens, Himain, a lot of people have argued that we are at very attractive levels, valuation-wise. If you were to buy into individual names, would you gravitate to some of these large cap stocks, and which ones?
Okay, hi, Alex. Yes, I think you guys spoke about HDFC Bank. I think that makes a lot of sense on technical parameters. But if you ask for my individual stocks, I would buy anything in IT. IT has been hammered out of shape. I mean, most of the market has been no exception that way. But I believe IT is going to be positive for the month of the month of April. So if I have that freedom, I'd like to buy TCS, Alex, at 2470, stop loss 2420, target 2570. And the other, my stock pick, Alex, if I can give you, Radico Khaitan at 2660, stop loss 2610, target 2760. Both of these are looking good. And like I said, anything in IT and anything in sugar, Alex, sugar is posting a longer term bottom. IT is posting a short to medium term bottom. Alex.
Okay, fair point. All right, so anything in IT, interesting, right? Pull up the IT index as a whole and see where it is at. And I wouldn't be surprised if it's at the high point of the day. Remember, it's had a wobbly, so it's not. It's cooled off just a tad bit. If anything, I think it's the Nifty Bank that is at the high point of the day. And it's had a wobbly day so far as well, up about 1.8% or thereabouts. It has underperformed in the recent past. But let me go across now to Sharad Dubey, who's joining in to tell you about the stock of the day. We spoke about Trent briefly. It is the best performer in the Nifty 50 and finally having its day under the sun.
After a long time, Alex, and the momentum which is there in April month, it's a double-digit return already, and just 2 trading sessions is there. Interesting stock and interesting update coming in. The revenue growth you see and compare with the last 2 quarters, and Trent has done really well. The range was roughly around 17% at an average, and this time it's at 20% in this quarter. Now, the average revenue per square foot, however, that has reduced. That's around 2.8% of degrowth coming in. And the business update, if you look at it, overall, the revenue has jumped 20%. And the sale from merchandise, if you look at that, that level is also up 21%. Now they've opened 22 West Side stores and also 109 Zudio stores. So that is something which the street is liking out for. But going ahead, there are some triggers to watch out for. A stable like-for-like growth is expected in the fourth quarter numbers. A throughput ramp up in the new stores, that numbers we already saw in the operational update. And the sustainability of this is very much important. But let's look at valuations. How does this actually pan out for Trent? The highest PE valuation was 104 times in February 2025 last year. The 5-year average still on the higher side, 131 times, and the current levels, it's at the lower side, 81 times. And if you look at the forward, that is still at the lower side at 73 times. So of course, valuations are definitely high, as analysts talk about, but looking at its average numbers, it is still on the cheaper side. Let's look at the guidance, how things pan out. Almost 20 to 25% of guidance is expected to come in, and management is expecting more traction to come, at least in the medium term. Brokerage views also, let's have a look. Citi has given a cautious stance due to competition and store cannibalization, while Morgan Stanley expects Q4 standalone EBITDA margin to improve by 100 basis points. And lastly, Macquarie believe that the same store sales growth momentum has improved. So we can see a mixed reaction coming in from the broking houses, but the markets have clearly given a thumbs up for Trent.
Got it. All right, thanks so much for that, Sharad. Let's bring on board Ashish Chaturmota, Managing Director and Fund Manager at Apex PMS JM Financial. Ashish, thanks so much as always for taking the time. I wonder if you heard some parts of what Sharad just described on Trent about the fact that brokerages are still divided. I wonder what your view is, particularly on the back of a pretty healthy quarterly update and a sharp uptick in the stock price.
Yes, hi. So, see, as far as a lot of these retailers are concerned, whether it's a DMart or Trent, Vishal Mega Mart, V2 Retail or V-Mart, we see what we are observing is this is a complete divided. So if you look at companies like DMart and Trent, both are trading even today at a very, very high multiple. But if you look at the growth, so for example, Trent is now going to grow at 20-22%, but still trading at a very high PEG ratio. Same is the case with DMart, which is seeing a very, very strong store additions and seeing strong sales growth also. But at the same time, if you look at the top line growth versus what the PE multiple we are going to pay, it looks little expensive. But same way, if you look at some of the small players who are more into tier 3, tier 4 markets like V2 Retail or Vishal Mega Mart, we think these companies are showing much better growth with reasonable valuations. So our view is that as far as Trent and DMart is concerned, it could be a tactical opportunity to play out in the shorter term time frame. But from a long term perspective, it looks like the stock is going to consolidate in a broad range for a very long period of time. Whereas the risk reward looks very promising from a medium to long term perspective in stocks like V2 Retail, Vishal Mega Mart, and there are some other players, but preferably our topic would be V2 Retail and Vishal Mega Mart.
Okay. So why don't I go to you, Hemant, very quickly on some of these names, right? So doing particularly well in trade today, Trent, Vishal Mega Mart, even a DMart on the back of that quarterly update. Would you buy into any of these on the basis of technicals?
Trend looks very promising from a medium-term point of view, Alex. 83.45 to 32.75. And if you take the swing high in July of last year, 6,200, so it became half or almost 1/3.
Hemant, sorry, I might have mistaken those numbers. Could you repeat the range that you were talking about?
Yeah, if I'm talking about Trent, Alex, it's come off from a high of 83.45 in 24 October, to 32.75. If I take the swing high, Alex, in July 25, that was around 6261. So from there also it's become half. So it's virtually fallen off a cliff, deeply oversold, downside limited. We saw a reversal last week. We saw an upward bar reversal coming in, gap up, indicators positive. Everything seems to suggest, okay, it's moved up quite a bit today. So probably from that point of view, even DMart has moved. So Vishal Megamart is technically cheaper. Then it would be Trent, and then it would be DMart, because DMart has moved from 36.50 to 45.50 in a matter of 3 weeks. Alex.
Okay. Himen, stay with us. Ashish, stay with us. Speaking now with Amish Shah, Head of India Research at BofA Global Research. Amish, very good afternoon to you and great to speak with you. You know, when we were discussing your report this morning, things were looking much gloomier than they are now. But then again, that is the nature of the world that we currently live in. I just want to come to you on your Nifty outlook for 2026, and of course it has been cut significantly and understandably. What do you think are the residual pain points India will see when this war situation eases? Because it will happen sooner or later, but what is the damage that has already been done to corporate earnings in India?
Absolutely. First of all, thank you, Tamanna. Always a pleasure talking to your team. So look, I think the damage is more in the on the front of macro and commodities. So even if the conflict were to end immediately, it will take some time for energy supplies to come back to normal. And as a result, we do think that the crude, which was at around $60 a barrel prior to the conflict, is likely to stay elevated for the rest of the year. We are working with a target of 92.5 for the year as a whole, which basically means $100 for the residual year. And as a result of that, and that aside, obviously there is impact from natural gas, LPG, all of these put together. We do think that the GDP growth, which we were estimating at 7.4% earlier, is now likely to be more like 6.5. Fiscal deficit, which was budgeted at 4.3, is likely to be 5. Inflation is going to go up. We are also talking about 50 basis points of interest rate hikes. So all in from a corporate earnings perspective, we do think that FY27 earnings could settle down at 8.5%, much lower than the consensus at 15 as of now.
So that's a sharp cut, but even for the Nifty target to go from 29,000 or to 26,200, are there some sectors or stocks that you think would be relatively unscathed or less hit, Amish?
Absolutely, Tamanna. So there are some obvious sectors, like let's say the regulated power utilities. They are, as the word suggests, they are regulated and therefore they are on guaranteed profits. So conflict or no conflict, their profits does not get impacted at all. So those, I think, are definitely going to be outperforming. IT is another sector where we think that because of the conflict, rupee, as we know, has depreciated. And while on a long-term basis, we are not that optimistic on IT, but in the near term, clearly IT stands out as a sector that in fact benefits from a rupee appreciation. Pharma is the next one. And then we do think that, some of the capital marketplace on increased volatility will see in fact increased business. So some of these we think are beneficiaries actually. And if you believe our view of rate hikes, then banks, SOE banks, some of these rate sensitives will actually see NIM expansion as a result of the rate hikes, so they will benefit as well.
Okay, very interesting. Amish, good afternoon, Alex here. So one line in the report was that markets are not yet at true value zone or in a true value zone. And from the layperson's perspective, they've looked at 2 years of relative underperformance and a crack, particularly over the last 1 month. But having said that, valuations haven't come off very dramatically. Of course, they've come off, but compared to average over the last many, many years, we're still above, aren't we?
Absolutely. So you see, valuations you can cut in multiple ways. So you can look at valuations of Nifty compared to its own history. You can look at Nifty in comparison to emerging markets. You can look at equity valuations compared to bond markets, and so on and so forth, right? So as of now, when we look at the valuations as a totality, because of the conflict, while Indian markets sold off, so did some of the other emerging markets as well. So on a relative basis, India's valuation premium to emerging markets is still quite elevated. And as a result, India in the context of EMs is not still that attractive. Secondly, bond yields, as we know, has gone up from 6 to 7.1. And as a result, bonds versus equities, the equation is still not completely in favor of equities as of now. But Nifty, in comparison to own historical valuations, has obviously come off, and that is an encouraging sign. So that's why I would say that valuations have become reasonable, but valuations are not really in a deep value zone. So you will make money, but if you're a foreign investor, you would possibly make money in other emerging markets as well. So therefore, our view that India will underperform EMs, but from the current levels has a potential of giving you a 15% rupee returns. So I guess if you're a retail investor in India, you could play for that 15. But if you're a foreign investor, you are going to compare that 15 minus the rupee depreciation, and that in comparison to emerging markets like Korea, Taiwan, China, etc., where India does not stack that well.
That's a fair point. I do want to ask one last bit, which is, why is this different from a COVID-19, say, for example, or a certain other crisis that you might have seen between 2010 and 2020? We're actually seeing significant damage, Amish, being made to oil infrastructure. And so you can have perhaps a year, 2 years, 3 years, 4 years, maybe in certain situations, where this infrastructure limps back. So therefore, is this going to be a protracted period of higher commodity prices and thereby scrimping of margins for corporate India, various other problems geopolitically, leading into balance of payments problems for India? Is that why this is different?
Well, yes, Alex. The short answer is yes. While we agree that the damage to the energy infrastructure because of the conflict has been there, and commodity prices as a result will continue to stay high, so let's put numbers. So 50, as we know, 15 million barrels of oil per day is what is basically getting disrupted. But there are going to be alternative supply routes. Once the Strait of Hormuz opens up, then maybe we could argue that production can ramp up quickly, and over a 4 to 6 months period, there is at least some solution in sight. During COVID, that disruption was far too long. So that's point one. So the way to think about it is that for FY27 as a whole, will the prices of energy stay elevated? Answer is yes. Will it continue to stay high in FY28? Debatable. If the conflict ends soon, as some of the news is doing rounds today, then I think by FY27, or in fact by second half of FY27, there will be a solution in sight. So I would not particularly worry about FY28 earnings, whereas during COVID, things had just come to a stop. Construction activity, people movement, all of that, had a very large and a protracted impact on earnings, which doesn't seem like this time around if the conflict comes to an end.
Amish, when you're seeing some of the initial business updates coming in, and I know it's for a period that is pre-conflict in that sense, but as far as financials are concerned, some of the consumption stories, retail stories looking very exciting. And I know these are trailers, not the full picture. Do you think that there is inherent strength that in corporate India's performance that the market is not willing to look at right now because of overriding factors, and these will come to the fore?
Absolutely, Tamanna. So I guess, if you just rewind back prior to the conflict, the excitement was that Indian government has done 2 rounds of fiscal stimulus in the form of direct tax cuts, GST cuts, and then there was 125 basis points of monetary cuts, plus there was liquidity, plus there was easy regulations from the RBI. So clearly, it seemed like we had marked the bottom in terms of corporate earnings. and corporate earnings growth was going to accelerate. So the strength of the economy was already there, and macro was looking in a very good shape because current account deficit was less than 1%, fiscal deficit we were constantly consolidating, rupee had started to stabilize. There was in fact view that we will cut interest rates further on the back of Fed possibly cutting interest rates post-June once the Fed governor changes. So all of that was basically economy already coming out of a slowdown and actually wanting to accelerate. So for the time being, because of the inflation and the growth impact that the conflict has brought in, a couple of quarters we think that there will be damage, which is what we've already priced in our earnings estimates. But thereafter, I do think that if the conflict ends soon, the inherent strength in the economy will come back, and that is clearly something that the markets doesn't want to price in as of now. But obviously, it's all the duration call. In case if the conflict drags on, then the impact on corporate earnings is not going to be a linear function. The deterioration is going to be quite rapid.
Okay, Amish, as makes sense, there's of course different scenarios that you've painted in the report that you've put out today as well. What is the worst case scenario that you're seeing play out and the possibility of it right now? Just want to understand if that was more of a intellectual exercise, because of course every report has to look at all scenarios, or is that something that you see possibly happening?
So Tamanna, the worst case is obviously the threats that are doing the rounds, that there is going to be a damage to the energy infrastructure, the power plants, oil, gas, fields, etc. If that happens, clearly to Alex's point, that the revival of that infrastructure will take several years to rebuild, and in the meantime, a lot of supplies of crude gas is off the charts, and therefore crude prices, natural gas prices will stay much elevated, even further elevated from where we are for a very long period of time. That is your real worst case, and in that case, then the impact is not just for FY27 earnings, but it will spill over to FY28, possibly even FY29. And if it is going to be that protracted an earnings impact, then clearly the valuation multiples will also respond by contracting. So taking the cue from COVID, which was a long-lasting impact, valuations for Indian markets had gone to as low as -2 standard deviation. We are currently at long-term averages. So then you are talking about impact on growth, plus the impact on valuation erosion. That is a worst case that we talk about. It could be a scenario. We all hope that that is not a scenario that we go through. But otherwise, we do think that if the conflict ends, which is the base case that we are working with, then there is a 15% upside potential. Okay. If the conflict drags on for another month or two, then we think that there could be a 8% downside from where we are.
Okay. Even if it ends but in a month or two, then we're looking at further pain. Got it. Thank you so much, Amish, for coming in and speaking to us. We always enjoy our conversations with you and the clarity that you bring to all of your answers. Always a pleasure. At the baseline of all of this is the question about what happens geopolitically, and that's the report that we want to get you. So many reports in the last hour or so, and you're actually seeing the impact of that on your screen. If you pull up the Nifty intraday, you have reports from Bloomberg, Reuters, all agencies putting in different versions of what they think is happening. But I want to go across to NDTV's Pradeep Datta, who is joining us live from Tel Aviv to give us a sense of what he's picking up on ground. Pradeep, great to speak with you. The reports that we're getting and what markets are reacting to is the possibility of a ceasefire or talks of a ceasefire. Now, soon after that initial report, there's been a response from Iran saying that even if there are talks for a ceasefire, the Hormuz will not open. What are you picking up?
See, what we have got to know from different sources and agencies is that a temporary ceasefire is something that is not acceptable to Iran. They are saying that for temporary ceasefire, they are not going to open Strait of Hormuz. That's what actually has been conveyed. Though the only green shoot we can see right now is that Iran is reviewing some of the peace proposal, because problem is that there is a trust deficit between Iran and the United States of America. Their argument is that they had gone for the ceasefire even in Gaza also, but everything remained on paper. Never ever the words were translated into into action. So they do not want the same thing to happen to them, because they know this Strait of Hormuz is a kind of a bargaining chip for them, which they can use on the negotiation table. And once they give up on Strait of Hormuz, automatically they'll be losing the dominance over the region, and also America will start dictating them terms. That's one of the reasons that they are not agreeing to it, because they want the hostilities to end forever. Because we have seen already some of the regional players, they are trying to play a role of an interlocutor, mediator. Even there has been a proposal from the Pakistan side. He's in touch. Pakistan's General Asim Munir is in touch with J.D. Vance, Vice President of United States of America, and also in touch with the Iranian counterpart. So he is in touch with them also. But so far as Pakistan is concerned, because one can't take Pakistan seriously. Yeah. If we talk about Pakistan as a country, if you look at its track record, they had always been fishing in troubled water. But Pakistan had never ever been a country that has ever tried to bring end to conflict. But they had always tried to stoke conflict. So let's see how things are really going to pan out. At the end of the day, one man is going to decide whether there's going to be ceasefire or not, whether there's going to be peace, and that is Donald Trump.
Absolutely. Pratik, thanks so much for taking the time and for explaining all of this to us. Very important update there. Let's go across now to James Dorsey, Senior Fellow at S. Rajaratnam School of International Studies. And we've been speaking to James through this conflict, and we appreciate that he's joined us once again to give us his perspective. James, thanks so much for taking the time. Let me ask you what you make of the potential for a ceasefire at this moment, because we're seeing contradictory reports in some sense coming through. What do you make of all of those moving parts right now?
Always a pleasure to be with you. I don't think that we're seeing a potential for a ceasefire. What we're seeing is a desperate effort by the mediators, led by Pakistan, to figure out a formula that would at least temporarily end the hostilities. The proposal on the table is that fighting would stop for a period of 15 to 20 days, during which the United States and the Iranians would negotiate a permanent resolution to the Strait of Hormuz. We don't know that the United States has accepted that proposal, even though it's been put forward to them. What we do know is that the Iranians aren't going to accept it. They have leverage at this point, and they're not going to give up that leverage for the possibility of an agreement. They're going to give it up for an agreement. So I don't think that we're seeing a potential ceasefire at this point. What we're seeing is motion without movement.
Are we clear, James, on who the participants are, who the stakeholders are on either side? Because that's where it really gets confusing. When the US says it's talking to the Iranians, who exactly are they talking to? Because every visible communication from that side seems to refute any existence of talks in the first place.
I think what we're seeing is not talks, even though there may have been some direct messaging backwards and forwards. But we're not seeing talks between the Iranians and the Americans. We're seeing talks with the mediators who are speaking to both sides. In addition to that, the Western intelligence has put out reports that the American negotiators don't know who to talk to in Iran. There's no verification of that, of those reports. Fact of the matter is that the foreign minister, Abbas Araghchi, has been the interlocutor for Steve Witkoff, President Trump's special envoy, all along, going back to last year. Fact of the matter is that the Israelis took off their decapitation list both Araghchi, the foreign minister, and Galibaf, the parliament speaker, because they were the interlocutors with the intermediaries. And finally, we've seen regime cohesion in Iran since the beginning of this war. We haven't seen the regime speaking with different voices to different audiences.
That's a fair point, and that's exactly what I want to ask you about, James. Sitting here in India and perhaps in various parts of the world, the tendency is to focus on the messaging by one individual, right? And you're looking at social media posts over the weekend where expletives have been used, etc. My point to you, or my question to you, as somebody that studies this space so closely, is how much attention, in your opinion, should be given to what one person is saying in this, and how much should be given to the actual diplomatic channels?
I think as a journalist, I treat whatever anybody says with a grain of salt and look for verification of that. Keep in mind that what we're seeing is a fight on the ground, a kinetic fight, but we're also seeing information wars in which parties try to spin the narrative, and that's very much the case in with regard to the talks or messaging going back and forth. With other words, by saying, for example, that the Americans aren't quite sure who to talk to in Iran, is basically a justification of the decapitation strategy that has taken out senior political officials, including the supreme leader on the first day of the war, a host of military leaders. And the implication of those reports is that there's disarray in Iran. We haven't seen any signs of that disarray, at least any clearly visible public signs.
Just one last point, James. What do you think is going to come out of Trump's address later today?
More of the same, I would expect. I think Donald Trump is in a bind. He's in a very difficult position. And I think that last night's tweet with the expletives in it is a demonstration of the degree of anger that the Iranians aren't doing what the Venezuelans did, and frustration. But Donald Trump needs to, one way or the other, be able to credibly and unambiguously declare victory. Right now, even though they've been very successful in their rescue and search operations for the two pilots, and the fact that they do have superiority and have inflicted severe damage on Iran, fact of the matter is that's not a victory. And and therefore, the problem that Trump has is, in order to declare a victory, he has to score a victory by expanding the war.
Okay, thank you so much, James, for speaking with us. Always a pleasure to have you on. We'll take a very short break, but just going to that break, look at what markets are doing. Some new winners cropping up. I want to pull up BSE, I want to pull up AB Capital. If you can just pull up the intraday of both, showing some smart moves. Banks are the one that are ruling the roost. The Nifty bank about 2% up, and of course, the Nifty stays above the 22,900 mark. We're coming back with all the top ideas for buy today, sell tomorrow. Stay tuned.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
others are warming up, I'm raring to go. The stories that matter, the stories that shape your life.
Welcome back. Nifty close to its day's high, and look at how banks are shining. Axis Bank. I just want to pull up Axis Bank, and I know we've been speaking about RBL, we've been speaking about HDFC, but Axis Bank is zooming there. So you have a lot of excitement coming in that end as well. But what's the buzz coming in from the corridors of Dalal Street? Soumit Sarkar joining in with that segment we all wait for in the afternoon on what's heard on the street. Are you hearing a lot of joy or sighs of relief today, Soumit?
Well, clearly a sigh of relief. The markets gained nearly 450 odd points from the day's lowest level. But one stock that has been a disappointment is Reliance Industries. High sell flows on the institutional desk is what dealers have indicated, and this is largely because dealers indicate that the street expectations for the fourth quarter numbers are on the weaker side. In fact, EBITDA number for Reliance Industries, at least based on estimates, is expected to be largely flat on a sequential basis, and hence this weakness coming in when it comes to the share prices, because street was expecting, given the higher GRMs and higher crude prices, there could be some gains coming in for Reliance Industries starting from the fourth quarter. When it comes to Jindal Steel, sell flows on the hedge fund desk, specifically dealers indicate that the fourth quarter could be on the weaker side, and apart from this, higher iron ore prices is also one of the reasons that could weigh on Jindal Steel going forward. When it comes to Eternal, there are buy flows on the large HNI desk. The buzz on the street is that Blinkit profitability could be higher and better compared to what the company had reported in the previous quarter. For delivery, there are buy flows on DI desk. Delivery volumes are also expected to be on the higher side. And for Aurobindo Pharma, there are buy flows on the PMS desk. Amoxicillin prices have risen to around $32 to $35 per kg, and this improves the realization for Aurobindo Pharma by around 17% and will also support the company's Penji project. And lastly, when it comes to Bosch, that stock has been gaining. There are buy flows on the large HNI desk. There are rumors again of consolidation of the Bosch India subsidiaries, and on the back of these rumors, the stock has gained nearly 4% in trade.
Absolutely. So all buzzing stocks, Soumit, that you've spoken about, but I want to ask you specifically on Reliance Industries. The buzz on the street, of course, is that there's going to be a relative underperformance on the earnings side, but how significant would this underperformance be?
Well, the street is expecting that the EBITDA could largely be flat, and this is because there were some or the other disruptions in the O2C segment, and these disruptions were related to crude deliveries, freight and insurance cost going up, and the marketing segment, if you look at that, also could get impacted because at the end the retail fuel prices were largely unchanged despite the fact that crude oil prices had moved up significantly higher. So these could impact the O2C segment of Reliance Industries. When it comes to telecom segment, the growth is expected to be on the lower side given the fact that there were no tariff hikes, and subscriber additions have also been muted compared to the previous quarter and compared to its peers. When it comes to the gas exploration segment, that could report a weak set of numbers, but this could be because of lower production and higher costs. However, we do not have any clarity on that front. This is just based on expectations. And lastly, the retail segment, that could be a savior for Reliance Industries in the fourth quarter because its peers like Avenue Supermarts, Trent, Senco, Nykaa have reported strong growth on a YY basis. So that could translate into a good growth for Reliance Industries as well. But if retail also reports a muted set of numbers, then overall the numbers for Reliance Industries could well be much on the weaker side. And valuations are also largely at par with its 5-year average. The 12-month forward valuation stands at 20 times, while the 5-year average valuation stands at around 21 times.
Okay, thank you for that, Soumit. All right, what you're seeing on the side of your screen is a live interministerial briefing on the war. We're keeping an eye on it. You'll see the flashes, and we'll cut in as and when it's required to as well. So watch that space. Meanwhile, Siddharth Khemka, Head of Research Wealth Management at Motilal Oswal Financial Services, joining us this afternoon. We're also speaking with Nagaraj Shetty, Trader RA at HDFC Securities. He, of course, looks at technicals as well as derivatives. Welcome to both of you. Nagaraj, I want to come to you first, really, on the Nifty, the high point of the day. Do you think that an important level has now been crossed convincingly in your view with the strength we're seeing? Let's talk about Nifty as well as Bank Nifty actually.
Hi, good afternoon. Yes, Nifty, the way it has bounced back from the lower levels is indicating that 22,200 is going to be an important support for so far. And market is now inching towards to breakouts of around 23,000 level immediate resistance. Once it moves above these levels, the overall chart structure is signaling some kind of a reversal pattern unfolding from the lower levels. That is good indication, and a further up move from here onwards could take Nifty towards the next hurdle of around 23,500. Bank Nifty, similar kind of thing unfolding. Even Bank Nifty is outperforming the Nifty over the last couple of sessions. The way it has bounced back with the more upside towards 54,000 levels in the near term.
54,000. Okay, so would you have a buy call therefore on the Bank Nifty?
Yeah, I would like to issue the buy call in the Bank Nifty, and currently 52,635. If you look at the Bank Nifty future, Apple future is currently trading around 52,925 levels. One can look to accumulate at this point of time. At least 54,000, 1,000 points of rally could come in the short period of time. One can place a stop loss at 52,500 odd levels.
No, we might have been significantly higher. We might be well above that 23,000 mark for the Nifty 50 if it wasn't for Reliance Industries and its underperformance, right? So Siddharth, what do you make of the possibility and this buzz on the street that you might have a weak number on the EBITDA front for Reliance Industries in the fourth quarter?
Yeah,
good afternoon to you, Siddharth, first.
So, Alex, if you look at, definitely there is a pressure on the core business of Reliance, which is the O2C business. And we have seen that the disruption in terms of supply, that has been a key factor. Then the second one is the entire retail pricing being capped, and hence the oil business witnessing some kind of pressure. Plus, because of the lower supply, the volume growth in the chemical business could also be disrupted to that extent. So that's on the core business. On the telecom side, again, the street has been waiting for the tariff hike, which has kind of remained elusive so far. I think it will be some more time before we see that tariff hike coming in through. The only silver lining for this quarter that we are looking at is the retail business, where things are definitely looking much better. A low base of last year, but definitely the discretionary spending across several retail companies, jewelry companies, the business update that have come in has shown that there is definitely an uptick in the fourth quarter. So overall, I would say a flattish quarter, but that is likely to disappoint and the markets, and hence the stock could remain under pressure for at least some more time.
Okay, Siddharth, just one broad view. I know you spoke about Reliance, but see, if you look at some of the business updates, what's the big trend you're saying? Are you looking at the excitement about banks basis the Q4 business updates as justified right now, or is this a recovery momentum?
Tamanna, I think if you look at on both fronts, we were looking at a good recovery in the banking earnings driven by the credit offtake. Now we are seeing that the deposits growth that has also been pretty healthy, and that is driving some of the the positivity for these stocks. So if you look at the systematic credit growth stood at 13.8% for the quarter, and the momentum remains robust, supported by the liquidity buffers plus the consumption-led recovery after the GST cut. So that is also helping both some of the discretionary sectors as well as the banks. And we are expecting, while in any sector, the same is the trend, there will be divergent outcomes. Some of the large private banks like ICICI, HDFC are expected to report flat margins. Axis, Kotak Mahindra Bank are likely to report a decline. While the mid-sized banks that we see are better placed, AU, Bandhan, Equitas, they are likely to report a NIM expansion. So I think there is a positivity built in the Q4 numbers that is supporting the uptrend in banks, and B, definitely being the highest weightage in this Nifty, And being a high beta sector, if there is a recovery in the market, banks will perform. And we have seen a sharp fall in the last couple of weeks. So I would believe valuations also becoming comfortable for some of the large buyers to get into these names. So I think it is a mix of fundamentals plus the sentiments for the market changing that is driving the stocks for banks in the near term.
Okay. Stay on with us, Siddharth and Nagraj. We just want to focus on a few stocks that are moving today. NMDC is one of them, back in focus after announcing another sharp hike in iron ore prices. It's the third increase this year. Move, of course, reflecting strong demand conditions and higher global prices, and is expected to lift NMDC's margin. That stock, of course, nearly 4% up. Parth Goyal joining in with more details.
Thanks a lot, Tamanna. So NMDC has hiked its iron ore prices by 10 to 11% from 5th April of 2026. They have hiked their lump prices by 10% to around 5,300 rupees per ton, and they have also hiked their fines prices by 11.2% to 4,500 rupees per ton. Now, this is the company's third price hike in 2026. Before this, NMDC hiked prices by around 3% in March 2026, and before that as well, NMDC also hiked its prices by 2% in the February month. Now, there are three reasons behind this recent hike. The number one reason is that the seaborne iron ore prices are up 8% due to the disruptions in Middle East. The second reason is that the steel prices in domestic market have been high due to higher demand. And the third reason is that the restocking demand has been high as well due to the good steel production that is happening in the domestic market as well. Now, coming on to the impact on NMDC of these hikes is that this will boost the EBITDA margins and profitability of NMDC. The company already saw a record production of 53 metric tons in FY26, which registered a growth of 21% year on year. The FY26 sales volume of NMDC also saw a growth of 13% year on year to 50.23 metric tons, and this recent price hike is signaling a strong growth in volumes as well as realizations for the company.
Interesting, very interesting. All right. So volumes are going up and there's also a boost to EBITDA margins and profitability. Siddharth, on NMDC specifically, would you be positive? And if not this, then any of the other commodity players?
So definitely, Alex, I think we are looking at a uptick in the commodity cycle, specifically driven by the improving demand for some of the base industrial metals like copper, zinc, aluminium, and hence we believe the entire cycle that is likely to do well. The increasing demand for power transmission distribution, that is also driving the demand for iron ore, and we believe that NMDC, Coal India, some of these mining companies are better placed compared to some of the metal companies directly because they are largely domestic driven, and we are seeing the price rising both for the coal as well as iron ore. So in NMDC's case, we are seeing that overall volume growth is improving, realizations have been better, and management is focused on ramping up volumes, capacity expansion towards that 100 MT target over the medium term, plus the strong cash flows that are expected to sustain, improve the balance sheet positions NMDC much better compared to some of the direct metal stocks. So we definitely have a positive view on NMDC with a buy rating, and our current target price is about 100 rupees.
Okay, as we're celebrating the markets recovering, and you're going to feel that heat maybe in your favorite beverage, because as packaging companies feel the heat of Iran war and cost of packaging rises, beverage companies may hike prices to cover up for input costs. Ridhima Bhatnagar is here with more details. Ridhima, as we get into a really hot season, I think everyone's favorite cooler, whether it's cola or something else, will start costing a little more.
So beverage prices could go up by 6 to 7% as per the analysts, and this is mainly due to the rise in input costs which have risen for the alcoholic and non-alcoholic beverage makers. Now, associations have told us that they are already contemplating a price increase. Remember that alcoholic beverage makers cannot increase the price without the state government approving it, whereas the non-alcoholic companies can do so based on the market forces. The prices are mainly rising due to the packaging costs, which have increased by 30 to 40% as per the beverage associations. Your stocks in focus include United Spirits, United Breweries and Varun Beverages, to name a few. Now, these packaging materials which have increased in cost are glass, your PET bottles, plastic caps and cans. In March alone, glass prices have increased by 8 to 12%, whereas cans, which use aluminum, the aluminum prices have alone risen by 8%. PET prices have also risen by 40%, and your plastic caps are also seeing a price hike of about 30%. If we talk about the packaging mix, now alcohol companies use 80% glass and 20% of PET for plastics, and beer companies use 80% glass and 20% cans, whereas non-alcoholic beverages companies use around 80% of PET and rest is glass.
Okay.
Now, how much the price increase is something we need to closely watch.
Okay, so 6 to 7% could be the extent of price increase which goes. And I want to pull up the Radico Khaitan stock has been on the top of our technical analyst list since this morning, and is doing pretty decently as well. Come off its highs, but about 2% up right now. Nagaraj, I want to go into BTST calls. 10 minutes to go for markets to close. There's a big press conference later this evening, India time, 10:30 p.m. We don't know what the US president will say. Would you have any buy calls positioned?
Yeah, I would certainly, by looking at the market, the way it has recovered, I think there is a higher possibility that Nifty could move above the immediate hurdle of around 23,000 levels in the short term. On that basis, whole sector, front sector are moving up, and even mid cap and small caps are showing a very well bounce back from the lower levels. On that front, I have two stocks from the long side. First is one gold financing company, Kalyan Jewellers. Chartically, this stock has been in a constant downtrend amid the consolidation over the last 1 month, and before bouncing back recently from the lower levels. The formation of fresh high tops and high bottoms on the chart is indicating a fresh breakout in the stock price. Currently trading around 419.90, 420 levels. One can look to buy at this point of time. 445 is going to be the immediate target, and one can place a stop loss at 405. Second one is Ramco System. Ramco System was beaten down stocks over the last few months, and from the lower levels, it has bounced back very well from the low of around 340, 342 levels. Currently showing around upside above the immediate hurdles. Now trading at 384 levels, one can look to buy at this point of time. The immediate target would be around 405. One can place a stop loss at 375.
Okay, so Ramco and Kalyan, how would you look at some of the gold companies, Siddharth? All of them shining today, even a Muthoot picking up in last trade. Of course, Senco on the basis of those business updates, Titan doing well, and so is Kalyan.
Yeah, I think if you look at the other two segments, the gold jewelry company as well as the financing company. So I think the NBFCs, they are doing pretty well because of the gold prices that has run up. The sentiments definitely took a beating once the gold prices came off. But I think in terms of earning wise, they are going to report strong earnings. Similar is the case with the jewelry companies. I think our preferred choice would remain with Titan. They have been reporting strong quarter. Q3 has been pretty strong. Q4 also looks to be pretty steady. And we believe that with Titan's superior strategy, both in terms of their sourcing, their improving trend in terms of the studded jewelries, they have been reinventing, and there is a lot of focus on the youth with the rebranding as well as some of the newer sub-brands that they have launched from time to time. We believe that a consistent compounding machine like Titan that can continue to grow at 20-25% earnings CAGR over the next 2-3 years is a stock to look at in this market.
Okay, any picks here, Siddharth, before we go into close? Would you continue with the optimism on banks? Would you look at IT closely because we're going into result season and the big ones will start reporting in a couple of days?
Two stocks particularly looking interesting in this fall. One is State Bank of India. Pretty strong commentary after the Q3 numbers. I think stock had seen a good rally, but then take a beating because of the overall market correction. I think at current levels looks pretty interesting. Q4 should be pretty strong. We have a buy rating and a target price of around 1300. The other is from the NBFCs, Shriram Finance also. looks pretty interesting, pretty strong earnings delivery consistently quarter after quarter. Q4 also should be pretty strong. And that is another stock that one can look at picking up in this fall. Again, we have a positive view on the entire earnings growth recovery for both banks as well as NBFCs. So these are the two picks from my side.
Okay. Let me also ask you, Siddharth, about Larsen & Toubro, because it is one of the top gainers in the Nifty 50 today, up as much as 3%. And I think a lot of people, brokerage houses is what I'm talking about, or analysts are looking at this very closely to say that valuations-wise, it continues to remain attractive. Do you agree?
Yeah, Alex, I think there are definitely a lot of businesses. So we also had a look after this war came out, saying that there are a lot of moving parts that one needs to consider. But definitely they are benefiting a lot because of the EPC business that being pretty strong both in India as well as in the West Asian Gulf countries, which definitely took a beating in the current time, but valuations too became too attractive. So what we believe is that the international revenue, which accounts for about 39-40% of its order book, plus the IT business subsidiary, which is getting impacted because of AI-led disruption, both are mostly factored in the current valuations. And we see that while the near-term execution could get impacted, we believe long-term opportunities definitely is there, and hence we see that for our long-term investors, this looks like an interesting stock at a good valuation. We do have a positive view and a buy rating and a target price of about 4,400.
All right, Nagaraj, I want to come to you very quickly on some of these IT names, right? Which is that they moved quite considerably last week and they were outperforming the benchmark. Would you pick any of these as a trade?
Yeah, right. Right now, the IT sector has bounced back very well from the lower levels, still looking attractive. I think the worst period seems to be over for the IT stocks, and some of the prominent mid-cap IT stocks are in a bull run right now, at least for the short term.
Got it. All right. All right. On that note, gentlemen, thanks so much for taking the time and for speaking to us on NDTV Profit. Pleasure having you. Let's talk about the close today. And it turned out to be an entirely different day from what we were imagining it would be at the start.
Yeah, I think part of the reason, and we spoke about this on opening as well, Alex, is the fact that there seems to be no real red lines. The US president has given a series of deadlines and then has moved each of them ahead. And the latest one this morning was, of course, moving the 48-hour deadline from 6th of April to 7th of April, 8 p.m., I suppose, EST. So that fear is kind of receding. Talks of some formula for a ceasefire coming in. We don't know if it's true or not, but the market seems to believe it. Look, this is amazing. The intraday of the Nifty will tell you the story. So will the advanced decline line graph tell you the story very clearly. You're very close. Yeah, this is the high point of the day. And this gap widening. I mean, the bulls are coming back where there is opportunity. Probably DII inflows. I doubt FIIs are coming in thus far, but we'll have to wait and see what that data is showing. The Nifty heat map will show you Trent possibly on top. Even now, I mean, that spectacular move up. 8% up. But you know, it was being pointed out how Trent is more than 50% off its highs. That stock price has seen such huge value erosion that this is like a little band-aid for investors who bought at 8,000 plus.
But you know what? We're at 22,970 or thereabouts. We would have been above 23,000 comfortably and closer to 23,050 if it wasn't for that.
For RIL and ONGC. Yeah. You're seeing both ONGC and RIL coming in and seeing a bit of pain over there. So is Max Health. Actually, nothing else moving.
60 odd points individually.
So, pulling down the Nifty that much. Nifty contributors will actually show you that figure more closely about how much is being pulled down. Yeah, nearly 70 points out of 80 is contributed by RIL. HDFC Bank coming back strong. Axis, ICICI Bank. This is actually truly heartening because the updates are showing that there is some health over there, and we spoke to CSB today. So banks have also been wise in making sure that they're well entrenched and safe from any bad news.
You know, I think there's also a nudge from the regulator. And we've been talking about this for some time, but we don't know necessarily all of the conversations that happen behind the scenes. The regulator is well seized of the fact that gold loans have been rising as much as they have. So, but have a look at the sectoral picture as well. You will see oil and gas at the bottom of the screen on account of Reliance Industries. That remains the one spot of red on an otherwise very pretty screen. Look up here and you will see PSU banks, and up there you will see the banking index doing particularly well in trade today. And even the IT index has moved off the low point of the day to trade with gains of as much as 0.7%.
Yeah, so business updates is going to continue to rule the roost going into trade tomorrow as well. Of course, the big geopolitical issue continues. Let's look at that closing tick coming in this Monday morning. A very different picture on the screen compared to how we started off. We should pull up the Nifty for this, please, and look at the mid cap and the small cap as well. We're ending 244 points in the green, well above the 22,900 mark. The Nifty mid cap 150, about 1.5% up. The advanced decline ratio looking very robust, 1:5, 1:4 actually. Nifty small cap 250 also 1% up as we close off. So what's going to happen in the next 12 hours or so? You're going to hear from the US president. You might get some clarity on a claim or an actual ceasefire. If a ceasefire of any sort, form or shape can be announced, that'll be a huge continuation of what you're seeing in markets right now. On top of that, I think business updates are something that you need to keep an eye out on very closely. At the end of the day, it's real companies putting out real performances. And then, of course, we get into result season.
Yeah, absolutely. Monetary policy and then result season. So, well, lots to look forward to, and we'll talk about a lot more of this over the course of the day. So I'd encourage you to stay tuned. From Tamanna and myself and the team that put this show together, thank you so much for watching, and do stay tuned. This is NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu. Here we come.
When others are warming up, I'm raring to go. The stories that matter,
Hello and welcome viewers. You're watching Market Express and I'm Himakshi Bahugna. Let's get straight into the show and see how the markets have really fared today. So markets have reversed the early losses to end the day near day's high. Both the Nifty and Sensex have ended 1% higher. Trent and Axis Bank have lent support and also surges in trade on the back of strong Q4 business updates. Now RIL ends as one of the top Nifty 50 losers. And talking about the sectors, so most of the sectors have ended the day in green, with PSU Banks Realty leading the gains. And oil and gas on the flip side held on to a tinge of red. Now let's look at some key stocks that were buzzing away in trade today. First up, we have Trent that has wrapped up the March quarter with a solid, showing, delivering a 20% revenue growth, which is an improvement over the previous 2 quarters. And also the store expansion continues at a healthy pace, and this has been led by aggressive additions in the Zudio and also steady scaling at Westside as well. So while the average revenue per square foot has softened slightly, management remains confident about the company, also maintaining 20 to 25% of growth guidance as demand traction is expected to improve over the medium term. And with also valuations now below historical averages, the spotlight shifts to execution, store productivity and also earnings delivery in the coming quarters. And here's Nykaa has delivered yet another standout quarter, marking its strongest growth in the last 12 quarters. So the momentum has remained broad-based, with consolidated GMV growth tracking in the late 20s, while the net sales also value growth that ran even stronger for the company. And the beauty business, if we look at, has continued to fire on all the cylinders, supported by the company's highest ever quarterly store additions, while fashion has seen accelerating revenue traction with the NSV growth clearly outpacing the GMV. And importantly, management has flagged no impact from the Middle East exposure so far, keeping the near-term risks contained as Nykaa sustained its growth trajectory. And next counter in focus is Wipro, that has landed a rare big ticket win. Now the IT major has secured $1 billion transformation mandate from the Olim Group, which is spread over 8 years and also offering long-term revenue visibility at a time when large deals are hard to come by. And the engagement will be delivered through a consulting-led AI-powered approach, also signaling Wipro's push towards higher value transformation work. Crucially, the deal also includes the acquisition of Olam's IT arm, Mindsprint, giving Wipro a deeper domain expertise in the food and also agribusiness space. So along with an embedded client platform as well. Next counter in focus is Pace Digitech, which is seeing strong order momentum pick up pace. So the company has received a large letter of acceptance from NTPC for a battery energy storage system at the Nabi Nagar power station, also reinforcing its positioning in the fast-growing energy storage space. So this adds to a string of recent wins across railways and also grid-scale storage projects. And this is also pushing the order book to over 8,000 crore rupees, with visibility improving and also a clear push towards clean energy infrastructure. Pace Digitech is now eyeing a further scale-up in orders by the end of this financial year. And viewers, next counter in focus is Vikran Engineering, which has received a fresh order boost from the Maharashtra government, also securing 2 projects worth over 530 crores across the Nashik and Kolhapur zones. The projects are spread across multiple locations and also are expected to be executed over the next 21 months. So the twin wins enhance the revenue visibility and also reinforce Vikran's presence in the state. So level infrastructure execution with a healthy project pipeline and also steady inflows. Focus now shifts to timely execution and also margin discipline as the company works through its expanding order book. Next counter in focus is Tata Motors passenger vehicle. So its passenger vehicle business is back in focus after a weak operational update from the JLR and also mixed volume trends in the March quarter. While the wholesale volumes have rebounded sharply after the cybersecurity disruption, retail sales continue to see year-on-year growth, degrowth, and also pointing to demand pressure. So geographically, if we look at, volumes remain lower across the most of the markets, with Europe, which is a lone bright spot there. Looking ahead, FY26 volumes are expected to stay under pressure, and this is weighed down by the US tariff impacts and also challenges in the China market. The planned wind down of the legacy Jaguar models ahead of the new launch, and also production stoppages linked to the cyber incident. And if we also look at the execution and recovery, so that will also remain key themes going forward. And here's TVS Motor is firmly in focus after Goldman Sachs has upgraded the stock to buy, citing improving fundamentals and also stronger earnings visibility. Now, the brokerage has raised its target price, pointing to TVS's pricing power and also better ability to absorb the raw material inflation as compared with peers. So Goldman has also highlighted superior volume visibility, and this is driven by upcoming premium launches, and also expects TVS to pass through the cost pressures more effectively. And adding to that, a margin tailwind from the PLI scheme, and also the brokerage is seeing TVS better positioned to navigate the commodity volatility and also sustain the profitability. Viewers, Nuvama Institutional Equities has also maintained its buy rating on Sobha even as it cuts the target price, and also citing a more cautious near-term macro backdrop. Now, the brokerage highlights healthy pre-sales and also a sharp surge in launches in Q4 of FY26, with Bengaluru expected to continue driving volume growth. However, Nuvama has flagged rising risk perception for the real estate sector, and this is also pointing to concerns around the potential job losses from AI disruption, along with uncertainty linked to the ongoing global conflict, which has weighed on the housing demand across markets. Now, the call reflects confidence in execution, and this has been tempered by the macro risks. Next counter in focus is Aurobindo Pharma. It has announced an 800 crore shares buyback and also signaling a return of capital to shareholders. So the company will buy back shares of 1,475 rupees a piece through tender offer route, with program open to all the shareholders, including the promoters. Now, the buyback involves just over 54 lakh shares, also representing less than 1% of the total equity, with the record date fixed for April 17, 2026. Now, from a balance sheet perspective, the buyback amounts to around 3.9% of the standalone net worth and also about 2.6% of the consolidated net worth. Now, keeping the financial impact manageable while also enhancing the shareholder returns. And PVC players are back in focus after a sharp price cut of around 10 per kilo, raising concerns over demand and also profitability. Now, Nuvama has flagged that this move has a potential trend reversal, pointing to weak agri demand and also heavy channel inventory, and also rising pressure from cheaper Chinese imports. Now, the brokerage has also seen April demand remaining soft, which could weigh on the volumes and also margins in the near term, with price-led volume recovery coming at the cost of realizations. Q1 of FY27 risks are building, especially for players like Astral and Supreme Industries, where EBIT sensitivity to PVC pricing remains very high. And here's Senco Gold has posted strong growth in the March quarter, riding higher gold prices and also steady wedding demand. So revenue has risen sharply, and this has been held by solid same-store growth, even as volumes stay muted due to elevated gold prices, and the company expands its showroom network, protects the margins through tight inventory control, and also leans into affordable lightweight jewelry. Now, looking ahead, Senco targets healthy value growth, stable margins, and also a strong store expansion pipeline in the new financial year. Next counter in focus is Reliance Industries. It has come under sharp pressure, slipping to a 10-month low as selling intensifies on the street. Now, the stock weighs on the benchmark, with concerns rising around the impact of the US-Iran war on its energy business. Now, higher freight and insurance cost, muted growth in telecom, and weak gas output add to the drag, even as retail offers some sort of support. Now, markets now watch how the conglomerate, really navigates this volatility across its key segments. And here's beverage prices. could be headed higher as cost pressures intensify across the industry. Companies like United Spirits, United Breweries, Radico Khaitan, Allied Blenders and also Varun Beverages are facing sharp increases in packaging and logistic costs. So while alcohol makers need state approvals to raise the prices, non-alcoholic players have more flexibility to really pass on the costs. And NMDC hikes iron ore prices again, marking its third increase this year. This move is driven by higher global prices amid Middle East tensions, which is firm domestic steel demand and also strong restocking by mills. Now, the price hike is expected to support the NMDC's margins with, the miner already reporting strong production and also sales momentum. Now, markets are now watching how steel makers really absorb the higher input costs. And now let's look at some brokerage notes. Morgan Stanley says that seaborne iron ore prices stay elevated for now, but warns that higher shipments and also China's steel supply reforms could really turn the sentiment, negative ahead. And also the brokerage has flagged near-term pressure for the steel makers like JSW Steel and also JSPL due to their external iron ore dependence. And because auto dealers strike a cautiously positive note even as near-term risks remain in focus. FADA has said that March sales stay strong across segments held by healthy demand and also improved availability. Looking ahead, dealers expect growth to continue over the next few months, though concerns around West Asia led supply disruptions, fuel prices and also seasonal slowdown do persist, and the industry remains optimistic on the full year outlook while keeping a close watch on the emerging headwinds as well. And the government is considering shelving the current bids for the privatization of the IDBI Bank and also may call for fresh bids due to low valuations received. So a high-level meeting chaired by the Cabinet Secretary is underway to decide the next course of action. And this is the second such meeting in a week involving senior officials from DIPAM and also, the Department of Financial Services. Now, the existing bids are reported to be well below the government's minimum reserve price, with two potential bidders quoting valuations in the range of 40,000 to 45,000 crores. And also restarting the process with fresh bidding would take additional time, as it would begin, from the scratch. So a final decision is expected soon after the ongoing deliberations. And as Amul has become the first Indian FMCG company to cross 1 lakh crores in annual turnover. Yes, so the Gujarat Cooperative Milk Marketing Federation, which markets the Amul brand, has achieved this milestone in the financial year 2025-26. Now, this makes Amul the largest Indian FMCG company by turnover, surpassing many established multinational and also domestic players. Now, the achievement is driven by strong growth in dairy products, ice cream, and also value-added items across both domestic and international markets. And the Supreme Court has refused to stay the takeover of Jayaprakash Associates Limited by the Adani Group, and the court has asked Vedanta, which had challenged the resolution plan, to contest the matter before the National Company Law Appellate Tribunal, that is the NCLAT, and a bench declined to intervene at this stage and also said that the issues raised by Vedanta should be decided by the NCLAT, and this paves the way for the Adani Group to proceed with the acquisition of the debt-ridden infrastructure company. And the development is a major setback for Vedanta, which had approached the Apex Court seeking an interim stay on the approval granted by the NCLT. Next counter in focus is Nykaa, which is in advanced talk to acquire a majority stake in 82E, the skincare brand co-founded by actress Deepika Padukone. Now, the deal, if finalized, would mark Nykaa's entry into the fast-growing prestige beauty segment and also give its, control over one of the most prominent Indian celebrity-backed brands. So 82E, which focuses on clean and also science-based, skincare, has seen some strong growth since its launch, but has reportedly been, struggling with scaling and profitability. So for Nykaa, the acquisition would help expand its own brands portfolio and also strengthen its position in the premium skincare category. And Saudi Arabia has raised the price of its flagship crude sold to Asia to a record premium as the near closure of the Strait of Hormuz continues to disrupt the regional energy flows. Now, state oil giant Saudi Aramco has lifted the Arab Light prices for May sales to their highest ever level. And this is reflecting acute supply stress across the Persian Gulf. Now, the move comes even as the hike fell short of market expectations, also underlining extreme volatility as the Iran conflict drags on. With the Hormuz largely shut and also global fuel prices surging, the energy shock is rippling across the markets, also pushing the crude sharply higher and intensifying inflationary pressures worldwide. And whereas OpenAI is facing internal differences over the timing of its much-awaited initial public offering, now CEO Sam Altman is pushing for an early listing, also possibly as soon as late 2026, while the CFO Sarah Fryer has cautioned that the company may not be ready by the fourth quarter of 2026. So he has highlighted that the need for more work on compliance, internal systems, and also managing high cash burn from massive spending on computing infrastructure. Also, reports suggest that the company could burn over $200 billion before turning cash flow positive, and also plans to spend more than $600 billion on cloud servers, in the next 5 years. OpenAI was recently valued at $852 billion after raising $122 billion. Now let's look at some national news, viewers. Prime Minister Narendra Modi has said that despite the ongoing war in the Middle East causing global outrage, the BJP NDA government is continuously working for the welfare of the Indians. Addressing a public rally in Hojai, Assam, Modi has assured that the burden of the global crisis will not fall on the poor, the middle class, or the farmers, and he's highlighted that the government has taken steps to shield the citizens from the impact of rising global prices and also supply disruptions. And the Indian-flagged LPG vessel Green Asha has successfully crossed the Strait of Hormuz today. Now, this marks the 8th India-flagged LPG carrier to navigate the critical waterway since February 28th amid the ongoing Iran-Israel conflict, and the crossing comes despite a maritime blockade imposed due to the war. Another vessel, Green Sanvi, has also crossed on Friday night carrying 46,650 metric tons of the LPG. Now, the Indian government has been in continuous talks with Iranian authorities to ensure safe passage, and the Indian Navy has kept warships on standby to support merchant vessels. As of now, all the Indian seafarers in the region are reported safe, with over 964 already repatriated. And the Delhi government has launched a major crackdown on black marketing of LPG cylinders. Now, Chief Minister Rekha Gupta has announced a complete ban on direct sales of LPG from storage godowns. All the cylinders must now be delivered only through authorized home delivery by distributors. So this move aims to improve transparency and also prevent hoarding amid concerns over supply disruptions due to the West Asia conflict. And Delhi police has conducted raids at 17 locations, while the Food and Supplies Department has inspected 76 gas agencies. Now, a dedicated control room and helplines have been set up for monitoring and also complaints. And the government has also increased availability of 5 kg of cylinders for much easier access, especially for the migrant workers. And Iranian Foreign Minister Abbas Araghchi has spoken with the External Affairs Minister S. Shankar yesterday to discuss the ongoing Middle East conflict and also its impact on the regional stability. So the call comes amid heightened tensions. Shankar has also held a separate conversation with the foreign ministers of Qatar and the UAE on the evolving situation. So India, which sources a significant portion of this energy from the Gulf region, is closely monitoring the developments as the conflict, really disrupts the global energy supplies and also shipping through the critical waterways. And the discussions focus on bilateral relations and also ways to ensure stability in the region. And Indian High Commissioner to Bangladesh, Pranay Verma, has met Bangladesh Prime Minister in Dhaka today. The meeting was a courtesy call focused on strengthening the bilateral ties and also people-centric cooperation in areas aligned with both the countries' development priorities. And, he's conveyed India's positive and forward-looking approach based on mutual interest and also benefit. And this engagement comes as the two neighbors work to reset the relations after a period of strain following the change of government in Bangladesh. Now, Bangladesh's foreign minister is scheduled to visit India later this week for high-level talks with key Indian ministers. And the Delhi government has announced a 22,236 crores of green budget for 2026-27 as part of its overall 1,03,700 crores of state budget. Now, over 21% of the total budget is dedicated to cleaning the Yamuna River and also reducing the air pollution. The largest allocation of 6,485 crores goes to the Delhi Jal Board for sewage treatment and also cleaning major drains that really pollute the Yamuna. And another 4,758 crores has been set aside to expand the electric bus fleet and also strengthen public transport, while 3,350 crores will be used for dust control and also green infrastructure projects. And 17 departments will track their spending against green objectives, and also a dedicated green fund has been created for accountability. And viewers, a draft proposal for a 45-day ceasefire and reopening of the Strait of Hormuz has been received by both Iran and the United States. And the proposal, mediated by Egypt, Pakistan, Turkey, aims to provide a window for extensive negotiations towards a permanent ceasefire. And it was delivered late last night, but neither side has responded yet. And Iran has insisted on financial reparations and also a guarantee of no future attacks as part of any agreement. So the development comes as the conflict enters its second month with continued US and Israeli strikes on Iranian targets and also Iranian retaliatory actions. So in the latest updates, Iran has confirmed the death of IRGC intelligence chief Majid Khadimi. And also reports indicate, and he was killed in a strike linked to the ongoing US-Israel conflict, dealing a major blow to Iran's security leadership. So the development is expected to fuel further escalation, with Tehran warning of strong retaliation. And because Iran has rejected a proposal for a temporary ceasefire aimed at reopening the Strait of Hormuz, a senior Iranian official has stated that Tehran will not accept a short-term truce in exchange for reopening the critical waterway. And this comes as US President Donald Trump has extended his deadline for Iran to open the strait, to 8 p.m. Eastern Time on Tuesday, warning of severe consequences if it remains closed. And Nepal has shifted to a 5-day work week, designating both Saturday and Sunday as weekly holidays as it grapples with a fuel crisis triggered by escalating tensions in the Middle East. Now, the decision was taken at an emergency cabinet meeting, with the government saying that the move is aimed at, conserving fuel and easing supply pressure. Government offices and educational institutions will now operate Monday to Friday, which is a major shift for Nepal, where Saturday had traditionally been the only weekly holiday. Authorities say that the step comes as fuel shortages and rising prices strain the economy. And with that, viewers, it's a wrap on this edition of Market Express. Stay tuned to NDTV Profit for more news and updates.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
When others are warming up, I'm raring to go. The stories that matter, the stories that shape your life.
Hello and welcome to watching Prime 5 with me, Raisha Sehgal. What's happening? How to
The show that sets the prime time agenda.
We'll be deep diving into this topic to tell you what's at stake.
Join me, Raisha Sehgal.
Market gains smartly on hopes of a US-Iran deal. Nifty reclaims 23,900 levels. Sensex gains over 1%. RIL remains a big drag due to selling pressure, ending with a loss of more than 3% on the counter. According to reports, Pakistan pushes for two-phase Islamabad accord to end US-Iran war. Reopen Strait of Hormuz. All eyes are on Trump's address tonight at 10:30 p.m. India time. Oil prices slide after US President Donald Trump's ultimatum to reopen Strait of Hormuz by Tuesday. The US WTI crude is hovering around $109 per barrel. Brent is trading in the red too, close to $108 mark. Two more LPG tankers transit from Strait of Hormuz successfully. 8th India-flagged LPG vessel to transit since the war began. Government confirms 16 Indian-flagged vessels in the Hormuz awaits clearance. Supreme Court refuses to stay Adani Enterprises' resolution plan for Jaiprakash Associates, urges NCLAT to hear Vedanta's plea on priority, which challenges Adani win under the IBC process. Sources tell NDTV Profit that government may opt for fresh bids for IDBI Bank. Cabinet Secretary holds second meeting with Deepam and DFS. Two potential bidders are already in the fray. Beauty platform Nykaa is set to acquire its brand ambassador Deepika Padukone's skincare label 82 Degree East, sources tell NDTV Profit. Hello and welcome. You've tuned into Profit 360. I'm Nisha Poddar. Let's first begin with the market as a top story. Well, the stock market recovered strongly from the morning losses to end in the green today. And the Nifty as well as Sensex both wrapped trading around 1% higher today. While the Nifty, remember, surged past 22,950, the Sensex crossed 74,000 level. Bank Nifty also ended with gains of over 2%, so a stable start to the week. But let's also get you the entire market action with Jasmeet, my colleague, who's joining in with all the market-specific details. Jasmeet.
Well, positive up moves seen for the market. Nifty ends in green for third consecutive day in a row.
while Nifty gains about 800 points from the lows of the Friday as we had seen. Nifty advanced decline ratio stands at 43:7 today in trade, while Trent was a top gainer in Nifty in today's trade, up about 7.5%, followed by Adani Enterprise up about 3.5%. If we look at the broader market, we do see that the broader market have gained in line with the benchmark in today's trade, while Midcap 150 is up about 1.5% and ends in green. The top gainer in Nifty Midcap 150 were Kalyan Jewellers and L&T Finance, both gained over 5%. Now in terms of the small cap 250, even that gains in trade, ends in green, up 1%. Now top gainer in small cap 250, we have stocks like Gravita and PTC, both gaining up over 6% in today's trade. If we look at the key sectors, all sectors end in green, barring Nifty Oil and Gas. The Nifty Oil and Gas sees the continued pressure of the global geopolitical tension. Now in terms of the key sector and the movements, Nifty Financial Services, Nifty PSU Bank are the top gaining sector in today's trade. While in terms of what led the gain was BSC and Shriram Finance, the top gainers in Nifty Financial Services, both up about 4%. In terms of PSU Bank, we have Bank of Maharashtra and Bank of Baroda, the top gainers in Nifty PSU sector as well, and both gained about 4%. If we look at Nifty Oil and Gas, the top losing sector, which ends in green, down about 1% in today's trade. The top loser Chennai Petro and Reliance, the both lose about 3.5% in today's trade. If we look at the other key factors and how the trends have moved in today in market, we do see Nifty Financial Services, Nifty Realty, Nifty Bank, Nifty Metal, Nifty IT, Nifty FMCG end in green for third day in a row, while Nifty Pharma snaps its 4-day of losing streak and ends in green today. While lastly, Nifty Oil and Gas end in red for the second day in a row.
All right, thank you so much, Jasmeet, for getting us all the details of the market action. And yes, it recovered after there were some hopes of some de-escalation of war and a deal between US and Iran. Now, in light of the Middle East war, remember Vinod Karki, who's the head of strategy at ICICI Securities, he predicts that oil prices will remain above $100 per barrel for at least 2 to 3 months. Listen in.
I think from a base case perspective, we are almost 1 month past this crisis which started. It appears to be a case where this will be a 2-3 month affair where oil prices can remain above this $100 level for maybe a quarter, 2-3 months, which effectively, I think the market has taken due cognizance of that. If you see from the point where the conflict started, the market cap erosion has been close to 50 trillion rupees, which is almost 13-14% of GDP. So the market, I think, is kind of pricing in.
All right. In particular, let's talk about one particular heavyweight in the market, Reliance Industries. That hit a 10-month low in the trading session today. It dropped over 4% intraday and recovered a slight bit. Despite the market recovery, RIL stock still left the day with over 3% loss. So let's find out from my colleague Somit on what really is putting pressure on Reliance Industries stock. Somit.
Reliance Industries remains in focus, and that is one of the biggest culprit when it comes to the benchmark index. Though Nifty 50 is up over 200 points in trade, Reliance Industries is one counter which is holding it back. It is dragging the benchmark by at least 70 odd points in trade. On a YTD basis, if you look at, the stock is down nearly 17%, which is the worst start for Reliance Industries to the year that we have seen at least since 1997. To give in context, Nifty 50 is down around 13% on a YTD basis. Now, what could have led to this 4% downtick in the share price of Reliance Industries in trade today? Firstly, it could be the weak performance of the O2C segment in the fourth quarter. Now, Middle East war could have impacted the performance because of which there was multiple disruptions that we had seen. There was a lot of price volatility, crude deliveries were disrupted, freight and insurance costs were also higher. Apart from that, the marketing segment of the company would have also incurred some losses given the fact that retail fuel prices continue to remain unchanged while crude prices were on an uptrend. Apart from that, when you look at the telecom segment, the performance of the telecom segment could also be impacted given the fact that there was no tariff hike that we have seen for at least the last 6 months, and subscriber addition of late has also been muted for Reliance Industries in the fourth quarter so far. And when it comes to gas exploration segment, that segment could report a weak set of numbers. In fact, we could see a sequential decline on the EBITDA front when it comes to the gas exploration segment, largely because of lower production and higher cost. And the only savior could be the retail segment, and that too also because the peers have reported a strong growth in the fourth quarter. Peers like Trent, Avenue Supermarts, Senco, Nykaa have reported strong growth on a YOY basis for Reliance for their fourth quarter numbers. So that is at least indicating that the retail segment could report a good set of numbers. Even if the retail segment reports muted numbers, then overall Reliance Industries numbers could be on the weaker side, and that could be one of the reasons why the stock is down in trade. Now, if you look at the valuations, the 12-month forward valuation stands at around 20x, while the 5-year average is largely at around 21x. So, not much of at a discount compared to its 5-year average valuation. And when you look at the analyst view, analysts continue to remain quite bullish. In fact, Reliance Industries share prices are trading below compared to the lowest target price on the street that is there for the counter. If you look at the 12-month consensus target price, that stands at close to 1,718, which suggests an upside of around 33%. The lowest target price is close to 1,385, which suggests an upside of close to 7%, and the highest target price on the street stands at close to 1,910, which suggests an upside of nearly 47% on Reliance Industries.
All right, thanks so much for Somit for getting us all those details on Reliance Industries, a big heavyweight and the key dragger today on Nifty 50, but it could be also because of trade-off as it's a heavyweight and with sector and stock rotation, especially from the foreign institutional investors. All right, let's focus on crude oil, and oil prices tanked a bit after US President Donald Trump, in a stern warning, signaled to open Hormuz by Tuesday. While the US WTI crude is hovering around $109 per barrel, well, Brent is trading in the red too, close to about $108 mark. Meanwhile, remember, the 8 members of the OPEC Plus have agreed to increase the production by 206,000 barrels per day in the month of May, but it is unclear how the oil will really reach the global market with the strait still closed. So definitely some news of US-Iran deal is softening the crude oil prices. Now, overseas travel is set to get costlier for the Indian flyers as airfares on India-US and India-Europe routes, including key destinations like New York, Newark, Chicago, London, Frankfurt, are all up anywhere between 50 and 150%. Yes, you heard it right, 50 to 150%. What led to this particular spike? My colleague Danish shares all the details. Tell us, Danish.
Well, if you're planning to catch a flight to North America or Europe from India, then be ready to burn your pockets as a spot airfare between popular city pairs between India and North America and India and Europe has surged by more than 100% over the past few days. One of the major reasons why this is happening is the fact that the key airspace over the Middle East still remains to be shut, because of which flights are being diverted in a longer route, which results in high fuel uplift for airlines, resulting in higher ticket prices for the passengers. The second fact is the high ATF prices over $100 a barrel, and the ATF crack is also over $150. So hence we are seeing this issue in the ATF prices. But if we now talk about some popular destinations, for example, if you want to catch a flight to Delhi to New York for Tuesday, then you have to pay between 1.40 to 2.20 lakh rupees, and on a normal day you were supposed to pay somewhere between 80 to 90,000 rupees. Similarly, if you look at other city pairs, for example, Mumbai, Newark, or Bengaluru to San Francisco, over here we are seeing that the airfare has surged by over 100%. And now if we talk about certain European routes, for example, Delhi to London or Delhi to Paris, earlier you were supposed to pay somewhere between 35,000 to 50,000 rupees on a higher side for a spot ticket, but now this price has surged to over 70,000 rupees, also reaching to 1.20 lakh rupees per, according to different airlines. And one of the reasons why this is also happening is the fact that over the past few days, the central government tried to intervene intervene for the ATF, and while for the domestic airlines there has been a cap, but for the international airlines or for the international flights there is no cap, as now ATF for international flight operations is now over $1,000 per kiloliter, and hence the sharp surges being seen. So all in all, if we see, if you're planning to fly to any international destination, especially to North America or Europe, be ready to shell out more money from your pockets.
Of course, summer vacations are just around the corner and international vacation looks much more expensive. Thanks so much, Danish, for all those details. Meanwhile, India has rescued 2 more LPG tankers from the Strait of Hormuz. In fact, Indian-flagged liquefied petroleum gas or LPG tankers, both Green Asha as well as Green Sanvi, have successfully transited the Gulf carrying the fuel for the Southern Asian nation. Now, this marks, remember, the 8th India-flagged LPG vessel to really transit the strait since 28th of February when this war broke out. In fact, 16 Indian-flagged vessels in the Hormuz awaits clearances so far, and Prime Minister Modi ensured that the government won't let the burden of the global crisis really fall on the citizens. Listen.
आप देख रहे हैं कि दुनिया में कितना बड़ा संकट आया है। पश्चिमी एशिया में चल रहे युद्ध से दुनिया भर में हाहाकार मचा हुआ है। अमीर से अमीर देशों में भी इस समय स्थितियां बहुत खराब है। जो छोटे और विकासशील देश हैं, उनकी हालत भी बहुत खराब है। लेकिन साथियों, संकट के इस समय में भी बीजेपी सरकार देशवासियों के हित में लगातार काम कर रही है। बीजेपी एनडीए सरकार ने ये सुनिश्चित किया है कि वैश्विक संकट का बोझ गरीब पर, मिडिल क्लास पर, हमारे किसानों पर न पड़े।
Now, amid the ongoing tensions in the Middle East, well, the government ensures that the country is not facing any pricing fluctuations in the commodities sector. Let's listen in to what Anupam Mishra, the Additional Secretary, Department of Consumer Affairs, said today.
What we have seen so far, there has been no unusual volatility in the prices of the essential commodities, number one. Number two, if we come on the supply side, so what we see that pulses. Now the production of pulses this year is higher than what we had in the previous year. So what we mean by pulses, those 5 major pulses, tur, urad, masoor, chana, and then urad. So they basically comprise of a pulses basket. Second, you'll be aware that government maintains a buffer of pulses. Now this buffer is maintained basically if you need any market intervention, you have these pulses which you can release in the retail market. So the present stock of buffer that we have of pulses is 28 lakh metric ton. Procurement of tur and rabi pulses under the PSS, public support system, is under progress.
All right, government saying that we are prepared and assures the citizens. Now let's get you the latest coming in from the Middle East war. Well, according to reports, in a last-ditch effort to avoid a major escalation, Pakistan is pushing for a 2-phase proposal for the end of the US-Iran war amid the fresh warnings and threats from US President Donald Trump. In fact, reports do suggest that US, Iran, and a group of regional mediators are engaged in discussion over a proposed 45-day ceasefire, and all eyes are now on Washington, D.C., with Trump expected to really deliver a key address later tonight. Meanwhile, Iran has clearly rejected any move to reopen a key global oil route in exchange for a temporary ceasefire. In fact, Israel says that it has killed a top top intelligence chief of Iran's Revolutionary Guard, while missile and drone attacks really continue across the region, hitting key locations in Israel and even in the UAE. So that development is really taking place, and as the Middle East conflict really continues to disrupt the global supply chain and keep the energy prices elevated, well, the government is stepping up its preparedness on the domestic front as well. Sources tell NDTV Profit that a high-level meeting was held last week to boost production of key items like induction cookers and petrochemicals. Let's take it across to my colleague Rishabh for more details on what was discussed at the meeting and what it means for the industry as well as the consumers. Rishabh, tell us.
Absolutely. What you had is, like you said, a preparation on all fronts. And one of those preps involves sort of amping up the domestic production of key products like induction cookers as well as critical petrochemicals. So what the government's POV is, it is to sort of look ahead, even if the war continues for a few months, starting now, the availability as well as the affordability of critical supplies like induction cookers should not stop. So in that vein, there was a meeting that was held between DPIIT, DGFT, various other ministries had representation as well. And what they decided was on that there will be some sort of a boost in production, and various ways to boost that production were also discussed. What we've also already seen from the government is a cut on import duties on various petrochemical products that are critical to other, that are actually critical raw materials to other products. So that's what we're seeing from the government, is this sort of proactive approach wherein more and more interesting and more important products are being sort of lined up, even in the sort of taking care of the worst case scenarios that are also coming up if the war continues.
All right, thanks so much, Rishabh, for all those details. Now, in an exclusive update, our sources tell us that the government may really opt for fresh bids for IDBI Bank's stake sale. Now, a meeting chaired by the Cabinet Secretary was in fact held today, and this is the second such high-level meeting in a week with officials from both DIPAM, DFS and other departments also involved in that. Sources say that the bids received from the bank were much lower than the government's minimum reserve price. In fact, two potential buyers had quoted a valuation of 40,000 to 45,000 crore rupees. Now, the government may decide to shelve the current bids and also start afresh, and a fresh bidding process can really start. However, a new process will take time as it has to begin from scratch. Now, the final decision is expected soon, so that really is something to watch out for IDBI Bank. Now, as business updates really start trickling in, Piyush is here, my colleague, who tells us more about how the key banks really performed this particular quarter. Before we get you the word from the managements that are going to come in and the numbers really trickle in, here's a business update coming in from Piyush on how the banks are really looking at the coming quarterly results. Piyush.
Banks have posted a strong set of numbers for Q4, which is technically the most busy season for banks. Leading banks have reported double-digit rise in both their loans and deposit book, although the pace of deposit growth remains to be slower than the pace of credit growth, which is also leading for banks' CD ratio to go up, and the RBI may not be very content with that ratio moving up. Bankers tell us that the retail, agriculture and MSME segment has really done well for PSU banks, whereas private lenders have seen a spurt in their gold loans, unsecured personal loans as well in Q4. Bankers say that MSMEs could see a hit if the Middle East conflict continues for a month or two more. In Q1, banks expect a slight uptick in stress in the SME segment. Number-wise, Axis Bank and Kotak Bank posted really a strong set of loan growth numbers, whereas HDFC Bank's loans were up 12% and deposits were up 14% in line with the management commentary. Fitch Rating expects Indian banks' margin to fall by 20 to 30 bips in the next financial year, as they see limited flexibility for the RBI to put durable liquidity into the system after the recent efforts that they took in to defend the Indian rupee.
All right, thanks Piyush for that. From banking, let's take it straight to pharma, and pharma sector is set to swallow a bitter pill as Trump really readies another tariff blow on them. Patented medicines will face 100% tariff entering the US. Varsha is here with all the details.
So 100% tariff has been imported on branded and patented drug, while generics are exempted when it comes to Trump tariffs, and biosimilars are also exempted from tariffs. Now, what's the reason for this? Of course, the focus is on national security and supply chain control, and Trump wants the push for domestic manufacturing in US, and the $400 billion investment commitment has already been driven, and API reserves and local production push is ongoing. How this is going to impact on global pharma, where big pharma will see pricing pressure, supply chain may shift to US manufacturing, and CDMO may face uncertainty because of this push. Now, impact on Indian generic pharma, no tariffs currently. Near term is positive when it comes to generic pharma. Hence, biosimilar is also fully exempted. But there will be a little impact on Sun Pharma, considering its high branded exposure of around 20%. Illumia, which comes under the specialty portfolio, will see 15% of tariff, and EBITDA impact is expected at 1 to 2%. Who can benefit though? The companies who have US manufacturing setup. You have Aurobindo Pharma, Alchem Lab, Jubilant Pharma, Zydus Life Sciences, and Piramal Pharma, which will have benefit, or which will be gaining, considering their US manufacturing setup that they have.
All right, thanks so much, Varsha, for getting us all those details now at a time when global markets are really grappling with supply shocks from the Middle East war. Well, SEBI chairman Tuhin Kanta Pandey, who has really flagged rising risks to the global economy, he also says that SEBI is working on a large-scale initiative to strengthen corporate governance through capacity building of independent directors. Let's listen in.
We are meeting at a tumultuous time, with war in West Asia choking oil and gas supplies, triggering global price shocks with severe impact on world economy. SEBI will seek to embark on a joint initiative for capacity building of independent directors at scale, with a view to further improve corporate governance.
All right, in another important corporate development and an IBC-related case, it's a legal development that's really taken place. The Supreme Court has refused to intervene in Vedanta's plea seeking a stay on Adani Group's resolution plan for debt-laden company Jaiprakash Associates. And this is, remember, through insolvency and bankruptcy case in which a bid process was done, which has been challenged by Vedanta. In fact, the court declined to halt the implementation of the plan, but did urge the challenger Vedanta to really go to NCLAT, and has also said that NCLAT should give priority to this particular plea by Vedanta. So that's an important development. And when we talk about corporates, well, sources confirm that Nykaa is set to buy Deepika Padukone's skincare label, which is 82 Degree East. Now remember that Deepika Padukone is Nykaa's global brand ambassador herself, and now is in advanced talks to sell her loss-making brand. In fact, for Nykaa, it's in line with the consolidation phase to really acquire more brands under its umbrella and also enhance its bouquet of products. Now, as a trend in this particular space, large companies have been buying emerging brands in direct-to-consumer segment. But Deepika Padukone, brand ambassador for Nykaa, entering into a deal to sell her label as well. With that, it's a wrap on this edition of Profit 360, but do stay tuned to NDTV Profit for all the news and updates. Thank you so much for tuning in.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
Hello and welcome to KYC. I am Sharath Dubey and you are watching NDTV Profit. Let's start the show. I'll give you some hints about this very interesting company which I have got. And also the first one hint is it's a pet waste recycling company. You heard it right. It's a new industry. Let's get in more details about it. The second hint I would like to give you is a big government boost and was announced, and that's why there has been a good rally in the stock. Highest ever volumes were seen recently in this, and you will be surprised the stock is up more than 62% from January 2026 lows. Very interesting company, but I would like you to understand what the company is all about, and the company's name is Ganesha Ecosphere. But apart from this, let's also talk about what are the key important developments coming in for the company and why are we calling this company. Is company mein khas kya hai? That's the main question. It's a small cap company, but I'll get you more details about it. The new government mandate on recycled PET, will it accelerate the adoption? And if that happens, will it benefit this company? Of course, this is one of the larger players in India in this segment. Of course, the market share and the key triggers for growth, what are those, especially on the capacity expansion, is something which I would be watching out for, especially the Odisha plant. Of course, the impact of elevated crude prices on the raw material and sourcing, is it impacting the company or the spreads which are increasing actually benefiting the company? We'll be having a watch on that. The expansion and growth plans, especially on the Odisha plant, that is what the street wants to know. By when will it be completed and how much incremental benefit will be coming to the numbers? Capex plans going ahead and the capacity utilization. How much are the current capacity utilization standing for the company? These are the important questions we'll be asking for Ganesha Ecosphere. And overall, the margins growth outlook will be also important because the margins have been under a pressure, and let's see if that has bottomed out or not. And the big question is on the ROCE improvement, because the company is focusing on high margin value added products. And to give us more perspective, Yash Sharma would be there. He's the director at Ganesha Eco Pet. Now, this is the 100% subsidiary of Ganesha Ecosphere, and a lot of action is happening in this subsidiary. So that's why we have taken this subsidiary's spokesperson to give us entire perspective. So Yash should be there with us, joining us later on. But company करती क्या है? कानपुर की company है ये, Ganesha Ecosphere. Interesting name, very modern, to be honest. The company is, especially, but look at the foundations. It happened in 1987, so it's not very old also.
the thought process. It was there from 1987 onwards, so very nascent industry still now, I would say. Recycles over 16 to 18% of India's PET bottle waste. That's so much important. Ganesha Ecosphere is 100% subsidiary of Ganesha Ecosphere, where we'll be discussing about the company and also the legacy businesses as well. The new business, Ganesha EcoPet, is your PET for packaging mandate related. So this is what the overall view is for this arm. The manufacturing units are there in 3 places: Kanpur, Rudrapur and Bilaspur. So it is separated properly, at least for the sourcing on this space as well. Apart from this, let's look at the cumulative capacity, and that's strong, 1,18,800 tons per annum, likely to go up on the next 2 years. We'll have our eyes on that. But आगे क्या करते हैं? Customers, Coca-Cola, PepsiCo, HUL, Bisleri, Asian Paints, anything which is bottled, which gets crumbled, gets processed, then it comes under various fibers and yarns. This is how simplifying this entire story of Ganesha Ecosphere is. These are the key customers you should be watching out for. And going ahead, what has actually been there? This product is used where? It's used in manufacturing of textile related products and fillings. This can be your everyday wear, this can be technical textiles, and Q3 numbers were but very disappointing. The standalone business was offset by the down growth in the arms operations as well. Some kind of issues were there in the capacity utilization, especially on the Warangal plant. Group's filament yarn recently qualified with a leading global textile brand, and this augurs well. More and more global textile players come with them. This augurs well for the company. So it's a mixed kind of a views coming in the Q3 numbers. Capital utilization of Warangal business, that's where it declined to 50%. Of course, impacting the sales also, and the margins, single digit margins the. Will it change? That's the big question. Sales number also was impacted. So Q3 was not that great. But of course, we'll check the history also of the company, how things are planned out. And the most important thing and the trigger of the stock is the extended producer responsibility. Look at the recycling targets which has come in. These are the 4 segments: plastics, packaging, multi-layer and compostable. Look at the overall headroom which is there going ahead, and this is the FY29 use target coming in. This is for, of course, the reusable components. If you could just show the other key targets also, this also includes the reusable target of 25% for rigid plastics. So जितना ये target बढ़ेगा, जितने segment की मैंने बात की, उतना company को फायदा होगा. This is how simplify you can do that. But is the company in a sweet spot? Yes, it is. First mover advantage in PET recycling, that's what is there. Secondly, the regulations are turning favorable for Ganesha Ecosphere. So this is very much important, benefits a lot from it. Also, the third important reason is a significant volume-based buying was there last week. And you could say this was almost the record level of momentum happening. It has a better integration and expansion plans compared with the peers who are there. Largely, they are in the unorganized space, but nevertheless, important. Valuations remain comforting. इसका भाव 2000 के ऊपर था. Of course, अब जो है 1000 के पास आ गया भाव. So still valuations are comforting. So this is why Ganesha Ecosphere is in a comfortable spot, and maybe from current levels also there might be alpha. But to give it more perspective, we'll have our 8 rating parameters in KYC, जहाँ पे हम आपको बताएंगे आपके income statement, balance sheet, cash flow, how do they work, return ratios, is it good, bad, or will it improve, and also shareholding pattern, how things have changed over the last 3 to 4 years, street cred, how much money has been made, and of course, congratulations to folks who have recently invested in the stock, good up move coming in. Valuations will compare the company with itself. We just want to give an apple to apple conversation and the outlook, especially on the industry tailwinds and what company is doing. So all of these 8 rating parameters will judge Ganesha Ecosphere. The first one is income statement. Let's look at that, and the numbers are pretty decent. FY23 से 25 के 3-year CAGRs देखेंगे तो largely we see 13% revenue growth coming in, but वही EBITDA and PAT has been decent, but there's a little bit of disappointment. Where is the disappointment? That's in the third quarter. That's why we saw a big sell-off happening post the numbers. YOY basis, the revenue, EBITDA, everyone tanking, and the biggest concern for me and for a lot of investors was a single-digit margin, 8.64. And if you just highlight the margin trend also, we'll see that's where the disappointment comes in. हर बार 10 से लेके 15% का एक margin band है, but now that has gone down to 8.6%. Of course, sequentially, there was a little bit of uptick, but has the margins bottomed out? That's the big question we'll be asking. And by when can we get the double-digit margins? That is where the street is concerned about the stock. But net to balance things out, it's a neutral rating when it comes to the income statement. Let's talk about the balance sheet, how important this is. Yes, the borrowings have gone up. Company is going for an expansion. We can understand about that. But net, the debt equity ratio for this company or in the industry is still stable. Cash bank balance is also healthy at 122 odd crore rupees. So net, we could say that the balance sheet is having a neutral rating as of now. So we spoke about income statement, we spoke about balance sheet, but cash flow is very much important as well. There is a little bit of lumpiness involved in this business as well. But net, the cash flow from operations and the PAT has been done well. The conversion is decent. And if you look at the net cash flows coming in, remember investing and financing activities is also very much important. So there will be lumpiness if you study a cash flow for a company like this or even an industry like this. But this time it's doing well as of now for the FY25 data. But let's keep it neutral when it comes to the cash flow segment. Now let's move on to the return ratios, and of course the ROC numbers I have taken. Largely in this kind of a business, the legacy business is there, so आपको ज़्यादा ROC मिलेगा नहीं, 10 से 12% का ROC मिलेगा. But as and when we see things moving to the value-added segment, that is where the ROC starts changing. Currently, they are 40% value added, they are aiming 65%. Then we can expect a 14 to 15% ROC business. So right now it is decent. Little bit of recovery has come in FY25, but really will it be a 15% ROE business? Only time will tell. So right now, it's a neutral rating. Let's talk about shareholding, how much things have moved around, and largely from March 24 onwards, promoters have taken stake, and that's what we have seen, that up move also coming in after that, especially in the mid of January. That is where the stock started going up. Of course, there is a relation with crude also. We'll try to understand spreads mein kya fayda hota hai, but FIs they have sold, but promoters have taken, and the DIs have been pretty much stable. But recently, last week, there's a massive volumes coming in, and guess what? There is some institutional buying coming in, and on that basis, I would like to give a strong thumbs up to shareholding. So interesting names which we have talked about. And let's talk about the street cred, how things have moved. And of course, congratulations to the folks who have entered the stock in the last 2 months. You have made a lot of money. And of course, see from the January, almost you could say February 26 or January lows, it's up 62%. So congratulations on that. But over the last 1 year itself, despite this up move, the stock is still down 26%. 2,000 rupees share price is something which we had seen earlier, but then there was a big sell-off happening. And the last 5 years, if we talk about it, that is also, stock has given a decent return. It's almost up 90% even after the correction as well. So it's pretty much important to track. And street cred, I would like to give this a neutral rating as well. So street cred is done. Let's talk about valuations. And in our valuations, I've taken the 12-month trailing P ratio. So there was the euphoria regarding this recycling theme 2-3 years ago, and the 5-year peak, look at that, 135 times. But after that, normalization happened of the industry. There's of course a lot of dynamics at play for a company like this, and there is a gestation period as well. And the 5-year average was 49 times. And even after the up move which has come in the stock is still trading at 27 times. It's a 12 months trailing P ratio. That means valuations are now also pretty much there for a re-rating, and they look attractive. So net, when it comes to the valuations, I'll be giving this a strong thumbs up as well. Let's talk about the outlook. Outlook is very much important. This is one of the reasons why I've got this company in KYC, so that you understand where the future is lying. The government's new PET mandate to accelerate its adoption, that is where the trigger has happened. And a lot of other factors are coming in. The second one I'd like to point out, the key outlook, is the increasing PET granules capacities, which the company has already announced in its exchange filings. When does this happen? When is the completion of it? That is what we'll be looking out for. The third important thing in the outlook to look at is the target revenue contribution of the value-added products to 65%. Currently, it's around 40%. And if that happens, your margins and the ROEs both improve going ahead. Apart from that, the capitalization on the regulations, and one of the few companies to have a large B2B unit. They have backward integration also. So the moment this industry goes up, the benefits and the higher market share gains is something which Ganesha Ecosphere will have. And that is something which I will also be focusing on, but it takes time. There is a gestation period to it. Nothing happens so fast in this industry. And that's what we have seen. So we see a strong thumbs up coming up for the outlook. But let's revise the KYC ratings. What numbers we have given? Kya ye company pass hua hai ki nahi? That's the big question to be asked. Of course, the numbers we see were pretty decent. Income statement, balance sheet, cash flow, return ratios. It looks very stable, but nothing out of the park. Neutral rating. Let's see what else is there here where can get some value out of our analysis. This also includes the shareholding. That is where the volumes are picking up, promoters are buying stake in the company, valuations are very much sustainable right now at these current levels, and there might be a re-rating. And the outlook, that is where the alpha is there, especially where the government mandate has started coming in, and after the stock being beaten down, there is a good up move coming in, especially technically, and that is why we have given this company a final rating of 5.5 out of 8. It's largely it's neutral to positive, but it's a very developing story, and we will be judging this company every 6 months to understand what happens and to put everything in perspective. But joining us to give us more flavor of the entire company is Yash Sharma. He's the director at Ganesha Ecopet. I'd like to welcome Yash. Good afternoon, Yash. Always a pleasure to have you. The most important thing why I'm very much interested in Ganesha Ecosphere is the government's central mandate which has come in, where the increase is there of the key products. Just explain us the government's mandate and how much beneficial it is for Ganesha Ecosphere.
Hi, thanks. Good morning, everyone. Thanks for having me here. And yes, definitely after the government's new mandate that has come into picture, actually the mandate was in place last year itself to have minimum 30% recycled content in all rigid packaging applications. But there was a lot of confusion. A draft came out in the middle of the year in June, after which the usage of recycled plastic by a lot of converters and brand owners was delayed or stopped. There was a lot of confusion around the mandates of what's the new mandate's going to be. So finally now on 31st of March, the government of India has released a new mandate where it has stated that for 2026 to 2027, 40% recycled PET, recycled plastic has to be used in category 1 applications. And along with that, the last year's requirement of 30% has also been carried forward and is to be covered in the next 3 years by doing minimum 1/3 of every year. So which will be basically going to create an environment for a very high volume demand for the recycled plastics. And it will also obviously help us, Ganesha Ecosphere being the largest in this space currently in India and the biggest organized player in this space. We are already working with so many brands, so we definitely stand to benefit massively from this new mandates.
And Yash, just to get in a little bit of numbers, what kind of incremental benefits we can expect for Ganesha Ecospet and the volume growth outlook? Does this change now, because there was a pressure in your numbers which we have seen in Q3 also, but I don't want to talk about Q3 because it's the past. I'm talking about the future. What is the incremental benefits, and if you can quantify or give me a range, your volume growth outlook or something addition coming in your top line?
Surely. So we have a current capacity of about 42,000 metric tons, which is already fully operational and live. Now, last year, what happened is that more or less from April to December, we have been able to operate that capacity on around 50 to 55 to 60% utilizations on and off throughout the year. That was because there was so much confusion and the demand offtake for the recyclate was not very clear. So this capacity utilization, which was at about 50 to 55% for the good part of the last year, will now be operating at north of around 90% levels because of the good, strong demand that is now there in the market. Also, what we're benefiting right now is, since the virgin plastic prices, because of this Iran war, the plastic prices of virgin has increased by about 30 to 60% based on plastic to plastic. In case of PET, there's an increase of about 45%. But in case of our recycled plastic, which is recycled PET, the price increase was around between 10 to 15% range. So it has also benefited us economically and has led to a big demand, creation in the last 1 to 2 months. We think that going forward with the mandate in place, we will be able to operate our existing 42,000 tons capacity at very, very optimum levels of 90% approximately.
Right.
And the new...
Yeah. Right,
Your-
Yash. Just a query on that. Right now, you're having a 90% capacity utilization coming in. Everybody is wanting to know about the Odisha plant. What are the date lines? What are the capacity addition which will be coming in? Because there was an overhang in the stock because we needed extra capacities to come in, and it takes time in your industry to make things happen. It's not something like happens in 2-3 months. It takes 12 to 18 months, 20 months. There are some delays which we understand. I've tracked the company for the last 2-3 years. But now, what are the key timelines? Everybody is wanting to know that.
So what we had done is we had changed our strategy because of the last year's muted demand. We changed our strategy and we have now divided the capacity expansion into brownfield and greenfield. So we have already have upcoming about 45,000 metric ton capacity expansion in brownfield expansion at our Warangal unit itself. And the Odisha plant, though it was delayed last year because of the muted demand, we will now be growing forward to take the right decision of how we want to go forward with it. Obviously, now with the mandate in place and the clarity in place from the brand owner side, we'll be going forward. And, in the next 2 years, we see that we'll be able to do more greenfield expansions.
Right, and just could you give us some numbers to it? What can that be with Odisha, especially the completion? You said next 2 years. So by when it can get operational?
By FY 27-28, we think it will be operational, the new greenfield capacities.
Right. So it's another 2 to 3 year odd story coming in for Ganesha Ecosphere. But Yash, I just want to understand with the raw material pricing, you spoke about the recycled plastic has not gone up as such. But for you, your sourcing costs are also a bit can get higher, right? Because there's a lot of derivatives that play from crude. How much of that will impact on your margins, especially in Q1 or Q4?
So definitely the raw material cost for us also has gone up by 10 to 15%. But then what we do is we have a understanding with our customers in terms of having a pricing formula which takes care of the increase in the raw material prices. So, it's obviously during volatile times, it's very difficult to manage, expectations on all the sides. But once things are stable, I think we'll be able to achieve our healthy margins because we have a very close relationship with our customers to be able to, adjust the raw material, price fluctuations in the final granule prices.
Right. Of course, the granule price is something which we spoke about. But Yash, just try to understand the margin outlook. This Q3 numbers was below the 10% mark. Your company has double-digit margin history all throughout, and now the dip is coming in. And there was a slight bottoming out if you compare Q2 and Q3. But yes, is it now that we are back to the double-digit margins in fourth quarter, or would you like to wait it out, say, from the second quarter of FY27?
Yeah, so I think that we should be able to see incremental improvements in the margin profiles going forward with the new demand. Q4 also, I think we should be able to be slightly do better than Q3. Hopefully, it's still under preparation as we speak. But I think we should be. I mean, the volume profile and the offtake was definitely on the positive side. Going forward, also, we think that we should be able to reach our optimum, standard margin levels we're targeting earlier.
And I would think that's fairly a substantial buffer to hold. This is not an involuntary outcome, as many in the opposition, in the political domain, I mean, many in the opposition would wrongly believe or would want to say that in such a word, but it is a wrong belief. It's not an involuntary outcome. It is the product of deliberate, sustained, and sometimes politically difficult choices made over the years of fiscal management. It was made possible because of the agile policies, stable leadership of this government, with a singular focus on ensuring India achieves Godspeed progress. For a rapidly progressing economy like ours, sound fiscal management is a policy imperative. And in this front, we have undergone a massive structural transformation of public finance over the past decade. Under Honorable Prime Minister Modi, we have credibly changed the course of the fiscal policy from consumption-led deficits, which was marked during the era before 2014, to productive investment-led consolidation. It's a distinct change in the character of how public finance is managed. I have come to appreciate one thing, a particular dimension of public finance that receives insufficient attention in both academic world and in policy debates. Not merely on what to spend or how much to spend, but when to spend. The timing of public expenditure is itself a macroeconomic instrument, temporal efficiency, if you may want to call it. We have strongly pushed just-in-time releases for our budgetary allocations. We have leveraged the public finance management, financial management system, the PFMS, in its fullest potential. Through the PFMS, the SNA Sparsh model for release of funds under centrally sponsored schemes was brought in. It marked a transition from a credit push, that is a priori release of funds to various implementing agency, to a debit pull based fund transfer system in which a debit to the central pool is triggered only when the implementing agency issues a payment instruction on the system. It doesn't start before. By design, therefore, SNA Sparsh can pull funds in real time to the end beneficiary's account, saving resources for the Treasury. Similarly, the Treasury Single Nodal account facilitates just-in-time release of funds to autonomous bodies. This eliminates funds remaining unutilized for a long time. It has resulted in substantial interest costs for the center. India is also sharing these digital public goods and public financial management, the PFMS tools, with countries across Africa, Latin America, and Asia through MOUs, pilot implementations, technical missions, and capacity building programs. Just to give you an idea of what I'm saying in terms of numbers. In the year 24-25, mother sanctions, as they would call, which will be for umbrella sanction under which you may have several programs. Mother sanctions was 24,369 crore.
I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
To understand the Tamil Nadu twist, join me in the midst of people, language and politics. Vanakkam Tamil Nadu, here we come.
When others are warming up, I'm raring to go. The stories that matter, the stories that shape your life.
Hello and welcome to watching Prime 5 with me, Raisha Sehgal. What's happening?
The show that sets the prime time agenda.
We'll be deep diving into this topic to tell you what's at stake.
Join me, Raisha Sehgal, on Prime 5 only on NDTV 24/7.
Will the rising sun win with a hand in hand? Will the two leaves and lotus bloom? Who will whistle to success in Tamil Nadu? To understand the Tamil Nadu twist, join me in the midst of politics and people.
Hi, we're talking about Your Money Matters on NDTV Profit, and my name is Alex Matthew. Is this the right moment to go out and buy a house? The question I'm asking is that, and that's because the scenario that we're currently in is highly uncertain. We don't know the outcome of the geopolitical crisis that's currently underway in West Asia, and we don't know what's going to happen, therefore, to crude oil prices, to markets, and to everything else. So, is it a good idea to buy a house in 2026, or should you hold your horses and maybe push that decision down the line? Are you losing anything by doing that? I'm joined today by Harsh Kumar, who's managing partner at Zvest Financial Services. Harsh, thanks so much for taking the time. Let me first ask you about this, right? If suppose you, assume that I'm coming to you for advice, Harsh, and I'm saying that this is a house that I need to buy for my own purposes. I don't intend to use this as an investment. What are the first few questions that you would ask me?
So Alex, you started the introduction by saying that, there is a crisis situation and